All right, Matt Miller, Sonali Bassett, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, simulcasting on television. That's a special edition of broadcast Bloomberg Markets. So how about that? We're also doing the YouTube thing, so you can head over to youtube.com and search Bloomberg Podcast, and that's where you'll find us here. Looking at the markets, we kind of turned a little bit mixed here. We got the S&P up 7, and the Dow up 125 points, but Nasdaq's off about 13 points. So a little bit of mixed trading volume is light today, as you would expect. A 10-year Treasury kind of steady, 4.52%. WTI crude oil steady as well, $71.50 a barrel. Bitcoin moving higher, up 3.6%, Matt. We're up at 95,200. And remember, we were just at 107,000 just a couple of weeks ago. I don't know what that was all. Maybe kind of the Trump trade a little bit at that time. So we'll keep an eye on that, though.
We'll keep an eye on that, and it's interesting. I just looked real quick into the Mag 7 price return just for today, and you're seeing that barely breaking into the red as well. Actually, red right now, barely breaking into the green, fluctuating. So some of that risk appetite is still off the table. You see it in Bitcoin, you see it in the Nasdaq, and you see it in the Mag 7.
Yep, absolutely. We'll keep an eye on. There's a ticker for that, the Mag 7.
There is?
On the Bloomberg terminal.
DM7P index.
See?
That is what I look at it as, the Bloomberg Magnificent 7 price return index. You're seeing 5 of the stocks higher on the day, but 2 are lower, and that is NVIDIA down by 0.9%, and Apple down another 0.2%, but Tesla still in the green, 0.2%.
There is a Mag 7 ETF as well.
Yeah,
I always forget the ticker.
And I think there's a leverage one, too, like 2x or 3x. I mean,
good.
I know. So you want...
Why not?
You want risk, take more risk.
Load it up.
Load it up. All right, let's talk a little luxury right here. And one of the best voices we have is right here in-house at Bloomberg Intelligence. Deborah Aitken joined us. She's a luxury analyst for Bloomberg Intelligence. She's based in London. Deb, thanks so much for joining us here. We were just looking at Rich Go, and some of the really wealthy people on the planet happen to be some French folks who own some of these luxury brands. It's been a tough year for those stocks. Just step back, and what happened to luxury in 2024? What was the narrative?
I think if we step back to the beginning of the year, January, February, we had some of those, the biggest company CEOs focusing on a normalized year of growth. Now that followed 3 real years of recovery, 21, 22, and 23. So normalized growth was set, we thought, at around 4 to 6%. It started out okay in the first half, and we were looking for the second half to pick up somewhat on the back of that, and that's where the disappointment has been. So second half 2024, a real disappointment because of so much going on economically, politically, but with a big drag in China and travel retail not yet recovering. And also just the fact that we kind of got to peak price, 25% price increases over a 3-year period on average across the sector to pass on some of those inflationary costs. It all just became too much, especially at entry level.
So what's been the problem? Is it just the Chinese economy and the Chinese consumer is so important to this segment? Because as we look at, rich people, Deb, at least the top 500 in the world continue to get richer and richer and richer. So I can't imagine there's any kind of upper limit on Birkin bags.
Yeah. If we look at the companies that have outperformed Hermes and the types of product that they offer to the market, the waiting list there is still in place. Other high-end names like Brunello Cucinelli, these companies are focused 8 to 10% growth year in, year out, and they're achieving that. But really, it's been twofold. If we think about the China market, just to put it back into context, Chinese consumers, when they traveled 2019, as well as spent at home on the mainland, Macau, Hong Kong, and others, were around a third of the luxury market. And we think they're nearer 23% or so at the moment. So we've basically lost 10% of the market from there. What has happened, though, is that the US has been particularly robust and has picked up some of that. Europe has picked up a little bit, and also rest of the world and other parts of Asia. So when we look at an LVMH's absolute revenue, 2019 versus 2024, even taking out the Tiffany acquisition in 21, its sales are still over 50% higher than they were 2019 in absolute euro terms. But there's been a big shift, and we think that will continue 2025.
You know, another question I have is how much of this is the macro? Of course, China is a massive story. Perhaps we'll talk about it a little more as well. But another thing I'm fascinated by is the rebranding of some of these large luxury items and brands. Jaguar is one Matt and I had covered a little earlier this year. That's a pretty extreme example, but there are others as well. How much of this is just customer taste changing and the companies needing to react to those changing preferences?
There are more and more reports coming out because we also need to think about the recycle industry too. If we step back into the China situation, one of the big categories would be watches, and watches are higher indexed in China. So that's been a drag for many companies because most of them will have watches, even though jewelry has really stood up well. So that's one side of the equation. If we think about other sides, though, there have been, particularly at the low end with the aspirational side, failures and different creative directors moving around. So there's been some question on where the identity of some of these brands are, but it therefore tends to be the heritage brands, which don't necessarily depend on a single creative director and more really focus on a team and a real high level of workmanship, that continue to do better. And I think we'll see more of that play out also in 2025, if that kind of answers your question there.
Hey, Deb, of all the luxury companies that you cover from a research perspective for Bloomberg Intelligence, what are the ones that seem well positioned to you these days as we go into 2025?
And if we're looking across MODL, it's moved around a lot in the last 18 months, but and generally a little bit of a delay. But companies are being really more forthright in explaining what is happening, where their investment is to back that future growth. So you have the likes of, at the top end, which we've mentioned, Hermes, Brunello Cucinelli. If you look at the numbers out there for top-line growth and earning growth 2025 must fully repair and come in ahead of sales. So you're looking at double-digit sales there. We have a range 9 to 12% across Hermes leading, Brunello Cucinelli in the lead. Prada, though, doing very, very well, but a lot on the Miu Miu brand. Richemont doing very well on Cartier, Van Cleef and Arpels. So it's that high fine jewelry and that high net worth individual continuing to buy. And they are some of the names out there, as well as LVMH should further repair. Because we think that they will do better in the second half of the year. They do have big exposure with DFS into travel retail. And also a lot of these companies, so mid-single digit growth for for LVMH, for Richemont, high single to double digit growth for some of those more niche individual brands with waiting, with big lists, waiting lists out there still for some of the much higher end product.
Deb, I just wonder about, from the consumer side, not from the investor side, if you're looking to get a Rolex or a Patek Philippe, have prices come down this year? And is there a luxury watch price index that we can look at?
So there is. So the news site work with Subdial, and they have their own index. We look at the Swiss watch industry data, where we can pull on a monthly basis average price and look at the type of product that's coming out there. And we were looking towards the end of the year at absolute numbers being down in value terms across the industry for Swiss watches at around 3 to 4%. But behind that, when you look at the watches above 3,000 and with an average price of 10,000 Swiss francs and above, and that would be at manufacturer price, so you could add a lot more onto that for the retail value, then they were still very much passing on about 6 to 7% pricing. To answer your question, and that's what we saw on average across the industry for 2024,
Deborah,
6 to 7% price at the high end.
We're going to have to leave it there. We're running out of time. That is Deborah Aitken, of course, of Bloomberg Intelligence, talking about a very complicated luxury market. Up next, we're going to talk about non-alcoholic spirits. Some of us want to keep it clean this New Year's. This is Bloomberg.
I think most investors are intoxicated by the opportunity in artificial intelligence. $160 billion being spent this year. That's just one data point. Another data point is a $3 trillion market cap for NVIDIA against $80 billion of sales on a trailing 12-month basis. Obviously, a lot of growth is expected for NVIDIA and for other businesses in the space, but that is yet to materialize, and it's impossible to know what the scale will be of an NVIDIA or other players in the artificial intelligence ecosystem. I think investors are just so focused on the opportunity set, on what it can be, and it's a self-fulfilling prophecy. If you bought NVIDIA a year ago or 2 years ago, you're pretty excited about where it is today, and you think that it could go to the moon. As a result, you don't really focus on the risks. You're sort of just too excited about the opportunity.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
If you look at Reels, Instagram and Facebook Reels, both immensely popular, both growing a lot, those are really working not because the short form video format is special and new. It's actually been around for a long time. You remember Vine and the early days of short form video. It's because of GPUs, it's because of large models, it's because of advancements in recommendation systems. ByteDance is one of the really great companies at this. We also have made an immense investment in harnessing the power of modern models, large data sets, and modern hardware, NVIDIA's hardware and our own hardware, to build recommendations that make the products better and more engaging. Our advertising system is built on modern AI recommendation technology. So I always think it's interesting when people remark that like AI just arrived. It's actually powering already today a huge amount of the engagement and quality of our products.
Morning from our world headquarters in New York, I'm Manus Credit.
And I'm Danny Berger. What's at your agenda?
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday, only on Bloomberg. Context changes everything.
In case you missed it, on Bloomberg Open Interest.
11 years ago, I bought a Bitcoin on this set.
It was $800.
Yeah, $800, but I spent the Bitcoin on beer and groceries and gas and video games.
And
I wish I had kept it. I wish I would buy a Harley today if I had.
Yeah, but you probably wouldn't be a TV anchor, and you probably wouldn't still be on this
True.
set. And what a joy that is.
I'd be my feet in the sand and the beer in my hand.
Don't miss the next Open Interest.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
All right, it is New Year's Eve, and that means a lot of people are going to get hammered tonight. But many will not, because drinking alcohol has become less popular, slowing demand and the prospect of tariffs as well under President Trump when he comes into office January 20th, spooking exporters of booze around the world. But the story that caught our eye is centered on Mexico, because apparently there is more than 500 million liters of tequila sitting in Mexico. Price cuts not helping those shipments move faster to the U.S. ahead of the Trump administration. Of course, they want to get them in here
before the tariff.
Exactly.
So they're going to put a tariff on tequila? That's brutal.
I mean, who knows, right? We're purely speculating on what tariffs will come into play. But he can if he wants, and he has talked about, 25% tariffs on Mexico.
What's crazy about this, too, is even in addition to that, there are already price pressures because of the point you're making it. People are drinking alcohol less, and they're drinking tequila less as well. And it's interesting, according to the Financial Times and data provider IWSR, the amount of spirits sold in the United States for the first 7 months of the year shrank 3% compared to last year.
What are the kids doing?
not drinking. They're doing.
I mean,
perhaps
tequila's
other
for
things.
boomers, right?
Yeah, I guess.
Tequila
But it seemed
doesn't
like
get old, really.
But it seemed like every celebrity had their tequila and
Yeah.
took off. And
Well, Clooney kicked it off
Yep.
with Cindy Crawford's husband. Those two made Casamigos
Matthew
together.
McConaughey is taking it home.
Right, Matthew
okay.
McConaughey will sell you anything he can. But I think a lot of people are headed more towards Snoop Dogg, right? There's ever since weed became legal in so many states, and I've lost count at 26, I think. People are opting in some cases to, take an edible rather than drink Jack Daniels or whatever.
Okay,
So,
all right. So a substitution effect, like we learned in economics
I
class.
think that's the case. I think a lot of people also are concerned about health, want to lose weight. The GLP-1 drugs are making it a lot easier for those with
They say that reduces your appetite for alcohol.
cravings. Yeah.
Or you could just be like me. The pandemic made me never want to drink again.
Because you drank so much during lockdown.
I gave up drinking for almost 2 years after that, and now I can only make it through a glass of wine a couple times a week.
Really?
Yeah, and I liked,
I happen to know from firsthand experience that that's not the case with Shonali.
once in a while, I go a little heavier. But yeah,
She
maybe.
gets to the desk at 7 a.m. She's like, "Oh, Miller, you're taking the show today."
I admit that happened once
Yeah,
in a
when you
while.
got to rely upon Matt Miller to carry the show, you had a big night,
I
right?
haven't had a drink for 2.5 years.
No, I know.
From a business,
August 2022.
From a business perspective, it's interesting. Apparently, also Patron, owned by Bacardi, Casamigos, owned by Diageo, they've been cutting prices on tequila for years. So if
that
you're
right?
an
Okay.
upstart, I'm all about those craft brewers out there for beer and craft distillers, I guess, for other alcohol. It's going to get tougher out there to compete with tariffs, consumer taste, and the big guys.
I mean, that's a lot of tequila to have in inventory. It just feels like a half
You could
of
swim in
billion-
it. It's
they
like
swim-
multiple swimming pools.
Well, and they continue to distill more than they sell. So, I believe last year they still had a sixth of their tequila left after they sold, what they could.
Okay.
And that just continues to add to the stockpiles.
All right.
And we're going to switch gears. We're going to talk about non-alcoholic drinks because clearly that's where people are going. We have seen slower demand for tequila, as we've been talking about. We've seen a boom, on the other hand, in non-alcoholic spirits. Ready-to-drink cocktails, non-alcoholic spirits, they are the fastest growing segment in the beverage industry. Younger consumers, Gen Z, the kids these days, guys,
Okay.
they are
All
passing
right.
on
Good for them.
passing on the hard stuff. We're going to discuss it with Melanie Massara, and she's the founder of Gia, which makes non-alcoholic aperitifs, not hard alcohol, non-alcoholic aperitifs, and now is in select Whole Foods across the country. Melanie, I am a sucker for that aisle in Whole Foods. Totally a sucker. Love to try everything on it, but there are a lot of things on that shelf. So what has it given you to be able to be available in Whole Foods? How has it increased your business?
Well, we're very new to the shelves at Whole Foods, so we don't have a ton of data yet. But I think in general, when we survey our customers, like the one thing they want to see from us is being more available for beverages. It's such a repeat purchase that people want to be able to grab us very impulsively wherever they shop, and being able to be at Whole Foods. In January, February, we'll be in 300 Whole Foods across the country. That's very big for us because it is helping make this category a lot more ubiquitous.
So, Melanie, talk to us just about the non-alcoholic spirits market in general. How big is it? Is it growing? I mean, I try to stay as far away from that stuff as possible, but educate us here.
Well, I think in comparison to alcohol, it's still very small, but it is the fastest growing segment within the beverage category. We've seen people shift their habits in terms of, not drinking. There's 30 to 40% of the U.S. adult population that doesn't drink at all, but people are also moderating. And that's what we're really seeing with Gia. 90% of our customer identifies as someone who drinks alcohol, but is seeking moderation. It could be from Sunday to Thursday, or it could be, not after a certain hour, or being only able to do one glass of alcohol per evening, like you said. So we're seeing that the habits truly change, and I think we're trying to see this category crystallize in a way that feels like way beyond the trend. There's diversity of product within the category. There's a very, very, I would say, cross-generational consumer for the category, and we're starting to see retailers really embrace it. So making room for us on the shelves.
I moved back to New York in 2022, had a couple kids, wanted to lose some weight, and there were dispensaries on every block, so I figured I don't need to drink anymore, and I haven't had a drink since then, but what I do is I just crush like flavored seltzer waters all day long. Why would I want to add fake alcohol to that?
Well, so actually Ghia is not fake alcohol. We're really trying to create, a new flavor profile. We've won over 10 culinary awards since we launched 4 years ago. So really the idea is you may want something to prepare your palate for dinner, something that's very dry, something that makes you feel like you're having alcohol. Not the physical effects, although a lot of brands also really lean on that, but that, the placebo effect of having a very delicious drink that feels like a grown-up drink, that is very complex, that has a sophisticated taste profile, so that you don't feel infantilized by being served water or a very sugary mocktail at dinner. And so when you taste Ghia, it is very akin to an Italian Amaro, like a Campari or an Aperol Spritz. It's very celebratory, and so you have certain tasting notes that give you that feeling. You may want to have more.
I get it. I love Campari. I used to knock that stuff back. Delicious.
I do too. Well, to that end, also, bring us behind the recipe. How do you make Ghia?
Well, so we make Ghia in the U.S. We have ingredients coming from all over, depending on their source of origin. We have yuzu in our drink, so it's a kind of a sweet lemon. So it comes from Japan, and so it comes from there. And we have some rosemary extract that comes from the south of France. The recipe is very inspired by kind of Mediterranean aperitivos. I'm French and Italian. I grew up in France, and it was that Campari flavor profile that we were going after. The sort of traditional Amaros are made using the root of gentian, which is a plant that grows in the Alps, and it gives that bitter taste. So we have a little bit of gentian so that it's satisfyingly bitter, but not too much, and then quite complex. But it's made with only pure juices and extract, so it's all natural. And we always say we're trying to raise the bar. It's obviously a play on the word, but it's not just about the alcohol. It's not just about what's not in the drink. It's also just making better drinks. If you look at alcohol bottles today, they don't even have ingredient labels on them, and we allow that. It's the only thing you eat without kind of questioning what's inside. And so we wanted to kind of create a product that would be a lot more transparent, but also very delicious in its own way. It's a very new wave of beverages.
Who's a typical customer of non-alcoholic spirits? Is it age-driven? Is it gender-driven? Who's a typical partaker?
So, I think that within the non-alcoholic spirits space, there are some subcategories, and obviously beer really paves the way. It's the gateway into non-alcoholic for a lot of people. We're seeing that from a generation standpoint, it's really anchored with millennials, but then we actually have a lot of older customers as well.
You want to try it, Paul? Would you not try? I mean, I know you like you like a glass of Tito's on the rocks.
Yeah, and that's from Austin, Texas, so I think that's not going to be a problem with the tariffs.
But there must be a situation in which, say you went out tonight and you have to drive home.
Yeah, I'd try a mocktail.
Would you try a mocktail instead?
Are they cheaper than a cocktail?
I don't know. Melanie, are they cheaper? I mean, what's the price?
I was going to ask you
the rule of thumb.
Go ahead, please.
Yeah. Is that in restaurants you'll have a non-alcoholic version of a cocktail for about $2 less than the alcohol version. The ingredients are more expensive.
So what prices are you charging?
Well, our Spritz can is around $4.99. It will be $4.99 at Whole Foods, and that's like a serving of, a drink.
But the bottle is not cheap. That's what I was just looking at, actually. Yep. The prices on your website. It's almost $40 for the bottle of aperitif.
Yes.
What do you think this means? How steady is that price? Do you find that it's too expensive for some and it would need to come down, or that it's hitting kind of a more higher income, younger buyer? I mean, who exactly is this reaching?
Well, I think that it's a big hurdle for the categories. Craft spirits in general are more expensive because we just don't have the resources of the big guys. So it is a goal of ours to make this bottle more approachable. What we did is 2 years ago, we concentrated the bottle a lot more. It now has 17 servings inside a bottle to kind of be able to pass on some of that value to customers. And also, we recently launched a bottle that was $20. That's a sparkling bottle that you don't need to mix. That's a lot more approachable because we wanted it to be more in line with a bottle of wine. And that product's been doing extremely well over the holidays. It's called Le Fizz. So I think that the prices will come down. We're also hopefully going to see more acquisitions in the space. And once these brands, enter larger groups, they will have their prices go down as well.
What about events, Melanie? Can you go after events? I've noticed over the past few years, Liquid Death, which is essentially just water in a large can. It's like $15 if you go to like MSG, right? But I will, and other people will pay it because, like you say, you don't want to be looking, I guess, infantilized is the word you used, right? I want to feel like I'm a grown-up. I'm at a grown-up event, but I don't drink. So, are you tapping that market?
I mean, we're hoping to for sure. And I think venues are starting to finally make the move. It's also a place where you can charge whatever because there's no other option. You just have to go to the bar and pay whatever is available. So we started getting into some venues in Atlanta and some more independent venues. But the big ones like MSG usually come with a heftier price tag.
I'll smuggle some in there.
Well, I was going to say, I don't know that the sophisticated buyer drinking Gia is also drinking Liquid Death at a Fish concert at Madison Square Garden.
I'm sure they're after the same market. No, but at like the U.S. Open, right? When you go to
that's
a tennis
more
tournament.
like it.
Yeah.
Really quickly, we have less than a minute here left. Melanie, you mentioned consolidation. Are you looking for, one of the larger beverage giants to be backing or buying you?
I think it's a little bit early. We're still very small, but if we think about, our aspirations for Gia, we want it to be everywhere. We want it to be global. We want it to be, in every venue, on every retail shelf, and on every restaurant menu. And obviously, it would be very helpful to get the superpower of one of the giants to do that. But it's still just the beginning for us.
Everybody wants to follow the Clooney playbook, right?
Yeah.
You make it in your backyard, and then Diageo buys it for $1 billion. Melanie, thanks so much for joining us. Fascinating story. I will definitely check out the beverages at Whole Foods, and maybe I'll bring some with me when I go to
Brooklyn tonight.
To the U.S. Open next year, or some event like that. It makes sense to me. Melanie Massarin there, the founder of Gia, talking about, I guess, adult non-alcoholic spirits that can be used in aperitif, or just keep them around the house. We're going to talk when we come back about markets, specifically Bitcoin's post-election rally, losing a little bit of steam here to close out what has been a banner year for the cryptocurrency. Sonali, by the way, anchors a crypto show on Tuesdays. Not
Tell
today.
us who you want on it.
Not today,
but back next week.
Usually on Tuesdays. We're going to come back and tell you about the OG crypto. This is Bloomberg.
You can have a baby anywhere you want. It's the environment and that care. That is what matters most.
Our investigation found some of the worst cases of harm were surfacing.
मुझे क्या पता कि भला के चक्कर में मेरा ही बुरा हो जाएगा.
I never thought I would be vulnerable to a scam. This ruined me, and I didn't have any real good explanation for it.
Wildlife trafficking is almost always driven by greed.
Once you start focusing on money, you lose sight of what is best. That's where things go wrong.
Top names in business are on Bloomberg.
The question is, if you lower taxes and use it to reduce the debt, the question is how stimulative those activities are, and that's where the Treasury Secretary appointee has got to figure it all out, because he's got to call the balls and strikes about how it all fits together. We got to realize that the impact we have if we don't get this debt back in line.
Nobody covers business like Bloomberg. Context changes everything.
Middle East and Africa
Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
We're scaling up at incredible pace.
This region is growing so rapidly.
The opportunity is really huge.
Only on Bloomberg. Context changes everything.
Alrighty, I thought you were going to bring us in.
Oh, I thought it said Matt Market Check. Sorry, Will, come on now. That's our producer. Anyways,
I can do it.
Paul, why don't you bring us in?
At one time.
All right, looking at this market here, it's kind of mixed out there, kids, as you would expect. Light volume here. S&P is up about 5 points. The Dow's up 86 points. And the NASDAQ is absolutely unched on the day. I'm going to use that term because I know Lisa Abramowitz hates it. 10-year Treasury yields 4.53%. Really no change there. WTI crude oil. I always quote WTI crude oil because I'm watching Landman, so I'm all in on oil and gas.
A NYMEX dude.
Yes, all in on
the
West
global
Texas.
benchmark, Brent crude.
I like the West Texas, Midland.
So
Texas.
CL1 commodity.
Boom. And that's how you go. $71 a barrel. And Bitcoin, let's not forget, up 3.8%, 95,500 for the crypto currency. So there you go.
You know what's interesting to me also, fun little fact as we head into next year, you're looking also at the 210 curve while we're talking about treasuries. Yes, the 10-year yield has been down, but also now the 210 curve is at its steepest levels since May of 2022.
That's a good, I like that one because it's been inverted for a while.
Totally. And now you're watching the 30 basis point differential between the 10-year and the 2-year. That steepener has been something investors have been betting on all year long. Painful trade throughout the year, but if you stuck with it, you're richer for it.
By the way, the WB function on the Bloomberg at first seems, pretty pedestrian, but when you start to type into it, you click into the United States, then you can see the curves, you can click into the 2s, 10s, you can graph that. I think it's a really good function and much more useful than it first initially appears,
So how many years have you been in Bloomberg?
Actually, next week will be my 25th anniversary.
Really?
Yeah. So I'm going to get my 25-year pylon.
Yep.
Hopefully, Mike over here on the 5th floor can sign it for me.
Okay. Sure.
And I'm excited about that.
Very good. Awesome.
All right, let's talk about. By the way,
but let's just
you mentioned we can say unch because Lisa Abramowitz isn't here.
Right.
I've been quoting the Dow Jones Industrial Average because Katie Greifeld isn't here.
Okay.
And because Tom's not here, we can focus in on Bitcoin.
Yes, we can.
Right.
Very good.
Right. While all the parents are gone, all the kids are out to play, checking in on Bitcoin since the election. Remember, it has dropped below that $100,000 level. It's been in the mid 90,000s. It had topped 106,000 just a little earlier this month. Some of the more bullish calls for Bitcoin into next year are in the $200,000 range, and that is due to Trump's embrace of the industry. We're going to discuss it now with Bloomberg Crypto and Digital Payments Editor Michael Regan. Let's go back to something you and I have been talking about a lot, Matt has been thinking about a lot. If a MicroStrategy is kind of the biggest corporate buyer of Bitcoin, and you have at least yearnings from some corners of the U.S. government talking about this idea of a strategic Bitcoin reserve, how much real appetite is there to do something like that, and how much does it actually matter to the Bitcoin market?
Shali, I think it matters a lot. The execution and what it exactly turns into, I think, is the big question. If you go back to Trump's speech to the Bitcoin conference in July, he basically said his plan is to create a Bitcoin reserve, similar to call it the Strategic Petroleum Reserve. And the way he wanted to do that was to keep hold of the Bitcoin that the government already owns. It owns a surprising amount of Bitcoin through seizures in the Silk Road case and other criminal cases. I think it's roughly about 200,000 Bitcoin. So that would obviously prevent, new supply coming into the market from the government. The question is whether or not...
I thought the Silk Road stash was bought by Tim Draper at auction.
Some of it was. There's still some of that, and various other seizures. You know, it all adds up to about 200,000 Bitcoin.
Wow.
So, you know, that's the basis of what Trump wants as the reserve. Now, obviously, his ally in the Senate, Cynthia Lummis of Wyoming, wants to actually buy 1 million Bitcoin to add to that, to sell some of the gold certificates held by the Fed and use the proceeds from that to buy Bitcoin. Now, there doesn't necessarily seem to be a lot of people jumping on that bandwagon. There's no co-sponsors of her bill to do that currently. There's any number of reasons to believe that, you know, there'd be some resistance to that. But I think that's kind of the big tension heading into 2025 is what exactly will we do with this Bitcoin reserve? Will the government actually buy more to add to it, or just hold on to the tokens it already owns? So, you know, it all boils down to really the fundamentals of supply and demand. We know what the supply is. There's almost 200 million Bitcoin in circulation. There's only about 1 million left to be mined over the next century or so. So the supply really comes from, are there any big whales selling or not? And the demand, I think, you know, we clearly saw a surprising amount to many people of demand unlocked from the ETFs from the beginning of the year. Remember, that's what took Bitcoin above that record back in March. Then the optimism about Trump is what took it further. But I think what's really interesting lately is you have sort of that macro influence reinserting itself. Both the stock market and Bitcoin peaked right before the Fed's last meeting, and Jerome Powell came out a little less dovish than people were hoping for. And, you know, we've really seen this mini correction in stocks and Bitcoin since then. So, you know, lack of another narrative, I think, you know, we're really seeing the macro, the interest rate, the tech stock trading environment taking over again.
Mike, what do we expect from a regulatory standpoint? Presumably, Mr. Gensler will be leaving, and we'll get a new SEC chair, presumably more constructive towards crypto. How's the world thinking about that?
Yeah, absolutely. I mean, I think we're expecting a sort of 180 turnaround from what we saw in the Biden administration, where we, you know, there was any number of legal cases from the SEC, criminal cases. I think the expectation is that many of those will either be dismissed or sort of settled early in the administration, and that there won't be that regulatory headwind for crypto, you know, the next few years, for better or worse. You know, if you remember, you know, there's good reasons why the U.S. had such a strong reaction to all the chaos of 2022 after FTX filed for bankruptcy. But, you know, memories are short, and now, you know, this new administration is really ready to sort of, you know, take off the restraints on the industry that we saw during the Biden administration.
So also outside of Bitcoin, there are serious implications for lighter regulation when it comes to other tokens out there. Ethereum, for example, especially because the SEC had a very specific way it looked at Ethereum heading into the spot Bitcoin ETF trading. Then you have other potential tokens in the pipeline to get into ETF wrappers. What do you think happens at the end of the day, and what kind of gates are lifted?
Yeah, Solana, a lot of people expecting Solana, maybe an XRP ETF. I think, again, it's, you know, the potential is there for perhaps approval of more crypto ETFs. The question I would have is whether the demand is there from the investor side. You know, if you look at, call it the difference between the Bitcoin ETFs and the Ethereum ETFs, which were also approved in 2024, you know, we saw something like $35 billion worth of inflows into the Bitcoin ETFs, only about $2.5 billion into the Ethereum ETF. So, you know, Bitcoin was that sort of first mover that everyone was waiting for. It is, to many people, the crypto market, and they're not so much interested in all these altcoins. So I think we certainly could see some approvals for some more crypto ETFs. I think, you know, the big question is how much demand will there be, given, you know, the disparity between the demand for Bitcoin ETFs and Ethereum ETFs that we've already seen.
I want a 3x leverage Dogecoin ETF.
Yes. Tom Keene.
Any applications for Doggy Coin?
Yeah, not that I'm aware of. I'd have to go back and double check that for you, but I don't. I'm certainly, someone's probably has one ready to file if they haven't already.
Michael Regan, what an amazing year to cover this asset. I mean, I think a lot of people wrote it off for dead after the crash of FTX. And because it dropped down to a paltry $15,000, which to me is already a mind-blowing amount for a line of code.
Fair to say BlackRock, in a lot of ways, saved the day this year, coming out with that Bitcoin ETF that was a record-breaking ETF ever for any asset, really, not just any crypto asset.
And that took you right up to 50, 60,000, and then Trump took you to where we are here.
All right. Well, it's been an incredible year. Michael Regan, thanks so much for joining us. Mike covers crypto for us here at Bloomberg. We're going to talk about the biggest gainers in 2024 and the biggest losers of the year as well. When we come back. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
In case you missed it, on Bloomberg, the China show.
What's been the sentiment? What's been the reaction to this U.S. election outcome on the ground?
They were pretty much ready for Donald Trump. There was a high expectation that he could return to the White House. We have dealt with him before, and after quite a few years, China simply is better prepared, and China, psychologically speaking, is much more prepared than in dealing with him again.
Probably are fully prepared for Trump to impose higher tariffs on China.
What's the tone as they were talking to really a global investment?
Right. The openness of China, including the capital markets, Hong Kong being an international financial center will be extremely important in channeling global investors.
Don't miss the China show live every weekday.
Top names at the Fed are on Bloomberg.
The median projection is 2 rate cuts next year. That makes sense to me, but we have to remain agile. Every meeting is live from the standpoint that you're debating, you're discussing, you're thinking what's the right level of policy. But my projection is that it will take many fewer rate cuts next year than we thought, but I'll watch the economy and see if that works out.
Nobody covers the Fed like Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
I think most investors are intoxicated by the opportunity in artificial intelligence. $160 billion being spent this year. That's just one data point. Another data point is a $3 trillion market cap for NVIDIA against $80 billion of sales on a trailing 12-month basis. Obviously, a lot of growth is expected for NVIDIA and for other businesses in the space, but that is yet to materialize, and it's impossible to know what the scale will be of an NVIDIA or other players in the artificial intelligence ecosystem. I think investors are just so focused on the opportunity set, on what it can be, and it's a self-fulfilling prophecy. If you bought NVIDIA a year ago or 2 years ago, you're pretty excited about where it is today, and you think that it could go to the moon. As a result, you don't really focus on the risks. You're sort of just too excited about the opportunity.
I'm Professor Hannah Fry, mathematician and writer. In this series, I will meet the companies, people, and pioneers transforming the world.
It's like the Jetsons meets the Flintstones.
Whatever future you dream of, if it affects us, I will explore it. The future is coming.
mic not working?
No, you're just getting started right now.
I was jumping. I was too early?
You were too early. You jumped the gun there.
Well, good New Year's Eve morning to everyone out there. The dozens of people watching Bloomberg Television and listening to Bloomberg Radio this morning. You can see us also on YouTube. Matt Miller here in the Bloomberg Interactive Broker Studio with Sonali Basak and Paul Sweeney. We have merged shows. We are simulcasting with Bloomberg Intelligence. We are Bloomberg Open Interest, and we're excited. We're having a little bit of fun here. We're celebrating the end of the year. They're celebrating in Hong Kong as well. Look at those beautiful fireworks. Bring them up. There you see.
Exciting, guys.
Yeah. Very cool. It's nighttime there. It's daytime here. It's so magical.
5 o'clock somewhere.
So
it's
magical.
New Year's somewhere.
For those of you who believe in the roundness of the earth. And we have markets that are, well, they're not as exciting as fireworks, but we are at least climbing a bit, a very little bit. The S&P 500 up 0.04 of 1%, 2.1 points the gain on the S&P 500. The Dow Jones Industrial Average doing a little bit better, up 48 points to 42,622. We're not seeing the fireworks here in markets, are we, Sonali?
No, you're seeing the NASDAQ 100 actually down on the day. You're seeing it down more than 0.1%, though you are seeing the S&P 500 holding on to its gains, but barely. We've been keeping a close eye on that throughout the morning trade because last day of the year, you'd want to see it end in the green, but it's looking like it's wavering. We're still below that 6,000 level, the one that was met with a lot of excitement earlier this year. But, I mean, we can't really complain, guys. It's been an extraordinary year in the S&P 500. 2 straight years in a row of gains of more than 20%, meaning you've got the best 2-year return since the 1990s. That 10-year still above that 4.5% danger zone as some investors, Max Kettner over at HSBC, we give him credit for tagging that one above that 4.5% level, but below where we were last week at 4.6%. I know you're watching crude, Paul. We're watching it hit $71. That's 0.8% higher, but of course, oil generally weaker on the year.
Bitcoin up 3.5%, 95,200. How about that?
Yeah.
It's a solid move there. So let's see what 2024 is, as Sonali was just saying, big year for equity investors, particularly if you're sitting in a tech stock. So let's kind of get a little summary of the winners and the losers for 2024. We can do that with Isabel Lee. She rejoins us here in our Bloomberg
She drew the short
studio. Hang with us. That's a pretty solid gig right there.
In the office, looking at the winners and losers of 2024, Isabel.
The biggest winner, can you guess, is Vistra. So it pulled off a feat that no other utility stock has managed since 2001. It topped the leaderboard. You wouldn't expect that. I was expecting to see some of the big tech names, but nope, it's Vistra up an eye-popping 264%. So Vistra joined S&P in May. It posted their best year in history, which is really a comeback for the defensive play of utilities. So, that's been long considered one of the sleepier corners of the market, if you will. But utilities this year advance, and of course, it's on the back of the growth of AI and other data centers that fuel the demand for power. So that's really interesting.
I tell you, I did not see that coming, and I should have. I should have, because I work with Alex Steele, and she's all about the energy play and utilities, and she says, "See, I told you, energy. You got to have it, to power all this stuff."
The one stock with a claim on Vistra's position is Palantir. So it's up 350% this year, but it only joined the S&P 500 in September. So maybe that's why it's not on the list. But
Dan Ives was he was late to the party because he initiated coverage of Palantir late, but he came out with one of the strongest buys I've heard in a long time, and he wasn't too late.
Does he have any other kind of buy?
Well, yes, he does. I mean, you're right. He's the permanent bull. I don't think he has any holds or sells out there. So, but that's his MO. But boy, when he came out, initiated coverage, that got my attention.
It's interesting because you see Palantir down 4 straight days in a row, and when the risk appetite goes, of course, these high flyers can go a little bit along with it, but still up really meaningfully. I would also say Palantir speaks to another trend that people are looking into. This is defense tech, isn't it?
Definitely. And of course, NVIDIA is number 2. We won't miss NVIDIA, so maybe we could skip over that. But number 3 is GE Verona. So that I also didn't see coming. It's the maker of the biggest offshore wind turbines in the Western Hemisphere, and it more than doubled this year. So this was a firm
that's amazing.
Yeah, it spun off from General Electric in April, and it became an independent supplier of power generation equipment. But yes, I also didn't see this coming. It may not be in the leaderboard in 2025, though, because it sees grim prospects as the industry just really faces faces a huge slowdown and, of course, weak pricing. We have the CEO saying that they haven't had a single new sale in roughly 3 years.
I was going to say,
yeah.
I feel like wind turbine revenue is not on the up and up.
You know,
right? They're already all there.
Fascinating about that, you have this index of spin-offs up more than 60%
Like
this year.
Kenvue, for example.
Yes, exactly. And you have Constellation Energy being the second biggest gainer on that index, up more than 90%. Just companies that have been spun off from larger companies doing extraordinarily well. Just by focusing in, getting away from that conglomerate mentality, that is a trend expected to continue next year.
That's a fair point, and they'll become more nimble too, and they can make better decisions without the bureaucracy. Not that they cannot if they're still in the big firm, but flexibility is key. So let's go to the losers, CVS, which isn't really a big surprise. It's been a tough year for CVS, and they continue to face mounting headwinds. There's this Pharmacy Benefit Manager, or PBM, legislation. There's also a new DOJ complaint alleging CVS Health violated some things related to opioids. And of course, we have 3 consecutive profit warnings and the decline of over 40% of its share price this year. So it really has been tough for CVS.
And I mean, those people who go to a CVS know what a horrible place it is to shop.
Yes,
I will say,
humiliating, actually.
yeah, it's pretty, usually it's very dirty. Everything's locked up, so you can't get anything. And there are long lines at the pharmacy. But I wanted to say something nice about a CVS location that I went to on Central Park Avenue in Yonkers, New York, recently. It's been redone, and they did a lovely job.
Great. You know, I do love CVS myself, but yes, a lot of pain there. Remember, the FTC had also started probing CVS as well as other pharmacy benefit managers for insulin pricing. Something I'm watching closely. I wonder if this travels into the Trump administration, because if they're going to target first insulin prices, the idea here was that they would start to look at more and more drugs and look at the cost of them and the role the pharmacy benefit managers play. I don't know. We'll see if it happens or not. Isabel, we do have to leave it there. Thank you for joining us. We're going to switch gears. We're going to talk about home buying because, of course, Paul really wants to refinance his mortgage. And it's looking kind of tough out there.
Well, all 3 of us have bought a home in the last couple of years.
We have, and I've got to say, the one thing I'm happy I got ahead of was the flurry of buyers eventually heading into the market when things get rougher, because mortgage rates didn't really change. In fact, they've been on the upper end. They're giving up. Many home buyers are giving up on the prospects of pre-pandemic level interest rates. You could see why. And pending sales of U.S. homes increased for a 4th month in November to the highest level since early 2023. That's exactly what I was trying to get ahead of. We're going to discuss the market with Redfin Chief Economist Daryl Fairweather. I'm not normally good at timing the market. I mean, who is? But you look at what's happening. It looks like people are starting to accept these higher mortgage rates. I've got to ask, not only should they get used to these higher mortgage rates, should they be concerned that you could actually see them float a little higher from here?
It's definitely possible. Our forecast is for mortgage rates to stay where they're at, but that could be a bumpy ride. They could float up, they could float down in the near term, but nobody should be expecting really rapid improvements in mortgage rates. I think that would be an unusual situation. So you just gotta kind of take the market as it is right now.
Is there kind of a clearing rate, Daryl? Kind of just following up on Shonali's question, where you think the market would free up in terms of activity? I used to think it was 5%. Now I think it's maybe even 6% or something like that, where sellers will say, okay, I'm willing to make a move here at 6%. Do you think there's a clearing rate?
Most mortgage holders have rates below 6%, and I think about half of them have rates even below 5%. So it would take a really rapid reduction in mortgage rates for people to become unlocked from those record low mortgage rates that they got during the pandemic. And if that were to happen, there would probably be a lot of chaos in the economy that was causing it, like a recession. So I don't think that's something people should hope for, and it could come with a lot of side effects beyond just the mortgage rate impact.
I'm glad Shonali was able to get into the market, Daryl, but for a lot of Gen Z and millennial buyers, it's a tough nut to crack. Is home ownership going to be more and more difficult for these younger generations, or do you think there will be some kind of regulatory changes or building stimulus that drives a new wave soon?
For the next year, it's going to be a renter's market, which is good news for people who've been shut out of the home buying market because they'll be able to get apartments for rents pretty similar to what they would have gotten last year. It's stabilizing because of the new construction that's happened. But if people, sit out the housing market and stay in the rental market, then prices are probably going to keep going up, and it's not going to get any more affordable for them in the years to come. So if people decide the renter's market is better for them this year, that might be where they end up stuck for years and years to come.
I guess why would rent stay flat? If you have more and more people renting and being crowded out of their housing markets here to buy a home, then why would rent stay flat, especially after the increases we've seen so recently? It feels like the path forward has been higher constantly, especially if you live in somewhere like New York City.
In some places, rents are going up, but in places where there has been building, like in the South, there's been a lot of construction of 0 and 1 bedroom apartments. And even in states like California, where zoning has been liberalized, we're seeing more ADUs up for rent. So those smaller units that might be attractive to a young professional, there's more of them now, and that's why those rents are flat. But there's still this gap. If people want that 3-bedroom home, they're probably going to have to enter the for sale market, and it's probably going to be very expensive.
Daryl, people talk about having a housing crisis in this country, maybe a couple of million units shy, or I don't know what the number is. A, are we in a housing crisis in terms of availability, and how do we get there?
Yes, we were in this housing crisis even before the pandemic. The 2010s, we built fewer homes than in any decade going back to the 1960s. And although there was a bit of new construction during the pandemic when rates dropped, it wasn't enough to really make a meaningful difference. So we're still stuck in this place where housing is unaffordable. And if it weren't for these higher rates, prices would be a lot higher. So it doesn't really have anything to do with the rates. It has to do with the fundamental lack of supply, especially for homes that people desire and places that people want to live. That's where housing has gotten expensive, and it doesn't look like it's going to get any more affordable anytime soon.
There was a story in the New York Times the other day about people building barn dominiums.
Barn dominiums?
So like giant barns. This woman had built a huge black box in the Arizona desert, and I was thinking, that has got to be the dumbest place, with global warming.
So game to live in a barn.
Yeah,
How
but
rustic.
in the hot desert of Arizona, like temperatures aren't going to get any cooler from now on, right? Are people moving north? Do you see that, Daryl? Is everybody getting ready for, the heat apocalypse?
Well, the Florida market is one of the weaker markets this year, and I think it does have to do with rising insurance costs and the storms that just seem to be getting more severe. And in places like Arizona, water is a big issue. They're having to truck water out to some places because they've been cut off from the water supply in the main cities. And in terms of, is the Midwest doing better? Rents are actually going up faster in Midwestern cities like Milwaukee, Cincinnati, even some of those Pittsburgh, like those eastern cities. Yeah. Those rents are going up quicker, so that might have to do somewhat with the climate.
All right, very interesting. Daryl Fairbrother, thank you so much. We appreciate that. Daryl Fairbrother, she's the chief economist over there at Redfin, talking about U.S. residential real estate market. And again, the 30-year fixed mortgage, Mortgage Bankers Association, 6.75%. So my 6% mortgage isn't that bad on the Jersey Shore estate here. Coming up, we're going to talk chips. Why not? Because chips are in just about everything. It's not just NVIDIA. Lots of other ways to play this game here. So we're going to have some smart voices coming up on the chip business. Speaking of chips, NASDAQ off about 0.25% here this morning. We'll have more coming up. This is Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
If you look at Reels, Instagram and Facebook Reels, both immensely popular, both growing a lot. Those are really working not because the short form video format is special and new. It's actually been around for a long time. You remember Vine and the early days of short form video. It's because of GPUs. It's because of large models. It's because of advancements in recommendation systems. ByteDance is one of the really great companies at this. we also have made an immense investment in harnessing the power of modern models, large data sets, and modern hardware, NVIDIA's hardware and our own hardware, to build recommendations that make the products better and more engaging. Our advertising system is built on modern AI recommendation technology. So I always think it's interesting when people remark that like AI just arrived. It's actually powering already today a huge amount of the engagement and quality of our products.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
All right, good Tuesday morning, a good New Year's Eve morning from our Bloomberg Interactive Broker Studio. Matt Miller, Paul Sweeney, Shanali Basak, we are here. We're doing this simulcast thing. That's where you do radio and TV live. It works.
So much fun.
It is, isn't
and
it?
YouTube today, too.
And YouTube. Thank you very
forget.
much for the kids out there. YouTube.com. You can find us out there as always. So we're all doing well here. Looking at the markets here, kind of mixed. The S&P's off a couple of points. The Dow's up a couple of points. And NASDAQ's off about 0.25%. But one of the stories, obviously, really the last several years, but a big play here in 2024 was the chip business. It helped propel global wealth in 2024. We already talked about that story where the tech titans are making a lot of money on their equity portfolios. Let's take a look at some of the winners and losers of the semiconductor industry and whether this rally can hold up in the new year. Here with more is Kunjan Sobhani of Bloomberg Intelligence. He follows all the tech companies out there on the West Coast. He's based in our beautiful San Francisco office out there on the pier of the wharf in San Francisco. Kunjan, it's a nice, and they have a good food setup out there as well. So I always love going out to the San Francisco office. Kunjan, winners and losers here. Let's start with a loser. Can you talk to me about Intel? Where does Intel live in this new world? It feels like they've missed to some degree the AI play, yet they're getting a big contract from the U.S. government. I'm just not sure how to square that circle there. How do you think about Intel?
Yes. So, I mean, today's Intel, you really have to look at it as two companies, right? One is your legacy chip company like NVIDIA and Broadcom who designs their chips and sells them. And the other is sort of a semiconductor manufacturing company similar to something like a TSMC or a Global Foundry. On the product side, this is where they have sort of, like you said, missed out on that AI train. It was really, them not coming to the market with the AI products in time, and they are still sort of struggling. We don't have a good pipeline for their AI revenue ramp, especially in the GPU or the accelerator space. And on the server side, they're having challenges with their competitor AMD taking share almost every quarter over the last year or so. The contract manufacturing that you're talking about, that comes from the manufacturing side. Since the ex-CEO now, Pat, took over the helm, the North Star for the company, for its turnaround, was become the sort of leading edge node manufacturer of the West. If I may compare, it becomes sort of the TSMC of the West. And that's where they are really, have been investing a lot, really focusing to get advantage and manufacturing leadership back here in the U.S. And that's where all the grants, your CHIPS Act subsidies, your tax credit, et cetera, are designed around that business.
By the way, speaking of tax credits, is Intel just done? Do they bring in somebody to break it up and sell off the pieces? Or because they are still looking at like $20 billion from Uncle Sam, right?
Yeah, I mean, look, they haven't said anything specifically, but from our analysis of the company, including valuation and how the stock is trading right now, we think there's likely going to be definitely some kind of divestiture, some kind of investors brought in. We think the more likely portions of the business are going to be the PSG or the Altera business that they had acquired. There's also a lot of equity stake they have in Mobileye, which they have a way to diversify and raise some cash. These two would be, I would say, the most highest probability mobility exits. The discussions around breaking up the foundry business other than the product business, that's something really hard to do, especially how important strategically Intel's manufacturing plants are for the U.S.
Well, speaking of how important the manufacturing plants are for the U.S., there's a new presidential administration. How do we expect President Trump to approach the industry, and would they get any support above and beyond what we've seen under the Biden administration and the CHIPS Act?
Yeah, I mean, that's a great question, and there's multiple sort of angles to look at it. Just looking at from a manufacturing and subsidy perspective, we don't expect anything to change here. The government has been, very supportive of bringing back manufacturing here, especially leading edge node and advanced manufacturing when it comes to semiconductors. So we don't think this will be this tailwind will continue to be a tailwind even in the new administration. However, there are different angles now. One is the M&A landscape. Will the new administration be more easier on M&A, which really has not happened in semiconductors because of, again, government regulation being primary gating factor. Again, this area, when you look at the data versus the sentiment, the data doesn't show that the Trump administration would be significantly a booster for M&A. If you looked at the deals that were sort of blocked or went into a lot of sort of regulatory concerns during his prior term, the data shows that it was similar to what we saw in Biden administration. So from that angle, we don't expect, at least from the data, significant things to change. There are different angles here, especially pertaining to China. We do expect, the scrutiny against China to increase, and that could result into multiple different aspects. One is sanctions on Chinese-based companies, and most of the U.S. semiconductor big giants have significantly high exposure to China, anywhere from 40 to 60% of their revenue. So that could come at risk. The second could be retaliatory measures by China on U.S. companies who have significantly higher revenues in China. One example recently was China initiating a probe on NVIDIA. So we expect something in terms of the tariffs or the sanctions to play a larger role on the U.S. semiconductor companies.
Kunjan, I'm looking at the real winners in your space, the chip space. Obviously, NVIDIA up 173% year to date. Broadcom, up 109% year to date. So those are the clear winners. What do tech investors feel like 2025 holds for some of those names that have really been propelled by AI? Is there more to go? Is this a market? Is this an earnings growth story that can support more performance out of these names?
Yeah, fundamentally, we expect 2025 to be another really strong year for AI chip names, with the one key caveat that we expect this year not just one name to take all the glory and take all the winnings. We expect a much more broad-based growth going into ASIC names, AI networking names, the one, like you said, Broadcom, but there's even others that we expect to continue and take small share of the bigger and growing AI wallet, because the hyperscale spending is expected to grow again 20% this year. So we think there will be more names than just a handful of them this year.
What's the risk to that 20% growth story for hyperscalers spending? Because at the end of the day, we've seen tremendous ambition from big tech companies to be working with NVIDIA, of course, and others. But do you think that could face a wall if investors also get fatigued?
Yeah, I mean, you are seeing that concerns come in. So when you look at from a growth rate perspective, the growth rate is normalizing, right? When you look at last year, it was somewhere between the mid 40s and now sort of half 20s. But, we so far have not seen any data showing that at least in 2025, you could see a shock to this number. The second point is, so far, since the advent of Gen AI, these estimates have proven to be conservative. So when we end the year, we have typically, for the most companies, seen the numbers of the CapEx numbers come higher than what we had expected at the beginning of the year.
All right, Kunjan, thanks so much for joining us. Kunjan Sobhani, he's a technology analyst for Bloomberg Intelligence based out there in the middle of Silicon Valley in our San Francisco office. All right, I mean, for everybody that's on New Jersey Transit, Metro North, Long Island Railroad, coming into the city for New Year's Eve, here's the weather forecast. Up to 3/4 of an inch of rain is expected. With
3/4 of 1 inch? That much?
Well, that's equivalent to like 4 or 5 inches of snow. I mean, that feels like a lot of precip, no?
It says temperatures will be too warm for snow.
Right. So you're just
3/4 of an inch is very little.
Matt doesn't have to walk around in heels.
Yeah. That's a lot of rain, I think, if it comes in like a short period of time.
All right, I'm not
If you're standing out there in a diaper in the Times Square because they won't let you leave.
I don't know how to read the Doppler situation
It's
here.
warm, though. It is warm.
It's going to be warm, right. So, but I mean, there's going to be 1 million people in Times Square soaking wet, but they're not going to care.
Slightly
Let's be
wet.
honest.
It's just
Three-quarters of an inch. To me, that's a very small amount. It's not even 4/4 of an inch.
No, that's right. It is, you're exactly right on your math there.
Worse, could be snowing.
Yeah, it could be snowing. So, but they'll get a little wet, but they'll be fine.
As you say.
Back to the chip thing. You did the AI extravaganza that Anurag Rana and Mandeep Singh put on. I learned so much about artificial intelligence at that Bloomberg conference. And I think my biggest takeaway was the difference between training and inference when you're looking at use of a large language model. It was fantastically usable.
You're going to be fun at the cocktail party tonight. Talking about AI. Yeah, that's going to be, let's go
I
talk
just
to Matt.
saw the progression of Matt getting nerdier and nerdier throughout the year, and it makes me so happy. It makes me very happy.
You know what? Speaking of nerds, we're going to have a fish preview. We're going to preview the fish show at Madison Square Garden. Definitely become a part of New York and Wall Street culture. Stay with us for that. This is Bloomberg.
You can have a baby anywhere you want. It's the environment and that care. That is what matters most.
Our investigation found some of the worst cases of harm were surfacing.
मुझे क्या पता कि भाला के चक्कर में मेरा ही बुरा हो जाएगा.
I never thought I would be vulnerable to a scam. This ruined me, and I didn't have any real good explanation for it.
Wildlife trafficking is almost always driven by greed.
Once you start focusing on money, you lose sight of what is best. That's where things go wrong.
In case you missed it, on Bloomberg Open Interest.
11 years ago, I bought a Bitcoin on this set.
It was $800.
Yeah, $800, but I spent
Which
the
is a
Bitcoin
lot, by the
on
way.
beer and groceries and gas and video games.
And
I wish I had
hugs.
kept it. I wish I would buy a Harley today if I had.
Yeah, but you
that
probably wouldn't
Bitcoin.
be a TV anchor, and you probably wouldn't still be on this
True.
set. And what a joy that
I'd
is.
be my feet in the sand and the beer in my hand.
Don't miss the next Open Interest.
In case you missed it, on Bloomberg, the China show.
What's been the sentiment? What's been the reaction to this U.S. election outcome on the ground?
They were pretty much ready for Donald Trump. There was a high expectation that he could return to the White House. We have dealt with him before, and after quite a few years, China simply is better prepared, and China, psychologically speaking, is much more prepared in dealing with him again.
Probably are fully prepared for Trump to impose higher tariffs on China.
What's the tone as they were talking to really a global investment?
Right. The openness of China, including the capital markets, Hong Kong being an international financial center, will be extremely important in channeling global investors.
Don't miss the China show live every weekday.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Top names in business are on Bloomberg.
The question is, if you lower taxes and use it to reduce the debt, the question is how stimulative those activities are, and that's where the Treasury Secretary appointee has got to figure it all out, because he's got to call the balls and strikes about how it all fits together. We got to realize that the impact we have if we don't get this debt back in line.
Nobody covers business like Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
In addition to looking at these markets, we are also keeping an eye on a new congressional session beginning on Friday. Let's hope it accomplishes more than the current session, which has been the least productive in decades, passing the fewest laws since the 1980s. We're going to bring in Joe Matthew, co-host of Bloomberg Balance of Power, to talk about exactly what is going on after Friday, because of course we know there's a speaker vote. We know that the President-elect Trump has come out in support of Mike Johnson. Does that clear up a lot of questions?
I don't know if it does. It makes life potentially easier for Mike Johnson, but this is far from over. You've still got a couple of Republicans who are openly suggesting that they will not vote for Mike Johnson to be Speaker. And I'll just back up a second here, Shonali, to remind everybody that on Friday, yes, the new Congress begins. This is the 119th. This is clean slate, post-election. And the first thing that needs to be done is the election of a Speaker. If you don't have a Speaker, you can't swear in the Congress, and, well, then you can't do any legislating or governing from there. So the question is, will this actually be done on Friday? And normally this is kind of a formality. It's a rah-rah session, the beginning of the new term with the new mandate. But Mike Johnson could have his hands full here, remembering that he's only got 4 votes to play with. That's why it's different this time, because the majority is so razor thin.
But I would think, Joe, and I'll defer to you here, but having Trump give that endorsement, which seemed fairly high profile to me at least, does that not seal the deal for Speaker Johnson?
I don't know that we can say it seals the deal. It does, again, help him a lot. Okay. This is the most important endorsement of them all. But when you talk to Tom Massey, when you talk to Chip Roy, Victoria Spartz, some of the others who were in the Freedom Caucus, these are Republicans, by the way, they want to have a conversation with Mike Johnson about the way forward. In the case of Tom Massey, he's already a no, because they're very upset about the way the continuing resolution, the budgeting process, was handled at the end of this year. Now, Donald Trump, again, could make Mike Johnson a made man, but when you only have 4 to lose, Democrats have made clear none of them, not a single Democrat, will vote for Mike Johnson. So this all has to be handled inside the family.
So before they start the hard work, they're going to have trouble doing the first thing. Normally, I would say that's good, right? Gridlock is good for markets. You don't want those people in Washington legislating anything. Right. You know, they're the biggest morons around. But they need to pass or bring back the TCJA, right? Because it sunsets next year. So correct. If they can't do that, like, is that possible that they won't be able to do that, Joe?
That'd be a shocker. That'd be the story of the year, right? We just brought Donald Trump back into the White House, but he couldn't somehow extend the Donald Trump tax cuts. His name is on the thing. Look, it's going to be a question of what the combination is here, because there will be a need for some Democrats to vote for this. And you know your dear issue of SALT is one of them, Matt, but we also talked about taxes on tips, on overtime, on Social Security, on mortgage insurance. There were all kinds of different things.
Auto loan
what
interest?
is going to be the combination? Auto loan, yes, exactly. There are so many that we forgot half of them. And a lot of the tax writers, even Republicans who support Trump, are worried about getting all of that into a single bill. It was already a pretty big lift to extend or make permanent the Trump tax cuts. Now you add all this other stuff, and it becomes a much more complicated conversation, especially if nobody's going to touch Social Security or Medicare. So that's why we've been talking about the potential for deficit spending in this new administration. And when you add the idea of tax cuts with tariffs, you wonder what the impact on the economy will be and, you know, what we're going to be talking about a year from now.
I mean, every administration does deficit spending, right? We haven't had balanced budgets since Clinton.
It's been a long time.
I just want to point out, for posterity's sake, that Donald Trump promised he was going to bring back the state and local tax deduction, Shonali. He didn't say, I'm going to raise the cap by a few $1,000s. He said he's going to bring back the state and local tax deduction to where God set it to begin with, unlimited. And I just want to point that out. So no one forgets, Donald Trump promised he was going to bring it back.
And for Matthew Miller, this is particularly important in the state of New York.
Not just me, it's important to so many middle-class New Yorkers.
A lot of
families.
people are certainly looking
Working
at that.
families.
But here, notwithstanding, the taxes on tips and other things that you had mentioned here, a lot of things to consider. Yeah. The point that Torsten Slok at Apollo has made, I believe just this morning, that the term premium for 10-year treasuries has increased by 75 basis points over the past 3 months. To said in a human manner, this means that investors are demanding more yield here to take on that additional risk that is associated with what many believe is a more precarious U.S. fiscal situation. If that's already the case heading into the end of the year, before these discussions are underway, wouldn't somebody, say Scott Bessent, who is at the Treasury Department and having to deal with that issuance schedule and trying to term out that debt longer and longer into the face of higher interest rates because investors are demanding more, wouldn't they look at Congress, wouldn't they look at the president and say, we got to rein it in?
Yeah, well, listen, and that's why we were asking him that before he was selected to be the Treasury Secretary. But Scott Bessent would tell you, hold on, you're taking each of these in a vacuum, and you have to put them all together in the mosaic that only Donald Trump could create or understand. And so we're kind of being told to wait a minute here because you're not going to believe what you see. They will point to the Trump tax cuts when they were initially put into law, increasing revenue and then kneecapped by COVID. What will happen this time without COVID? Will tariffs be across the board or will they be more directed? These are the conversations that they're going to be having. And by the way, they've got a lot of lawmakers to convince on this stuff, too. Look at John Thune or some of the others in the Senate. These are older line establishment Reagan-style Republicans where tariff is not the most beautiful word. So we do have some things to figure out here in the onset. The one thing that Republicans do seem to agree on, by the way, is border security, and that'll probably be the first thing you hear about in the early stages.
Security is a large spending, but the other big difference between now and the last Trump term is that you have just spending on interest payments alone, crowding out other forms of spending and surpassing even what you spend on defense in a year.
Yep, absolutely. Hey, Joe, what do you got coming up on your show today?
Well, they asked me who I wanted to talk to on the last show. Can you believe we're all doing the last show of the year?
Wow.
On Balance of Power, I said Frank Luntz. So Frank is going to join us. He's just held a series of really interesting focus groups at West Point. And we're going to talk about what it means to be a patriot and maybe get outside the bubble here for a minute to remember how lucky we are.
Very cool. I'm excited to tune in to my last Balance of Power for the year. I've been listening to you every day, Joe, so really appreciate the work that you and Kaylee do. I love the program on Sirius XM.
Channel 121.
Channel 121, and it's just a fantastic way to enjoy your commute either way, or sit at home and cook dinner. Joe Matthew there, anchor of Balance of Power. You can catch it every day from noon to 2, and then again from 5 to 6. Not a replay, mind you.
No.
They don't give you, reserve you the canned show from the afternoon. They do another program. Yep. So he's at work basically all day long. I want to turn to the big take story on the Bloomberg terminal this morning as the U.S. debt, we've been talking about balloons in the direction of $50 trillion. Treasury bond dealers are warning of the risk of growing market pressures. Joining us now is Bloomberg's Alex Harris, who has more on this story. And Alex, some of the numbers here were shocking even to me, and I cover, this market every day. But Treasury issuance, as one NatWest executive told you, has tripled over the past decade. Meanwhile, the balance sheets of these banks aren't catching up. So being a primary dealer ain't easy these days.
No, and you look at Citadel in this case, and they had been vying to become a primary dealer for years, and finally in September said, you know what, thanks but no thanks. This is just a losing proposition, and I think that's how people are feeling about it now, and why you're not seeing the primary dealer community even grow to keep up with the amount of supply and the amount of debt that the government is issuing. And that's a problem because you need those primary dealers. You need them to facilitate these, in these markets. markets from the auctions to secondary market. And remember, their balance sheets for these dealers isn't just treasuries. It's a lot of other things. It's equities, it's mortgage-backed securities, it's asset-backed securities. So you're playing with all these things. And as you can see what happened, if you look back to March 2020, I mean, that's a really good example of what happened when the treasury market ceased to function and dealer balance sheets just could not handle what it needed to do across all asset classes. And that's the scary thing, that it's a regular occurrence.
Maybe let's take a large step back for a moment here, because there are a lot of confusing dynamics that are happening in the treasury market. One is the size of the U.S. debt load alone. Then there comes the plumbing questions. Why overnight funding seems to hit pockets of stress every so often. The dealer balance sheets being constrained as they are, as you say, and then hedge funds trading with a lot of leverage in this system. What is actually the problem here and the risk in the way the plumbing is working?
So right now what's happening and where the primary dealers are having problems is when you're asked to facilitate and intermediate in this market, but you don't have the balance sheet to do it, you have to charge higher funding costs. So that means if you are looking to borrow treasuries, say in the repo market, and you're a hedge fund or an asset manager and you need to borrow to finance securities, you are going to have to pay more. And there might be a point where they are not equipped to pay as much as the dealers are asking them. And so that's when you get backstops and you get, stopping out of positions. And all of that has to make its way back onto the dealer balance sheets. And so that's where they get clogged. And right now, there's $400 billion in aggregate treasuries alone sitting on dealer balance sheets. And then every time you get a treasury settlement cycle, so the middle of the month and the end of the month, you're getting a backup in repo rates. It's becoming a regular occurrence, and we're seeing it quite often this year. July, dealer balance sheets were stuck. End of September was a very volatile quarter end that nobody expected. Year end has thankfully been today it's very mild. Repo is under control, but it's because the minute the calendar turned to October, everybody said, wait a minute, we have to be better prepared for this. And so you saw repo rates actually back up to 5.5% in the middle of November because people said, I don't want to get caught. I got to do this now.
Alex, another question about this too. We're talking about the treasury market here. It's not only the deepest, most liquid market in the world, it's one of the largest, and it also underpins the cost of every other type of borrowing. And if you're talking about the need to kind of back up rates, as you're talking about in certain parts of the market, at what point does this become a larger issue, even a taxpayer issue?
Oh, I mean, well, you can see in some cases it already is. I mean, you guys were just talking about interest, the cost of interest in the last segment. That's what it's going to look like to the taxpayer, is that, the auctions are just going to get more expensive because it's just going to get harder and harder for these dealers to continue taking down this supply. And what's interesting is, remember, the dealer balance sheets are not created equal. So, dealers have the autonomy to decide, where their priorities are. And, during the Treasury refunding one year, I think it was last May, they were doing something called Blue Sky, and they were just kind of kicking around ideas, what they could do to help improve Treasury market functioning. And one of the things they proposed is almost doing a table to see who the biggest dealers were in the Treasury auctions as a way to sort of light a fire under the rest of the dealer community to say, hey, if you're not doing your part and you're not pulling your weight, you have to, because there's just too much supply to leave it to a handful of dealers to be taking down. There's only 24 of them. We're down from the peak that we saw in terms of the number of dealers that we saw in 1988. So this is so critical that everybody is playing their part in here. And if they're not, there are serious consequences in the terms of costs to the economy, to the taxpayer, and to those just trying to finance their transactions in the financial system.
Alex, it's a great story. I recommend everybody check it out. Treasury's $50 trillion deluge will test strained dealer pipes. And I think that was one of the coolest quotes in the story. Casey Spezzano saying, you're trying to put more treasuries through the same pipes, but those pipes aren't getting any bigger. It's a pretty great way to paint the picture. Alex Harris, there with the story on primary dealers. It's our big take. Check it out.
When I was on Wall Street, being a primary dealer was a really good business,
it's a golden
profitable
ticket.
business. Yeah, I mean, when I came on the street in the trading desk, The government bond desk was the bomb. They had so much capital, they could swing it around. They dealt with the...
We could do a whole show on things that have changed since
Yes.
it all started on Wall Street.
But Citadel Securities really wanted to be in it. They kind of just shelved the plan. That was a huge story this year.
All right, coming up, we're going to talk about inflation in the restaurant business with Danny Grant, chef and partner at Maple Hospitality Group. And how can you tell if it's Maze or David Bowie? We'll preview the Fish concert at Madison Square Garden. Happy New Year's.
I think most investors are intoxicated by the opportunity in artificial intelligence. $160 billion being spent this year. That's just one data point. Another data point is a $3 trillion market cap for NVIDIA against $80 billion of sales on a trailing 12-month basis. Obviously, a lot of growth is expected for NVIDIA and for other businesses in the space, but that is yet to materialize, and it's impossible to know what the scale will be of an NVIDIA or other players in the artificial intelligence ecosystem. I think investors are just so focused on the opportunity set, on what it can be, and it's a self-fulfilling prophecy. If you bought NVIDIA a year ago or 2 years ago, you're pretty excited about where it is today, and you think that it could go to the moon. As a result, you don't really focus on the risks. You're sort of just too excited about the opportunity.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
We're scaling up at incredible pace.
This region is growing so rapidly.
The opportunity is really huge.
Only on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Welcome back to our Bloomberg television and radio audiences. I'm Shonali Bassick alongside Matt Miller and Paul Sweeney. Happy New Year to everyone out there. We're going to talk about the food business here because the restaurant business, never easy. Inflation, labor costs, and more budget-conscious consumers are taking a bite out of the industry's profits. Joining us now to talk about how to navigate these challenges and what's ahead for 2025, Danny Grant. He's a 2 Michelin-star chef and partner at Maple Hospitality Group, the company behind Maple and Ash restaurants. You think about some of the challenges that the industry has faced. Let's start with inflation because, of course, the cost of certain goods, coffee, cocoa, have just been skyrocketing. Eggs. How do you get around that at a restaurant?
Yeah, well, thank you so much, and Happy New Year to you guys. Thanks for having me on. 2024 has been an incredible year for us. And really had a lot of wins for us in growth and being able to navigate through inflation. And just like probably a lot of parts of the country, we're incredibly excited for what's to come in 2025. We're having the fortunate for a lot of expansion, and we're opening new restaurants in Miami and other parts of the country. So this is a part of our restaurants that we excel the best at is celebrating. So it's one of our favorite days of the year to welcome everybody into the restaurants and celebrate. And to talk about, how we navigate some of the inflation, it's really, we take a lot of the hit on us as far as we look at being able to cover costs and, whether it's coffee to steaks to king crab. And we pass some of that on to the customers, but we also look at very creative ways that we're able to mitigate some of those things by different cooking techniques, different style of service. But one thing that we never sacrifice is the quality of the ingredients. So, as you know, the restaurant business is an ever-changing, difficult operating business, but we kind of relish in those moments and have been seeing a lot of success with it.
Talk to us about your consumer. Who is your typical consumer at your restaurants? What are you targeting? Who are you targeting?
Yeah, for us, we like to target a broad span of we're in neighborhoods and locations that is anything from someone that's looking to come in and have a simple piece of fish and have a beautiful night out, to the much more extravagant celebratory moments of they just closed a big deal and we're the most obvious place to go to celebrate and to blow off all that goes into closing a deal. So, those are some of our target people. We target foodies. We love people that want to eat and drink like the same way we do, because that makes me happy and makes what we do all worth it.
Danny, how has the restaurant staff held up in this post-pandemic world? We continue to see inflation a problem for customers, for diners, and for owners and operators. But what about, servers, bartenders, busboys? Have wages kept up with inflation? How is that part of your family doing?
Yeah, I think that's a great question and great topic, because, without our team, we are not a restaurant. We can't open the doors. And that's one of our most important assets of running restaurants. Some of the things that we've done to keep that in place is, first of all, we have very high grossing restaurants. Chicago Maple Nash is one of the top grossing restaurants in the country. Wow. That gives us a little bit of extra flexibility to look at ways to be creative and take care of our team. So, that we're always looking at upping our wages, healthcare, and then other things that's, we have food packages that we bring to our team. We do family meals, we do parties, and, other things that just really help keep the morale of the team and everybody feeling together like the tight-knit family that we are.
Great to have you on the program, Danny. Thanks so much for joining us, and we wish you a happy New Year and a successful New Year as well. Danny Grant, he's a 2 Michelin star chef and a partner of Maple Hospitality Group, which is the company behind Maple.
Well, I watch this TV show Bear, so I feel like I'm an expert on the restaurant business.
Yes,
just like Landman makes me an expert on the oil and gas business.
Yeah,
so that's how I learn things.
You learn stuff through
Yellowstone,
fictional television shows.
The ranching business
You
through
could be
Yellowstone.
a cowboy.
Exactly.
Well.
I'm more of a cowboy than Paul.
I think you're right.
She has 12 pairs of cowboy boots.
Oh, nice.
That's a truth.
Let's talk about inflation, because let's continue to talk about inflation, because I think nowhere is it more apparent than in live entertainment. Obviously, concert prices have gone through the roof, and even places like Cash or Trade, which is an app that allows you to buy tickets at face value, are affected. I haven't been able to get fish tickets this year, and it's a really important part of my year. It's an important part, I think, of New York City and Wall Street culture. The Jam Band is playing its 16th New Year's Eve run at Madison Square Garden. They've become really a staple of that venue, and I wanted to get in touch with a fish fan and a deadhead. Howie Schneid joins us right now. He runs CEG Presents. They produce and promote hundreds of shows every year. And tonight is his 190th fish show. Howie, I'm so glad you could join us just to give a little preview of what to expect tonight. It's such a big deal. They always do a gag on New Year's Eve, and they've become really a staple of Madison Square Garden. Tell us about what to expect at the fish show tonight.
So, well, first of all, if you do want to go tonight, I could probably get you tickets. But secondly, New Year's is always, it's a 3-set show. They start around 8. They play till at least 1 in the morning. And there is, at midnight, always a gag. And no one really knows what that is. I mean, there are little hints to it. You'll see it in the merch and maybe on the tickets. And I saw something that may be pointing to a hockey theme tonight, but that's just a guess.
Exactly.
What's a gag?
A gag. So they sometimes, like last year, they had, I think, whales and squids kind of floating through the air. I don't know, Howie, what have been the best gags that you've seen at a New Year's Eve show?
Well, that was pretty epic. They had a giant whale and dolphins, and they turned Madison Square Garden into a aquarium. But years ago, they at midnight, they had snow blowers in the ceiling, and they made it snow inside the garden. And that was pretty incredible. Last year was really my favorite New Year's because it was something that all fish fans have been seeking for 30 years. They recreated, well, it's a story called Gamehenge, and they recreated it with actors from Broadway and dancers and everything. It was pretty amazing.
I have a buddy, Adam Davidoff, who's been to 418 Fish shows. He made the Maze David Bowie coins, which you flip to try and decide, which song it's going to be, because apparently they sound a lot alike. They come en masse to New York every year, and the smell of the city changes. You see them, the Wookiees all over the place, and it kind of changes the tone. But there's really an entire economy built around it, like there once was, with Shakedown Street and the Grateful Dead. What kind of promotions, what kind of shows, what kind of events are you building around these runs?
Yeah, so just from being a fan. And, fish fans want to keep the party going well after midnight. So back in the 90s, my concert company, we started to promote shows before Fish and after Fish. And it's really evolved quite a bit. So we do it at nearby venues. This year we have 11 shows. I mean, during the Baker's Dozen, when Fish played 13 nights at the Garden, we had 45 shows then, and we had cruises during the daytime, concert cruises during the daytime, and pre-parties and after parties. And so anyway, this year we have 11. We have 2 left today at Hill Country, which is on 26th Street near the Garden. There's a Grateful Dead cover band playing at 4. And after 1 a.m., we have a dance party with DJs from Fish Festival Radio called The Bunny, Tad Cautious, and DJ Cooley, with a very, very special guest, DJ Blender. I'm not going to reveal who that is, but just do a quick Google search of DJ Blender or just Blender, Sphere, and Fish, and you might see who that is.
I think I have a suspicion as to who it may be. Howie, I got to get you back on because I do want to talk about Cash or Trade. It's a fascinating app and business around getting face value tickets, as I said, that you're involved in. But I appreciate you joining us. I hope you have a great show tonight. Howie Schneid there from CEG Presents. So maybe I will go. Maybe I'll get a ticket.
Yeah, your wife. I'll see how that goes over at home.
Yeah. In terms of the markets, I guess
we're down on the day now.
We're down.
We're down. The Nasdaq is down 0.3% for the Nasdaq, and the S&P 500 also firmly down 0.2%. Anyways, Happy New Year! It's been a great year. One bad day doesn't hurt anybody.
Yeah, Happy New Year to both of you too, and hope to see you back here in 2025.
The top names at the Fed are on Bloomberg.
The median projection is 2 rate cuts next year. That makes sense to me. But we have to remain agile. Every meeting is live from the standpoint that you're debating, you're discussing, you're thinking what's the right level of policy. But my projection is that it will take many fewer rate cuts next year than we thought. But I'll watch the economy and see if that works out.
Nobody covers the Fed like Bloomberg.
If you look at Reels, Instagram and Facebook Reels, both immensely popular, both growing a lot, those are really working not because the short form video format is special and new. It's actually been around for a long time. You remember Vine and the early days of short form video. It's because of GPUs, it's because of large models, it's because of advancements in recommendation systems. ByteDance is one of the really great companies at this. We also have made an immense investment in harnessing the power of modern models, large data sets, and modern hardware, NVIDIA's hardware and our own hardware, to build recommendations that make the products better and more engaging. Our advertising system is built on modern AI recommendation technology. So I always think it's interesting when people remark that like AI just arrived. It's actually powering already today a huge amount of the engagement and quality of our products.
I'm Professor Hannah Fry, mathematician and writer. In this series, I will meet the companies, people, and pioneers transforming the world.
It's like the Jetsons meets the Flintstones.
Whatever future you dream of, if it affects us, I will explore it. The future is coming.
each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
You can have a baby anywhere you want. It's the environment and that care. That is what matters most.
Our investigation found some of the worst cases of harm were surfacing.
मुझे क्या पता कि भाला के चक्कर में मेरा ही बुरा हो जाएगा।
I never thought I would be vulnerable to a scam. This ruined me, and I didn't have any real good explanation for it.
Wildlife trafficking is almost always driven by greed.
Once you start focusing on money, you lose sight of what is best. That's where things go wrong.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
From the world of politics to the world of business, this is Balance of Power. Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. I'm Joe Matthew. It's the Tuesday edition, New Year's Eve. And as we head for the new Congress on Friday and a presidential inauguration only weeks later, we're going to spend some time this hour exploring the challenges ahead for all parties here with Bloomberg's Michelle Jamrisco, Republican strategist Lester Munson at BGR, and with our political panel. They're with us for the hour, all after we update Wall Street. It is the final session of the year. And Bloomberg's Natalia Konajevich is with us at World Headquarters in New York with the latest. Natalia, Happy New Year's in advance. Looks like we just gave up the gains.
That's right, and Happy New Year to you too. So the index is all now flipped into negative territory, although everything was trading in the green earlier today. So that would be the fourth straight day of losses. So for the S&P 500, the index is still trading below its 50-day moving average. About 19% of stocks in the index are trading above 50-day moving average. So that suggests that we are moving closer to an oversold territory. The only one index that was trading in the green today is the Russell 2000. That's the outperformer today. However, on a monthly basis, this is the worst performing index. It's down by 8.5%, and that's the worst performance since September 2022. Now, yields are relatively flat. 10-year yield is now trading at around 4.52. Bitcoin, quite a big move today, plus 3%, and that's the biggest gain in more than a week. As a result, we do see that some of those crypto-related stocks are moving higher as well. Now, commodities, they were higher across the board. Oil is moving up on headlines that China has increased industrial capacity, factory activity for a third straight month. That suggests more demand for crude. When it comes to natural gas, the picture is different. Here in the United States, futures are moving lower after a 16% gain yesterday. But overall, traders are really optimistic. I saw some really bullish positioning for future for February contracts. And European natural gas, it's moving up as this agreement between Russia and Ukraine expires today.
All right, Natalia, thank you so much. Look at that, Bitcoin approaching $95,000 once again. We'll get back with Natalia a little bit later on the broadcast to see where we are. As we bounce around a bit today on Wall Street, I'm Joe Matthew in Washington. Thank you for joining us on the Tuesday edition, the New Year's Eve edition of the fastest show in politics, as we spend some time with Michelle Jamrisco. As we said, the best of Bloomberg today on our final show of the year. It's great to see you.
Good to see you too.
A happy New Year in
Happy
advance.
New Year.
Let's talk a little bit about what we're winding down here. That would be, of course, this session of Congress, I think, already wound down. But then the Biden administration is on his way back with the First Lady from St. Croix today.
Even the president gets a vacation.
Well, I guess that's right. But what a couple of weeks he's got ahead of him. What's this going to be like?
Yeah, there's some uncertainty still, of course, but we do have some events on the radar. Obviously, President Jimmy Carter's funeral and services next week, and then the president heads out to Rome to have an audience with the Pope thereafter. So the timing on that will be kind of in flux depending on the services. But he will be taking that last foreign trip. We thought his last foreign trip might be Angola earlier this month, but now it's this one. But the geopolitics doesn't stop. That's the other thing that we're really keeping an eye on, of course. The Ukraine-Russia conflict, Ukraine very embattled at this point, especially in the winter months, as we've seen throughout this war. We saw yesterday the Biden administration pushing through billions more dollars in aid for Ukraine to kind of front-run what they see as kind of an opposite position from the Trump team coming in, as well as the Middle East still raging, and now China, kind of rearing up in the radar with all the hacking news and additional stress on TikTok and semiconductors and other items that are really straining that relationship again.
Well, there's a lot there. The last couple of weeks of this White House could be interesting, complete with potentially more pardons, as well as we've reported, potentially preemptive pardons.
Right, yeah.
But I'm glad you mentioned China. As the White House is focused on the Middle East, the potential for a ceasefire, which I don't know, the release of hostages that anyone sees coming before January 20th. China is named in a massive hack of the U.S. Treasury, reminding us of the challenge that lies ahead for the Trump administration with a big decision on TikTok, all happening, Michelle, at the same time.
Yeah, and this hack yesterday was one episode in a series of episodes around Chinese hacking allegations,
a lot of practice at this.
which we should say, do deny and charge the U.S. with being an instigator in all this. So it'll be interesting to see the fallout there. We're definitely following, what might come of that if there are more tariffs in order. But also the Biden administration making moves just days ago to investigate Chinese-made semiconductors is another way into trying to continue and cement the tension against China to kind of counter their rise, their adversarial moves. But this is going to come up really interesting, Joe. I mean, you mentioned TikTok.
Yeah.
The TikTok is a fascinating issue right now because of where Trump stands on it.
That's right.
And what it says about
if we know where Trump stands on it.
being against the hawks that he's got in his cabinet, Mike Waltz for National Security Advisor, Marco Rubio for Secretary of State, Elise Stefanik for UN Ambassador. I mean, all these people are very much opposed to relenting on any sort of, China relationship. And so we'll have to see how that plays out. And of course, TikTok, as you mentioned, day before he's inaugurated.
The 19th is the deadline.
Is the deadline. And we'll see if the Supreme Court weighs in before then.
That's right.
To reverse or kind of, alter.
Just think of what January is going to be like here.
Oh, it's going to be,
New Congress
fun.
starts Friday. The certification of the vote is, of course, January 6th, as we all know.
Right.
Presidential funeral for Jimmy Carter is the 9th. The inauguration is the 20th, the day after the TikTok ruling, and we're going to pack that all into 3 weeks. This is going to be something.
Well, and Trump is previewing a very busy first few days in office, so we'll see what takes precedence there.
Joe Biden will be at the inauguration. That's one thing we do know. Good to see you. Happy New Year. Thanks for joining, as always. Michelle Jamrisco reporting for Bloomberg here in Washington as we add the voice of Lester Munson, the Republican strategist, principal the international practice at BGR Group. Lester, great to see you. I hope you had a good Christmas, and welcome back, of course, to Bloomberg. I want to ask you about a lot of things, including the start of this new Congress, but your specialty is foreign policy, based on your years working with the Senate Foreign Relations Committee, and I wonder your thoughts about China and this evolving position that we're seeing Beijing take here ahead of Donald Trump taking office, knowing that there are across-the-board tariffs threatened. The most bipartisan activity in Washington is hating on China. Are they pushing back now?
Joe, I think we can't underestimate the importance of the domestic situation inside China. The Chinese economy is on its back foot. There's not a great scenario for that to improve in the near term. So the Xi Jinping administration, the Chinese Communist Party, is doing a bit of a scramble to kind of hold everything together while there's this change of power in Washington and of course changing dynamics around the globe. So as we're thinking about how Trump may approach China differently than Biden, and I think actually it's way more similar than it is different, we should be mindful of the pressures on Xi Jinping that he's dealing with to kind of keep everything together there inside China.
And to think he didn't take the invite to go to the inaugural, Lester, what's that all about?
You know, it seemed like a generous offer. You know, I'm sure something that President-elect Trump, once he's in office, will mention again to Xi Jinping. You know, why aren't you accepting my wonderful offer of hospitality? It is a notable thing for those who think that Trump will be the toughest president on China. That's an important lesson. What he's probably really looking for here is leverage for a deal. What does the deal look like? What does he want from Xi Jinping? Is it trade concessions? Is it security concessions? What is it? But Donald Trump is maximizing his leverage right now with carrots and sticks. So it's going to be probably the biggest story to watch on the foreign policy front for next year.
Is TikTok one of those carrots, Lester Munson?
TikTok, again, domestic politics. This time for Donald Trump, TikTok has tens of millions of users. They really like TikTok. People make money on TikTok. It is not without its price if you ban it. In other words, I think the president-elect, much like the current president, is kind of playing both sides of this issue. On the one hand, it's a security concern. On the other hand, it's not necessarily politically very popular to go after TikTok. So I think we're going to continue to see a muddle there.
All right, so bring me to the House floor on Friday. You know what it's like the first day of a new Congress. It's exciting. People are optimistic. People are feeling patriotic. Democrats and Republicans are getting along. The family members come by. Starting to get the idea it might not feel like that on Friday. What's Mike Johnson's day going to be like, and what's that vibe on the floor going to be, certainly for Republicans?
Well, Mike Johnson seems to have this. You're right, Joe. First of all, you're going to see a lot of babies and small children on the floor, and that'll make it seem a little bit like Disneyland or something. But when it comes to Mike Johnson's face, like he seems to have this beatific kind of look on his face all the time, like he's kind of floating above all the turmoil around him. He's already got one Republican, Thomas Massey, who says he's definitely voting against him. If there's two or three more, it suddenly starts to get very complicated for Johnson being in office. And if there is no speaker, what happens on January 6th when the House has to count the electoral votes to actually install Donald Trump as president? So the whole January 6th episode, which of course 4 years ago was catastrophic, takes a different leverage point now. And so I think Johnson, if he's being Machiavellian here, is going to be talking to his colleagues and saying, listen, if you want Trump to actually be president, you need to support me on the 3rd so we can do the necessary things on the 6th to get him into office.
Well, I think it's time to be Machiavellian if you're Mike Johnson. What is it about the Freedom Caucus and Donald Trump, though? Can't Trump himself start calling the Chip Roys and, well, you said Tom Massey's of the world and bring them over on this?
Joe, I think this is going to be like very quickly the big domestic story next year, which is Donald Trump is coming into office as a lame duck. These Republican members, whether they're Freedom Caucus or Freedom Caucus adjacent or MAGA or committed to some principles, are really starting to think longer term about their careers and how it's going to play out. If Trump himself isn't going to adhere to the MAGA principles, he's going to have a problem with those House members. So he's going to have a lot of more trouble than we think dealing with Congress, no matter who the speaker is. He's going to have more flexibility on foreign policy, which I think is why you see him talking about issues like Panama and Greenland and Canada and that kind of thing, because he knows this instinctively, that his kind of wider range of options is on the foreign policy side, not so much the domestic side.
He's coming in as a lame duck. Lester Munson says on the 31st of December, I can only imagine your inbox on days like these, Lester. Don't send me the emails. In our remaining moment here, though, Donald Trump does have a good amount of leverage. Would you say not more than John Thune or Mike Johnson?
He does. He's still going to be president, and he's still, the most fearsome or potent force in American or global politics, for that matter. So we shouldn't underestimate what he's going to be able to do here. But he's going to set the terms of the agenda for sure. But whether these conservative or libertarian or whatever you want to call them, Republicans, kind of the wild animal caucus in the House in particular, are going to be willing to go along with that is a totally open question.
The Wild Animal Caucus. We need to get Lester in studio again soon. Hey, Happy New Year, Lester. We went through a lot in 2024, didn't we? And I really appreciate all of your insights and perspective over the course of this year. Thank you and Happy New Year. Thanks for being with us again today on Bloomberg TV and radio. I'm Joe Matthew in Washington. By the way, Lester, happy birthday to Dad. He's 84 today. We'll have a lot more ahead. We'll assemble our political panel next. Jeannie Shanzano and Maura Gillespie are with us. Their take on the new Congress and what we're about to endure here in the month of January. It's going to be a stem winder in Washington. We'll go through it all together. Stay with us on Bloomberg TV and radio.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
In case you missed it on Bloomberg, The China Show.
What's been the sentiment? What's been the reaction to this U.S. election outcome on the ground?
They were pretty much ready for Donald Trump. There was a high expectation that he could return to the White House.
We have dealt with him before, and after quite a few years, China simply is better prepared, and China, psychologically speaking, is much more prepared in dealing with him again.
Probably are fully prepared for Trump to impose higher tariffs on China.
What's the tone as they were talking to really a global investment?
Right. The openness of China, including the capital markets, Hong Kong being an international financial center, will be extremely important in channeling global investors.
Don't miss The China Show live every weekday.
You missed it on Bloomberg Open Interest.
11 years ago, I bought a Bitcoin on this set.
It was $800.
Yeah, $800, but I spent the Bitcoin on beer and groceries and gas and video games.
And
I wish I had kept it. I wish I would buy a Harley today if I had.
Yeah, but you probably wouldn't be a TV anchor, and you probably wouldn't still be on this
True.
set. And what a joy that is.
I'd be my feet in the sand and the beer in my hand.
Don't miss the next Open Interest.
We need a strong, unified message because, candidly, the way it works, the Democrats are watching on the other side of the aisle. If they perceive weakness, they will take advantage of that, and we don't need that. In order for President Trump to have a strong agenda carried out, the House is going to have to be that first step. Getting Mike Johnson elected as Speaker, I think, will clearly get that done.
But will it be that easy? Our conversation, a portion of it yesterday with Chuck Fleischman, the Republican from Tennessee, congressman set to vote for Mike Johnson, clearly, but there are a couple of members of the Republican conference who are not. One we know for sure, Tom Massey, the Republican from Kentucky, but there are others making noise when you consider Victoria Spartz, when you consider Chip Roy and others. Mike Johnson only has 4 votes to play with on Friday, and we can't do anything until a speaker is elected. So we're about to do this all over again. Glad to say our panel is with us. Jeannie Shanzano, Bloomberg Politics contributor, Democratic analyst, and political science professor at Iona University, alongside Maura Gillespie, Republican strategist, founder and principal Blue Stack Strategies, a veteran of John Boehner's Speaker's office. Great to see you both. We talked about this a bit yesterday, the difficult math that is facing Mike Johnson. We also have to acknowledge, Maura, the number of things that are hinging on this vote. We've got a very busy January at hand, including, by the way, certifying the vote for Donald Trump, January 6th. And I want to pick up with you there, as we were just discussing with Lester Munson. Donald Trump cannot actually be the president unless we have a Republican speaker who can lead us to that point on the 6th to certify the vote. Is that the leverage that Mike Johnson needs to keep the gavel?
It's not the only thing, but to your point, there are so many things going on in Capitol Hill and on, in Congress that need to get done throughout this month. But really, this first year for the Trump presidency to be successful, they're going to need to have everyone in line. And these few outliers who are making demands, like Batyr Spartz and Thomas Massie, that's not helpful to not only the Trump presidency, but to the Republican-led government and Congress. And so for them, it's really important, I think for Speaker Johnson to reiterate that to the Trump team and let them know how, that's not helping them either. Will be important, that, as you mentioned, the certifying of the election. I think that there's certainly some irony there of the importance of that and making sure it's a seamless and smooth process. But that hinges on having a cooperative, base around you and having Republicans in the House all in line behind Mike Johnson, because the only other scenario then is to hope that a few Democrats aren't there and it becomes a numbers game if those four decide to stand firm against Johnson.
Jeannie, I talked yesterday with former Republican Congressman Denver Riggleman about this whole process. He's got his eyes on members of the Freedom Caucus who we've already mentioned, including Chip Roy. Here's what he said.
I think there are going to be some arguments. I don't think it guarantees Mike Johnson the speakership at all. I think if you look at Chip Roy, I think people forget Chip Roy certified the election. And Chip, was Freedom Caucus, and he went against most of the Freedom Caucus to do that. So I think, again, people need to realize, yes, Trump does control the party almost completely, but you do have people like the Chip Roys and the Thomas Masseys that are going to do what they're going to do.
Jeannie, that was right after Donald Trump issued his endorsement of Mike Johnson. But to Denver Riggleman's point, Chip Roy and others are going to be the ones, I guess, who make the decision on this. Aren't they Trump loyalists? Don't they want to advance to the certification on the 6th?
They do. And, we even heard that from Massie, who said, I support Donald Trump. But there is a but at the end of all of this, where, Massie is comparing the support amongst Republicans for Mike Johnson to Democrats backing Joe Biden before he dropped out of the race. And I think that encapsulates how many in the Freedom Caucus view support for Mike Johnson. And even look at Donald Trump's best friend living at Mar-a-Lago, Elon Musk, X'd his support and endorsement of Mike Johnson, but it was a very lukewarm one, because right after that, he then posted in response to Massie saying something like, you may be right, but we'll wait and see. So it's going to be tough. And Denver is absolutely right. There's very little room for Mike Johnson. And I also agree with what Lester said. I think Mike Johnson's best play here is to say, you've got to support me on the 3rd because we need to get Donald Trump into office. We need to certify these votes. I think that may happen, but after that, I think it is anybody's game. So it's going to be an uphill battle for Mike Johnson for sure.
What's your thought on this, Maura? Does Elon Musk, who, by the way, is now being accused of trying to influence elections in Germany in February through the X platform, backing the right-wing alternative from what we've seen here, does he have influence on a personal level over lawmakers, or is it simply his relationship with Donald Trump that has put him in this position?
I think it's both the relationship he has with Trump, but also the financial aspect of it, because as we learned in this past election, finances are important. I mean, think about how much money was spent on the 2024 election. It's almost jarring when you think about the debt that we have in this country to then look at those numbers of what was spent on a campaign. And so members of Congress have to think about not only the influence that he has over Trump and over decision-making and support. Elon has also said that he will primary and spend whatever it takes to get senators who oppose any of the cabinet picks out of office. And so Elon Musk is using his money and his proximity to the Trump world to, yes, play a role in how things shape out. And I think what is very concerning, just on a broad scale, whether you're Republican or Democrat, is the richest man in the world is now going to have essentially oversight and a firm hand in the most important government in the entire world, the United States. And that should cause everyone to take a kind of good look at this and think, okay, what does this what does this mean for us in the future? And what does this say moving forward that you let an outsider who is not elected official have such a prominent role in our decision making?
What do you make about Elon Musk's attempt to influence foreign elections here? Jeannie posts on Twitter, on X, an opinion piece that he wrote backing the right-wing alternative for Germany over the weekend. He's going global.
He absolutely is. I mean, I think it's clear that he felt like he had enormous success this time around. Really, to Maura's point, the role he has played is unprecedented, and it looks like he will continue to play that. And he wants to try to exert that influence increasingly overseas. He already does that technologically and in other ways, and he's trying to do it electorally. But, you know, there are limits to what he can do, even Elon Musk. And so you look at somebody like a Massey or a Victoria Spartz, or, you know, Chip Roy, they are more MAGA than Donald Trump. They are more MAGA than Elon Musk. If his stick is to primary them with his money, which it is, you've got to find somebody who's even more MAGA than these folks. And they're hard to find. So once their districts are locked up, all you can do is offer them carrots. And, you know, I think that's what we heard Andy Harris talking about, the chair of the Freedom Caucus. He wants Mike Johnson to commit to rules changes, you know, votes on amendments, you know, a healthy debate amongst Republicans before these things go to the floor. That's what happened last time around with Kevin McCarthy, and it is a disaster for governance.
I'm really glad you mentioned that, Jeannie. Maura, in our remaining moment, what's the deal? What's the deal going to be that unlocks this vote for Mike Johnson? And will it look like something that we saw in Kevin McCarthy's era that waters down the power of the speaker?
And maybe to open up the amendment process even further. It certainly won't be the one member can oust the speaker, that threshold. Right. I think that we learned that was destructive and counterintuitive to a successful Congress. So I think Mike Johnson has to play this as not only what's going to get him across the finish line here, but in the shortest amount of time, because they don't have much time to waste. Donald Trump comes in as a lame duck president, and this first year is the year they have to get things done.
Great conversation with our great panel. Maura Gillespie and Jeannie Shanzena will be with us for our second hour as well here on Balance of Power, with much more to follow. Thanks to you both. I'm Joe Matthew in Washington on this New Year's Eve edition. Can you imagine a year ago at this time, we were packing our bags for Iowa, right? On to Des Moines to start a presidential contest that didn't end exactly the way a lot of people had assumed. We'll have much more on this straight ahead on Balance of Power. Our conversation not only with our panel, but also Kelly Grieco, the military strategist, as we turn to geopolitics and what could be the last element of support leaving the United States for Ukraine. It's the Tuesday edition of Balance of Power, right here on Bloomberg TV and radio.
I think most investors are intoxicated by the opportunity in artificial intelligence. $160 billion being spent this year. That's just one data point. Another data point is a $3 trillion market cap for NVIDIA against $80 billion of sales on a trailing 12-month basis. Obviously, a lot of growth is expected for NVIDIA and for other businesses in the space, but that is yet to materialize, and it's impossible to know what the scale will be of an NVIDIA or other players in the artificial intelligence ecosystem. I think investors are just so focused on the opportunity set, on what it can be, and it's a self-fulfilling prophecy. If you bought NVIDIA a year ago or 2 years ago, you're pretty excited about where it is today, and you think that it could go to the moon. As a result, you don't really focus on the risks. You're sort of just too excited about the opportunity.
Top names in business are on Bloomberg.
The question is, if you lower taxes and use it to reduce the debt, the question is how stimulative those activities are, and that's where the Treasury Secretary appointee has got to figure it all out, because he's got to call the balls and strikes about how it all fits together. We got to realize that the impact we have if we don't get this debt back in line.
Nobody covers business like Bloomberg. Context changes everything.
If you look at Reels, Instagram and Facebook Reels, both immensely popular, both growing a lot.
those are really working not because the short form video format is special and new. It's actually been around for a long time. You remember Vine and the early days of short form video. It's because of GPUs, it's because of large models, it's because of advancements in recommendation systems. ByteDance is one of the really great companies at this. We also have made an immense investment in harnessing the power of modern models, large data sets, and modern hardware, NVIDIA's hardware and our own hardware, to build recommendations that make the products better and more engaging. Our advertising system is built on modern AI recommendation technology. So I always think it's interesting when people remark that like AI just arrived. It's actually powering already today a huge amount of the engagement and quality of our products.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
We're scaling up at incredible pace.
This region is growing so rapidly.
The opportunity is really huge.
Only on Bloomberg, context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg.
It's Balance of Power on Bloomberg TV and radio. I'm Joe Matthew in Washington. Thanks for coming along. The Tuesday edition. Happy New Year in advance. That means the final trading session of the year, of course, on Wall Street, and we are watching stocks tip a bit lower today. The S&P 500 down about 25 points right now, almost 0.5%. The NASDAQ down 125. But we are seeing a bit of a bump in the crypto space, falling some pretty significant losses over the past couple of sessions. Bitcoin up over 2.5% right now, holding back above 94,000. The 10-year note, by the way, showing a yield of 4.57%. We'll keep tabs on stocks for you in the remaining hours of trading, with a big story that you might have seen cross the terminal on what could be the last gasp of military aid for Ukraine to come from the U.S. It was just approved, just announced yesterday. And Bloomberg's Tyler Kendall joins us with more on this. Hi, Tyler.
Yeah, hey, Joe. So this is likely the last round of support for Ukraine that will come through before President Biden leaves office. Now, all of this money was already congressionally appropriated, right? Of course, you'll recall back in April when Congress passed that large supplemental security assistance package after what was months of negotiations. And ultimately, one of the people that was keeping those negotiations stalled was then Senator and now Vice President-elect J.D. Vance, who had historically been one of the staunchest opponents to Ukraine aid while he was in the Senate. Now, during those stalled negotiations, I actually had the chance to catch up with him and asked him about his reasoning behind his opposition.
We're actually sending weapons to Ukraine so fast that it's eliminating our ability to plan for a contingency in East Asia, in the Middle East, or something else that would affect our own national security. So it's good to make more American weapons with American workers and in American factories. It's bad to send them overseas at a faster rate than you're actually building them.
Right, so he's talking about there what's known as revitalizing the defense industrial base. There's actually a bipartisan push to do so, but how that gets done and where the weapons ultimately go is where people start to differ. But the Pentagon has said that this is a huge priority for them. For example, just this year, they invested more than $5 billion into U.S. factories who are ramping up the ammunition that we are sending to Ukraine. So we're kind of looking at this and what Vance has said previously about how the Trump administration might tackle this issue going forward. But Joe, on a broader level, I actually had the chance to catch up with some senior Army officials this year. I sat down with the U.S. Army Chief of Staff, General Randy George, the highest ranking military officer in the Army, and he told me that revitalizing the defense industrial base, getting equipment made faster and out the door is a huge priority going forward.
So we're changing how we train and how we operate. We're changing how we're organized. And what we've learned is we have to change how we buy things, and especially in the rapid, the areas where technology is moving very rapidly.
So when it comes to this week's aid package for Ukraine, it includes $2.5 billion in security assistance. The White House says that money will bolster long-term air defense supplies and other critical weapon systems. There's also $3.4 billion tied in there in what's known as direct budget support. That was announced by the Treasury and will go towards economic assistance for Ukraine. Now, Joe, since Russia invaded in February of 2022, the U.S. has provided more than $65 billion in security assistance, according to the Pentagon. And we know that President-elect Trump has said that he would like to see an end to this conflict, but the details on how that deal would come through and what that means for additional security assistance remains to be seen.
Fascinating. Great take. Thank you for the great reporting, Tyler Kendall, with us on Balance of Power. As we add the voice of Kelly Grieco with the questions that Tyler is presenting, we seek answers with the Senior Fellow for the Reimagining U.S. Grand Strategy Program at the Stimson Center. Kelly, it's great to have you back with us. From your perch as a military strategist and knowing what we have already seen, of course, take place in Ukraine, how impactful will this package be, if at all?
First, thank you for having me and Happy New Year. This is an expected aid package. It's an attempt by the Biden administration to send as much aid as possible before the next administration comes in. I think the impact it will have is more about trying to sustain current Ukrainian operations, and that will be helpful to some extent because we're hearing increasingly stories about artillery shortage in particular, but it won't do much. Ukraine is in a very difficult spot right now and is essentially slowly losing this war.
I spoke recently with Melinda Herring at the Atlantic Council on the prospect of buying different gear, and this came off of a question I was asking Melinda about a post that Elon Musk had made, suggesting we need to be investing more in unmanned technology, drones. This, of course, this conflict in Ukraine has reinvented the drone on a military level. Here's what Melinda Herring had to say about our purchasing requirements going forward.
Once the war in Ukraine is over, Ukraine is going to be the leading player around the world with naval drones and with long-range drones. And Joe, they have huge capacity. That's another story that's not getting enough play. So the Ukrainians in the last year have maxed up their drone capacity internally in Ukraine, and they could increase it by a 2/3 factor if they had more money.
What do you make of that, Kelly Grieco, the use of drones? Should we have been sending drones instead of other things like tanks and F-16s this whole time?
Well, I think the issue is we actually don't really have the drones to send, particularly the kinds of drones that Ukraine's using, these smaller quadcopters, these racing drones, and even some of these long-range drones at the price points and the way that Ukraine's using them. We just don't have those. Believe it or not, China leads this market. Most of the commercial drones on the market, if you were to go to Amazon and try to buy one, are made by a company called DJI. It's a Chinese company. So we don't have it to send. And this is actually an area where we are really behind China and is a national security concern. So I think we've been giving things that play to our strengths in terms of Ukraine. I don't think the F-16s was a wise decision, as we discussed, but things like artillery, anti-tank weapons have been very helpful.
I know you've had a very honest take on some of these programs, from the F-16s to the Abrams tanks. So let's talk a bit about what's about to happen. Donald Trump says he can solve this war on day one. We've seen a calcifying of lines in some areas. Some of Bloomberg's reporting would suggest that Russia's about to kick Ukraine out of the Kursk region. Who's got the stronger hand at the negotiating table?
Clearly, Russia has a stronger hand. As you suggested, they're pushing the Ukrainians in the Kursk region. They've captured about 40% of the territory that Ukraine took after August, and they're really pushing on Donbass. That's where I'm very concerned, is the Donbass region in particular. There's a major city in the center of Donbass region that's a major logisticals hub, and they're surrounding that, and it's likely to fall. And we're seeing in all areas that they're really just pushing that front in Donbass. So it's slowly but surely, you know, they're taking territory. It's very costly, but they're slowly winning this war. And so the Russians know that. And I think that they're going to play a very hard game in terms of any kinds of negotiations. I don't think we can end it in 24 hours. I think there's a good chance we'll see a ceasefire this year, but not a real peace deal.
Fascinating. So that could take more time. With that said, are the lines in place now, the lines that will be drawn in a peace deal?
Yeah, I think that's, you know, we've seen indications that that's probably going to be the case. Vice President Vance gave an interview in the fall where he suggested essentially a frozen conflict, freezing the territorial gains where they are. I think both sides recognize that. I think that's why, in particular, Russians are really pushing in the Donbass, even over Kursk and recapturing Russian territory. They're prioritizing Ukrainian territory to try to gain as much territory as they can before that freeze happens.
I want to ask you, Kelly Grieco, a little bit more about the DIB, as Tyler Kendall was just reporting, the defense industrial base. That was a big part of the debate here, right? Getting this money cleared was a big reminder for some Republicans who had an allergy to sending more money to Ukraine that most of that cash was going to stay right here in the U.S. to go to American-based defense contractors. But you just reminded us again of what we don't have. And in some cases, it's not just drones. It's old-fashioned stuff like shells, mortar rounds. What progress did this Congress make in fixing that along with our defense partners?
I don't think we made very much progress at all on these issues. You know, there are a couple issues here. One is that if you look at the budget, consistently we talk about munitions, the fact that we need munitions, especially long-range missiles. But each of the services tends to cut the missiles in their budget and prioritize sort of the flashier, big spending programs. And so that's just an easy place where every year it gets cut. And so that's not helping in order to putting these kinds of purchases with companies so they actually build these missiles we need. And the other area I would just say is in terms of Ukraine is that the kind of systems that are needed to fight a land war in Europe are very different from what's needed, for example, in the Indo-Pacific, where it's primarily an air and maritime environment. So even if we are making more artillery, for example, now, which is the case, it's not going to be all that useful probably if there's an Indo-Pacific conflict. So we really need to think about where the defense industrial base needs to be scaled up and how to do that.
That's a big conversation. I don't know if you see this administration getting closer to the mark on that, whether it's working with the Raytheons or the Lockheeds or General Dynamics of the world. What do you think? Is that a different story under a Trump administration than Biden?
I think it is. And I'd say I'm actually a little optimistic about this because one of the things we've seen is not for the big primes, the companies you mentioned. I don't know how well they'll fare under the Trump administration, but there are a lot of Silicon Valley people that are backing the Trump administration. We've seen some of the recent appointments to DoD leadership positions are being given to tech investors, defense industry executives. And so I think some of these newer startup defense techs are going to probably see a bigger role and access to actually more of the budget. And I think that would actually be a very good thing for the reasons Musk emphasized, particularly that we need more drones and uncrewed systems in the U.S. military. And these are the kinds of firms that can develop that and develop it quickly for the United States.
It's a really important point. As we spent some time with Kelly Grieco on the prospect for a peace deal in Ukraine, Bloomberg News sat down with Antony Blinken. Kelly, my colleague David Gura asked him about motivations at the bargaining table. Here is what we heard from the Secretary of State. This is just a couple of days ago on Bloomberg.
In his mind is the recreation of a greater Russia. And you don't have to believe me. Just read what he said. He's been very clear about it. He's failed in Ukraine. That proposition that he could erase Ukraine from the map, subsume it into Russia, has failed. And that's a result of the incredible courage of the Ukrainian people, but it's also a result of the dozens of countries that we rallied in defense of Ukraine.
Kelly, I won't ask you about the prospect of peace again, but you're a military expert, a military analyst, and I wonder if that is in fact his goal, the recreation of a greater Russia, what that means for Russia as a military presence and a superpower in the world.
Yes, I mean, it's clear that there's a notion here of some kind of greater Russia or at least increasing Russian influence in its traditional neighborhood. And there's particular sensitivities around Ukraine, in part because it's a natural invasion pathway into Russia, going back to the time of Napoleon. And so I think there is some truth to that. And I think the fact that Blinken is right, that he has failed in his goal in terms of taking Ukraine and bringing it into the Russian orbit. That has clearly failed. My criticism, though, to Blinken and the Biden administration is that it endorsed Ukraine's maximalist aims in this war of taking back every inch of territory and returning to its 1991 borders when that was never a realistic option. I wish they had been sending that message a lot more, that this was actually a victory for Ukraine and actually not falling in 4 days. And perhaps if they had really gone more in that direction and been a little bit more realistic about expectations of what could be achieved, Ukraine today would actually be in a better position to negotiate a peace.
We're out of time in 1 minute. Kelly, is all the money gone in this Congress for Ukraine?
Yeah, I mean, I would say it's gone. And the question is, will we ever see another bill like that? I'm not particularly optimistic.
I didn't think you would be. She's senior fellow with the Reimagining U.S. Grant Strategy Program at the Stimson Center. Kelly Grieco. Thank you so much, Kelly, for a smart year of analysis here on Bloomberg. We really do appreciate your take, as we learn something whenever we talk to Kelly Grieco about, of course, one of the most pivotal stories of 2024. We'll continue here on the fastest show in politics. Straight ahead here on Bloomberg. I'm Joe Matthew in Washington with much more to follow here on Balance of Power, the Tuesday edition. We'll have an update on Wall Street along the way. By the way, it's been a bit of a tough ride on this final trading session of the year. Stay with us on Bloomberg TV and radio.
You can have a baby anywhere you want. It's the environment and that care. That is what matters most.
Our investigation found some of the worst cases of harm were surfacing.
मुझे क्या पता कि भला के चक्कर में मेरा ये बुरा हो जाएगा.
I never thought I would be vulnerable to a scam. This ruined me, and I didn't have any real good explanation for it.
Wildlife trafficking is almost always driven by greed.
Once you start focusing on money, you lose sight of what is best. That's where things go wrong.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
The top names at the Fed are on Bloomberg.
The median projection is 2 rate cuts next year. That makes sense to me. But we have to remain agile. Every meeting is live from the standpoint that you're debating, you're discussing, you're thinking what's the right level of policy. But my projection is that it will take many fewer rate cuts next year than we thought. But I'll watch the economy and see if that works out.
Nobody covers the Fed like Bloomberg.
This is Balance of Power on Bloomberg TV and radio. I'm Joe Matthew in Washington. Thank you for spending some time with us on this New Year's Eve. We endeavor to lift the veil on Washington politics every day here on Balance of Power, part of the drive behind our Uncorking Washington series that we've brought you throughout 2024. Recently spoke with Fred Ryan, author of Wine and the White House, where we discussed how wine has been leveraged for diplomacy and entertainment by presidents over time, including this one, even though Joe Biden is a teetotaler. We sat down at the historic Decatur House, home to the White House Historical Association, and sat down over a bottle of Schramsberg, known as the wine of presidents, preferred by wine aficionados, including Richard Nixon. I'm Joe Matthew on Bloomberg TV and radio, and we're in the historic Decatur House in downtown Washington, D.C., just across Lafayette Square from the White House, and joined by a very special guest. Fred Ryan is with us, the man behind Wine in the White House, now in its second edition, as he adds to our conversation here on wine and diplomacy in Washington. Fred, it's great to see you. Welcome to Bloomberg TV and Radio. You're talking about something that's right up our alley here in a slightly different angle. We've been spending time on Embassy Row, talking about soft power and the use of wine and diplomacy. And the White House has its own brand, as you've been exploring here. And looking forward to digging into this a little bit with you. As I mentioned at the Decatur House here, we could be at the White House, but as you've learned, there's no wine cellar anymore at the White House. What's up with that?
Well, that was one of the big discoveries on this book. I thought about the importance that wine's had with all of our American presidents, and it's used in diplomacy. Yeah. And I saw the Queen of England has 38,000 bottles, or now King of England, 38,000 bottles in his wine cellar. The President of France has 18,000 bottles. So I'm thinking, we're America. I can't wait to see this. And it's a small, as you know, little closet. It's not even a cellar. It's a little teeny closet, pantry off the kitchen. And they only buy enough wine to be able to serve on an event-by-event basis. They have a few bottles in case the president's guest wants a glass of wine, but it's purchased on an event-by-event basis a few weeks in advance, and that's it.
Thomas Jefferson created what was the White House wine cellar, which I guess was a bigger deal at that point. And it's really interesting. He's credited with planting the first vineyards in America, the most wine-friendly president?
He was. When I did the research for this book, I found there were a handful of standout presidents that come to wine, and Thomas Jefferson was by far number one. And as you said, he never succeeded in making wine, but he planted the grapes and he'd hoped to make wine. He kept meticulous notes on every wine that was served in the White House. As you know, he was our ambassador to France before he was president, and during that time he traveled all over the wine regions, and he learned about all the wines of France, and he built the White House wine cellar. Because when he moved in the White House, he was the second president. Adams was the first president to live there, and it wasn't quite finished. And Jefferson said, where's the wine cellar? And there wasn't one, so he built one.
And helped to stock the wine cellar quite a bit from...
He did. He purchased a lot of wines. And, you know, I found when you look back, one thing that caught my attention was the amount of money that presidents were spending on wine. It was in the thousands and thousands of dollars, some meals.
This is for their own personal use or for state dinners? Or
they would, at that time, there was really no budget, so they would just supply the wine themselves. But I did find out, when you mentioned with the White House wine cellars, you know, when the British burned the White House, the cellar was destroyed, the wine was gone. And when the White House was rebuilt, 1,200 bottles of federally appropriate funds from federally appropriated congressional allowance for rebuilding the White House, 1,200 bottles were purchased with that money.
Was any of that for Chateau Yquem?
I don't know the Chateau Yquem, but as I shared with you in one of our conversations, Thomas Jefferson wrote to the owner of Chateau Yquem when George Washington was just elected president, and he said, we have a new president.
French.
Yes, one of the best in the world to this day, and this was, of course, you know, more than 2 centuries ago. He wrote and said, our new president likes wine, and I think he would like your wine. Can you send me some bottles of it? And he says, he goes on to say, how about 30 dozen bottles for the president, and send 10 dozen bottles for me.
That's a real wine lover here, hence the title. So the evolution of wine in the White House is interesting, and of course it ended up bringing American-made wines into the fold here. And I want to ask you about that because we first had to get through Prohibition.
Yes.
What happened to wine in the White House when alcohol became illegal, knowing the president at the time vetoed that law?
Yes, he vetoed it, and it was overridden by Congress. So here's Woodrow Wilson, who has his own wine cellar.
Setting out a bunch of wine.
And he is leaving the White House, and under the Volstead Act, which was prohibition, you couldn't transport wine. So what do you do with it? He's president, he's leaving, so he had to get special congressional approval to transport his own wine out of the White House. And then, of course, prohibition reigned for the next 2 presidents until FDR signed they released us from prohibition.
President Harding didn't seem to think it applied to him.
No, I was very surprised. I saw that even though the country was dry, the White House was not dry, and there were cocktail parties frequently, and there was even a report that Harding was having the Justice Department deliver wine that had been seized from the illegal transport to the White House so he could serve it to his guests.
Wow. This is why the book is such a fun read. So America emerges from Prohibition, and FDR turns to American-made wine. And we should note that we're enjoying a bottle here of the wine of the presidents, I think you call it. This is Schramberg, which President Nixon brought on his trip to China. Was that the real moment for American wines?
It was a major moment, and as I mentioned, there were certain presidents who stood out in their knowledge of wine, and Nixon was definitely one of them. And when he planned the whole trip to China, that historic opening, he gave a lot of thought about the wine that would be served. And he picked Schramsberg, in 1969 vintage. He had it put on Air Force One, flown over to China, and when they did what they called the Toast to Peace, it was Schramsberg.
Yeah, amazing.
And now every president since Nixon has served this wine at the White House.
This is pretty special stuff. It's actually method champenois, as they say, yes. Right? It's made like champagne in the bottle, but it's from California.
California, yes.
Pretty amazing. So President Nixon up there with Thomas Jefferson. Then there's Ronald Reagan, who you know a little bit about. You worked for him.
Yes, he was quite knowledgeable about wine, and he had his own interest. And then, of course, when he became governor of California, that was the time that the California wine scene was really arriving. And he made a point as governor of doing a lot to advance it. And then when he was president, he spent a lot of time also selecting the wines and leaned very much into California wines.
President Nixon, of course, as we mentioned, brought Schramsberg to China. He's also known for being a great wine lover, or was himself, to the point where, as you've explored in your reporting, he frequently would have his own special bottle of wine, and something that became known as pulling a Nixon.
That's right. Joe, there was this rumor, this story, that Nixon would pick a very nice wine for all of his guests, and then there would be a separate steward standing over in the corner with a different bottle that had a towel around the label so nobody could see it, and that would be an even better wine that Nixon had served. And I heard this rumor, and people denied it, and some confirmed it, and finally, Woodward and Bernstein, in their book, The Final Days, confirmed that Nixon would do that, and the term that evolved when you serve a better wine to yourself than your guests is called pulling a Nixon. And I think some of us have confessed that maybe at our daughter's weddings and other events we may have done that.
You never do anything like that, Fred. How about the non-drinkers? 3 of the last 4 presidents don't drink alcohol. Wine is still served.
It's served. It's such a part of diplomacy, ceremonial events. So even if the president is a non-drinker, or if the guest is a non-drinker, they'll still have the formality of a toast. They'll still serve the wine for the state dinner, but there'll be either alcohol-free wine or fruit juice or sparkling water or something else in the president's glass. And the team there, the social secretary and often the first lady, will take on the additional responsibility of selecting the wines for the state dinner.
How about that? It's not a real toast if there's water in the glass?
Well, technically, according to Joe Biden, has said that you're supposed to toast with your left hand if there's water in the glass, and your right hand if there's alcohol in the glass. So
that true? He puts a little ginger ale in the glass? Is that President Biden's routine?
I think a little sparkling water or ginger ale, anything that gives a little substance to it.
Interesting. Interesting as well to think that most modern presidents have served wine from their home state. Is there Delaware wine we're about to break out?
There is. This tradition, as you say, has emerged where a president will pick a certain occasion and serve wine, because all 50 states make wine, and some make it better than others. President Ford served Michigan wine at the White House for the first time and the only time that it was served, and President Bush served Texas wine, and now, of course, President Biden has the chance to serve Delaware wine, but it has the fewest wineries of any state, so his options are pretty limited.
I don't suspect that'll be when the French president comes.
No, that's
by the White House.
That's when we typically showcase our very, very best wines.
Well, I'm pretty lucky to be here with you, drinking the wine of presidents. Fred Ryan, I want to say congratulations on the book. Thanks for being with us today on Bloomberg, and cheers.
It's my pleasure. Thank you, Joe. Cheers.
And cheers to you for spending time with us here on Bloomberg TV and radio on this New Year's Eve. I guess it's on to wine from Florida next at the White House. We'll keep tabs on that, and I will not promise to not pull a Nixon later on this evening when the wine is served. Stay with us. We have a lot more to follow on our final show of the year, including a conversation with pollster Frank Luntz. He's up next on Balance of Power, the fastest show in politics on Bloomberg TV and radio.
I'm Professor Hannah Fry, mathematician and writer. In this series, I will meet the companies, people, and pioneers transforming the world.
It's like the Jetsons meets the Flintstones.
Whatever future you dream of, if it affects us, I will explore it. The future is coming.
In case you missed it, on Bloomberg, the China show.
What's been the sentiment? What's been the reaction to this U.S. election outcome on the ground?
They were pretty much ready for Donald Trump. There was a high expectation that he could return to the White House.
We have dealt with him before, and after quite a few years, China simply is better prepared, and China, psychologically speaking, is much more prepared in dealing with him again.
Probably are fully prepared for Trump to impose higher tariffs on China.
What's the tone as they were talking to really a global investment?
Right. The openness of China, including the capital markets, Hong Kong being an international financial center, will be extremely important in channeling global investors.
Don't miss the China show live every weekday.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
I think most investors are intoxicated by the opportunity in artificial intelligence. $160 billion being spent this year. That's just one data point. Another data point is a $3 trillion market cap for NVIDIA against $80 billion of sales on a trailing 12-month basis. Obviously, a lot of growth is expected for NVIDIA and for other businesses in the space, but that is yet to materialize, and it's impossible to know what the scale will be of an NVIDIA or other players in the artificial intelligence ecosystem. I think investors are just so focused on the opportunity set, on what it can be, and it's a self-fulfilling prophecy. If you bought NVIDIA a year ago or 2 years ago, you're pretty excited about where it is today, and you think that it could go to the moon. As a result, you don't really focus on the risks. You're sort of just too excited about the opportunity.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. I'm Joe Matthew in Washington. It's our final hour of the year together on the fastest show in politics. And we're going to spend some time ahead with pollster Frank Luntz, with presidential historian Barbara Perry, and with our political panel, Jeannie Shanzano and Maura Gillespie, both with us for the hour here as we cover the wind down for this year in Washington and, of course, the pickup that's about to happen in 2025. All after a look at Wall Street. Let's get tabs on what's happening this New Year's session. An update now from Bloomberg's Natalia Knijevic at World Headquarters in New York. Natalia, how's it look?
Hi, Joe. So it doesn't look really good. We can definitely say that we did not have a Santa Claus rally this year. Stocks erased earlier gains, now on pace for a fourth straight day of declines, but still on a year-to-date basis, it looks pretty good. The S&P 500 is on pace to post more than 20% return. Now, small caps, that's the biggest outperformer today. On a monthly basis, however, Small caps are on pace to post the biggest decline since September 2022. So then in the bond market, we see that yields are relatively flat, but still 10-year treasuries are trading at the highest level since May. Bitcoin is trading more than 2% higher. That's the biggest gain in more than a week. And then across commodities, we see that everything is in the green except for U.S. natural gas futures, which are down by 7%. That's on weather forecasts. Some analysts expect a little bit warmer than expected weather in the coming days.
Interesting, Natalia, as we watch what appears to be at least a brief unwinding, maybe a temporary unwinding of the Trump trade. How's Tesla holding up? I know it's one of the stocks you're watching on this final session.
Exactly. The stock is down today. On a year-to-date basis, it's up by more than 60%. The next big milestone for the company is January 2nd. This is when the company is expected to post its quarterly delivery numbers. Analysts surveyed by Bloomberg say that potentially it could be a record for the company, but it can still be below Tesla's 2024 target. But Elon Musk is really optimistic about 2025. He sees sales somewhere between 20 or 30% higher. Now, other stocks that I'm watching, Ralph Lauren, it was up, but now flipped into a negative territory. Analysts upgraded the stock, saying that they see stronger demand internationally, potentially coming from China, which is huge for luxury stocks. Overall, on a year-to-date basis, it's a really big increase, more than 60%. And finally, Sangamo Therapeutics shares fell by the most in 16 years after Pfizer decided to end partnership with the company to develop a new gene therapy.
Tough run there. Natalia Kinichevich reporting on the markets for Bloomberg in New York. Natalia, thank you so much. Happy New Year in advance. This is our New Year's broadcast, New Year's Eve, I guess. We're not going to be here tomorrow, so this is the last hour we're going to spend together at the end of a wild year in politics. Think of what we've gone through since the beginning of the year. From Des Moines, where we were packing our bags about a year ago right now, to Manchester, Super Tuesday, the early states, Butler, Pennsylvania, Milwaukee. Joe Biden drops out of the race. We're in Chicago. Straight through an election that turned so many expectations on their heads. And of course, it happened in a year in which we watched the Speaker of the House dispatched, fired by members of his own conference, and so much division that followed. When our great producers asked me, who would you like to talk with on the last show of the year? We didn't have to think very hard about it. I said, Frank. Frank Luntz, founder, CEO, FIL, Inc., political strategist. I'm supposed to say celebrity pollster too, right? Frank, it's great to see you. I hope the holiday season is going well for you. Happy New Year in advance. With everything that I just said, is our nation more or less divided now than it was at the beginning of the year?
Well, here's what's interesting. And you and I spent an afternoon in the freezing cold of Des Moines, Iowa. Your set was only 1 block from my hotel, and I almost didn't make it. And now we end the year still so angry, with half of America in disbelief and the other half celebrating, looking ahead to 2025 as being the best year ever. Are we divided? Yes. Are we polarized? Yes. Is there pressure to bring us together? Not really. Now, that said, let me give you 3 findings over the last few days. Number 1 is that Donald Trump's popularity, his favorability, is higher now than it was when he became president back in 2017. Number 2, there are groups within the electorate, particularly Latinos, younger men, union members, who are considering voting Republican more so now than they ever have in modern times. And number 3, the Democrats are divided as to what to do, how to move forward. And the only advice I can give them as we end this year is this idea of being the resistance is not what America wants. Even those that did not vote for Donald Trump don't want resistance. What they want is an alternative vision, an alternative approach. And everyone across America watching right now want results. Results that they can count on, results that are both meaningful and measurable. That's what the American people are asking for.
Well, so then would it be a misstep for Democrats to not help elect a Speaker of the House on Friday, knowing that Mike Johnson has 4 votes to play with, Frank?
Well, Hakeem Jeffries is one of the best communicators in America today. And he has the ability to reach across the aisle. Whether he chooses to, the answer is probably no, because he has a different point of view than the Republicans. And it's not the job of the Democrats to help the Republicans. That said, it would be a shock and to tens of millions of Americans a disappointment if the Republican Party, after waiting this long to have a president, a Senate, and a House, end up tearing themselves apart. The American people want you to stand up for your convictions. They don't want you to give up on your beliefs, but they even more so want to get things done. On immigration, they want to solve the border. On prices, they want to do policies that affect affordability. And they're just tired of this yelling and screaming in Washington, D.C. That's the message that they need to take home this New Year's Eve.
Well, so are we going to find a Republican conference that is united on Friday? Where, of course, that's the intrigue right now, is whether we're going to have multiple rounds. Maybe Mike Johnson can't survive the Tom Masseys or Chip Roys of the world, depending on how they end up voting. Or is there some real discord inside this Republican Party, despite the mandate that Donald Trump talks about?
There is discord, and when your majorities are barely over a minority, you have nothing, you have no give. And the fact is that the public does support most of the Republican positions. But mark my words, you can play this tape again, December 31st, 2025. If they do not solve the border issue, if they do not bring down and permanently address affordability, and if they continue to fight among each other rather than get stuff done, the public will punish them. On the reverse, or on the contrary, if they do solve these challenges, you can see a Republican majority for years to come.
Producers are pulling that cut right now, Frank, to play back a year from now. When you consider what we're left with here at the end of this year, I can't talk to Frank Luntz without getting philosophical. I just walked through a couple of pretty wild stages that we all experienced in the world of politics this year. They included 2 attempted assassinations. Of course, a lot of arguing, Frank, and a lot of uncertainty as we went into this election. What is the electorate left with? How do we feel? Where are the bruises and the wounds that could be exposed in the new year?
We have okay, I'm going to just make everything worse. So if you want to be excited and optimistic, you need to, I don't want to tell anyone to turn off their TV or their radio, but this is not going to go well for you. We have a lower degree of trust and confidence in our institutions than at any time in 40 years. We do not believe we're being told the truth by the media, by journalists, by the politicians, and the various elites in America. And finally, we are of the belief that the country is seriously off on the wrong track, although those numbers have begun to change in the last 2 months. I've been doing this now for over 35 years and have not seen a time of more anger and division. But what concerns me the most is 2 data points. A third of America don't believe that they are invested in the future of the country, and 2/3 of America believe that their country is not invested in their own future. That is horrific. We need to address that, not just for right now, but for the long term, because in the end, our economic success depends on it. Our political, our democratic institutions depend on trust and confidence. We have to get to the truth, and we have to do so now, because we've done so much damage to our politics and to our faith and confidence in the future. It's time to turn that around.
Well, let's talk about who's invested in America, because as we've discussed, Frank, you spent a lot of time at West Point, and you've conducted some fascinating conversations with the cadets there, focus groups that we can learn a lot from. You just had one recently that I had a chance to watch, and it was inspiring. And you asked the cadets in the room, tell me what you love about America. Here's a sample of what Frank heard.
Tell me what you love about this country.
The values, that we are a country built on values. We all here, officers and the cadets, swear an oath to the Constitution, that not to a president, not to a leader, and that the standard in America, because we're based on values, is set so high that we're striving towards more perfection.
So you just mentioned the Constitution. This is the single greatest misconception I think Americans have, is that they don't realize that that's where your oath is. What does the Constitution mean to you?
America. The Constitution means America because the Constitution is the very soul of America. That's what it is. When the Constitution and its ideas were first written over 200 years ago, it was an experiment. It was an idea. They didn't know it was going to work. Just like with the revolution, they had no idea if it was going to work or not. But they had the dream and they had the hope. And for me, that inspires my dreams and my hopes.
Our future leaders talking with Frank Luntz at West Point. Frank, short of our listeners and viewers all enlisting in the military on this New Year's Eve, what should they learn from this?
That there was a group of young people, and I swore I was not going to get emotional because it's the end of the year. I want you to have me back, but they inspire me, and they should inspire the country. Service with character and sacrifice, a commitment to the Constitution, not partisanship, not politics, but the most important document in global history. These cadets work harder, train harder, and make a greater effort for the country, and they do so because they love their country. And they will protect each other, and they protect us. Let me give you one phrase, the Army-Navy game. I wasn't too happy about the outcome this year, but this is the only game that is played where the people on the field commit to defend everyone in the stands and everyone watching. The people on the field will give their lives for the people watching. That's West Point. That is what makes America great, and thank God and God bless these cadets, because they are the best.
That you can bring this to us, Frank. They are indeed, and this is why we wanted to talk with Frank Luntz on our final show of 2024. Founder, CEO, FIL. Frank, Happy New Year. It's great to spend some time with you as always. I'm Joe Matthew in Washington. We'll assemble our panel next. We're not done yet. Jeannie Shanzano and Maura Gillespie holding forth as we count down to the new Congress and the new president on the fastest show in politics. This is Bloomberg.
In case you missed it, on Bloomberg Open Interest.
11 years ago, I bought a Bitcoin on this set.
It was $800.
Yeah, $800, but I spent the Bitcoin on beer and groceries and gas and video games.
And
I wish I had kept it. I wish I would buy a Harley today if I had.
Yeah, but you probably wouldn't be a TV anchor, and you probably wouldn't still be on this
True.
set. And what a joy that is.
I'd be my feet in the sand and the beer in my hand.
Don't miss the next Open Interest.
If you look at Reels, Instagram and Facebook Reels, both immensely popular, both growing a lot, those are really working not because the short form video format is special and new. It's actually been around for a long time. You remember Vine and the early days of short form video. It's because of GPUs, it's because of large models, it's because of advancements in recommendation systems. ByteDance is one of the really great companies at this. We also have made an immense investment in harnessing the power of modern models, large data sets, and modern hardware, NVIDIA's hardware and our own hardware, to build recommendations that make the products better and more engaging. Our advertising system is built on modern AI recommendation technology. So I always think it's interesting when people remark that like AI just arrived. It's actually powering already today a huge amount of the engagements and quality of our products.
The top names in business are on Bloomberg.
The question is, if you lower taxes and use it to reduce the debt, the question is how stimulative those activities are, and that's where the Treasury Secretary appointee has got to figure it all out, because he's got to call the balls and strikes about how it all fits together. We got to realize that the impact we have if we don't get this debt back in line.
Nobody covers business like Bloomberg. Context changes everything.
fastest show in politics on Bloomberg TV and radio. This is Balance of Power. I'm Joe Matthew in Washington. Thank you for spending time with us here on our final broadcast of the year, the final day of the year, and now our final panel of the year. Glad to have some time with Jeannie Sheehan Zaino, Senior Democracy Fellow at the Center for the Study of the Presidency and Congress, Bloomberg Politics contributor, Democratic analyst, joined today by Republican strategist Maura Gillespie, founder, principal, Blue Stack Strategies, veteran of John Boehner's Speaker's Office. It's great to have you both here as we think big thoughts on this last day of the year that might help us better understand what we're about to experience. Jeannie, I just was going down memory lane a little bit, at least recent memory lane, with Frank Luntz. You were there with us in Iowa, in Des Moines, when it was literally below zero, not a wind chill. And we shivered our way into the start of a campaign cycle that took some dramatic turns. Donald Trump's going to be sworn into office on January 20th. A Republican majority will be sworn into the House. We'll see if that happens on Friday. Most people think that it will, even if it comes with a few throws. And I wonder what the takeaways are for you as a political scientist coming off of such a tumultuous year that saw such deep divisions in this country. I'll start by asking you the same thing I asked Frank. Are they deeper now, or have we healed since this election cycle?
You know, I think the election results don't show much healing. I mean, just look at the numbers in Congress. They are so very tight. Republicans with a very narrow majority. So I think they remain. I think very little, in fact, has changed. It was a strange election because there were so many firsts that we all watched together and witnessed together. And yet, by and large, the electorate didn't change that much. And so we have a very narrow election of Donald Trump, of the Republicans in the House and Senate. And of course, they are excited that they control Washington. But with that comes an awful lot of responsibility. And that is where the rubber is going to meet the road. Can they deliver? Can Donald Trump deliver? Or is he pulled in the direction of the Freedom Caucus? And does he want to maintain his status as a disruptor? It's a very, very strange position to find himself in. And of course, coming in as a lame duck, it's very, very difficult. We haven't lived through anything like that in the recent history.
I don't know your thoughts on the divisions nationally here, Maura. Of course, you're a political practitioner, and you certainly know about the divisions here in Washington, even within the conference. And I wonder if you can explore that for a moment. Is this a real story, or are the media overplaying divisions within the Republican conference, specifically in the House, after what we saw happen to Kevin McCarthy this year?
So I think that the divisions nationally, to me, that actually shows more reflective of where the American people are. We're somewhere in the middle. The fringes may be the loudest voices, but by and large, the majority of the country is somewhere in the middle when it comes to political ideology. So to me, that actually makes sense of how close it is. That's a positive in some ways. But I think within the conference, yes, it's being exploited, and it will feed into the narrative of Republicans can't govern and they are just chaotic. If they don't get in line behind Johnson in a less than dramatic way, it would be helpful for them. Again, to kick off President Trump's presidency, really only has this first year to make a big mark, because then members of the House at least will be in campaign mode, and he'll be coming up on a midterms that'll really reflect about whether or not he's done a good job in that first year. So I do think the divisions in the Republican conference are most problematic, but there are plenty of issues in the Democratic caucus. You see that when AOC, Congresswoman, didn't get the chairman position, a lot of controversy around that, but it was not maybe as shared as much on news networks and different sources. But the Republicans have a lens on that because they are taking over the government.
Well, let's get into that, Jeannie, for a moment. In your party, it's a lot easier to be the opposition party, the party in the minority, than it is the governing party. The divisions inside the Democratic Party are real, though, with some pretty intense soul-searching coming off the losses we saw in this cycle. Will it impact legislating on Capitol Hill?
Yeah, to your point, I mean, Democrats being in the minority, they don't have the responsibility, they don't have the power to legislate by themselves, and so it won't impact. But to Maura's point, there are serious divisions in the Democratic Party as well. And I told you before, and I will reiterate it, I think it was a mistake for Democrats not to go with Alexandria Ocasio-Cortez for that position for a variety of reasons, but particularly since Democrats have a a really, really big challenge on their hands, as we saw in the election, when it comes to using new technology to communicate. And she does that almost better than anybody. And she has practiced that. And so I am not a big supporter of where she lands on a policy perspective, but from a communication perspective, as it pertains to critiques of the White House or the upcoming White House, I think she would have been a benefit to Democrats there. That said, they decided to go with the old guard. I think that's a mistake. And I think we will continue to see this. Part of the problem here is the way we run our elections. And unless we address these heavily gerrymandered districts on both sides, we will continue to see on both the Democratic and Republican side divided between these extremes and the more moderates that Maura was talking about.
And Jeannie Sheehan Zaino brushes up against the truth once again. Denver Riggleman, the former Republican congressman from Virginia, talked about alliances for Donald Trump in the House, Maura, and a question of whether the Freedom Caucus is in fact loyal to the MAGA president. Here's what he said.
You know, a lot of people call the Freedom Caucus the Trump Protection Caucus, but in reality, there are people there that are very idealistic, right? They're ideologues, and they also are going to do their own thing, and their districts are relatively safe. So as we get closer to the midterms, if things aren't tracking the way they want based on their ideology, based on what they're looking at as far as the deficit and the debt, you could see some issues.
He's making your point, Maura. I just wonder if we have a year before Republicans and Democrats start running for the midterms.
We may not. I think, you know, to what this conversation is about is when it comes to Freedom Caucus members, it goes back to this idea of it's so much easier to complain than it is to lead. It's so much easier to point the finger at somebody else than to actually take stock and take responsibility and be a leader and take a role in finding a solution. Finding a solution doesn't mean that you get to have your way, because if we went with whatever Thomas Massie wanted, it's just not feasible. You know, he wants to cut and slash and not spend anything. Well, that's just not possible. And again, bringing it back to being realist, you have to work across the aisle. You have to work and come to a common ground to find a solution. And that's what we should want our members of Congress, our leaderships to do. I think that we have certainly, you're going to see some members feeling the heat based on their actions in this first year, and they may have to start campaigning sooner than they would have planned to.
Jeannie, we haven't mentioned the President of the United States yet, and that's been happening in our panel discussions recently as Joe Biden winds things down. He's on his way back from St. Croix. How about that for a change, by the way? St. Croix to Delaware. That's the Biden's day today. But the next couple of weeks are going to be interesting to watch him as we consider the idea of preemptive pardons and him sitting behind Donald Trump as he takes the oath of office.
That's right. And, you know, we've been spending a lot of time the last few days remembering Jimmy Carter, who, you know, left office at 56 and had decades by which to establish or reestablish his reputation leaving office. Joe Biden does not have that time, arguably. And so he is going to be using the next few days, 20 days, to try to do what he can. And most of that action is behind the scenes, trying to move the Senate to pass his or to confirm his nominees to the judiciary, because that remains the one way in which a departing president can obstruct his successor's plans going forward. And that is what we're going to see. So the minute Donald Trump gets in office and tries to pass an EO or a directive to, say, address birthright citizenship, you're going to see a challenge in the courts. And it's going to be a court in the federal level that is made up of a lot of Joe Biden nominees. And of course, I should say that his trip back to Delaware, it sounds like what we should be doing, Joe and Maura, on the islands right now.
Yeah, we can take their place very easily, I feel like, on St. Croix. We could be there in time for our program on Thursday. I just don't see it happening. Maura, a lot has been said about Donald Trump's first day. We only have 30 seconds left. Is it the border EO that happens first?
I would think yes. I think that would be his best plan. Certainly not doing January 6 pardons. I think it would be the border and taking back some of control there and showing his voters that he is going to do what he said he was going to do.
So J6 pardons maybe on day 2. Maura Gillespie, great to have you. Blue Stack Strategies. Jeannie Sheehan Zaino, our own Democratic analyst and Bloomberg Politics contributor. Happy New Year to both of you. Thank you both for the insights all year and today. On this 31st of December, I'm Joe Matthew in Washington. We'll spend some time with presidential historian Barbara Perry coming up next on the fastest show in politics. It's Balance of Power on Bloomberg TV and radio.
investigation found some of the worst cases of harm were surfacing.
मुझे क्या पता कि भला के चक्कर में मेरा ही बुरा हो जाएगा।
I never thought I would be vulnerable to a scam. This ruined me, and I didn't have any real good explanation for it.
Wildlife trafficking is almost always driven by greed.
Once you start focusing on money, you lose sight of what is best. That's where things go wrong.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
We're scaling up at incredible pace.
This region is growing so rapidly.
The opportunity is really huge.
Only on Bloomberg. Context changes everything.
In case you missed it, on Bloomberg, the China show.
What's been the sentiment? What's been the reaction to this U.S. election outcome on the ground?
They were pretty much ready for Donald Trump. There was a high expectation that he could return to the White House.
We have dealt with him before, and after quite a few years, China simply is better prepared, and China, psychologically speaking, is much more prepared than in dealing with him again.
Probably are fully prepared for Trump to impose higher tariffs on China.
What's the tone as they were talking to really a global investment?
Right. The openness of China, including the capital markets, Hong Kong being an international financial center will be extremely important in channeling global investors.
Don't miss the China Show live every weekday.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
It's Balance of Power on Bloomberg TV and radio. Welcome to the fastest show in politics. One more left in us this year. It's our last meeting in 2024. And when we come back on Thursday, we're going to be staring down the barrel of a wild political calendar that's going to maybe redefine the work schedule here in Washington, at least for the month of January. It all starts Friday, of course, with the new Congress, and Bloomberg's Tyler Kendall has her eyes on the calendar. Tyler, what else is in store?
Joe, it's going to be an incredibly busy month. Just looking at January for Congress, as you mentioned, Friday, it's all going to kick off with the House Speaker vote that's happening on January 3rd. Of course, there's a clear front runner now, current House Speaker Mike Johnson getting that pivotal backing from President-elect Trump and also Elon Musk yesterday, throwing their weight behind him. It appears to be an attempt by Republicans to kind of align and unify behind a candidate, something that Republicans haven't really been known to do in this most recent Congress as they try to get ready to lift President-elect Trump's agenda off the ground. You actually spoke with Congressman Chuck Fleischmann about this earlier on Balance of Power, Republican from Tennessee, and I want you to take a listen here to how he kind of framed how Republicans are thinking about this.
We need a strong, unified message because, candidly, the way it works, the Democrats are watching on the other side of the aisle. If they perceive weakness, they will take advantage of that, and we don't need that.
After the speaker's vote, the next big date I'm going to put on your radar, Monday, January 6th. Of course, that's when Congress will count and certify the 2024 election results. Vice President Kamala Harris, in her role, will have to preside over those proceedings, much like Vice President Mike Pence did in 2020. The Secret Service has said there will be heightened security this year. I'm going to throw another date at you that might not have been on the radar. January 14th, that's the day Treasury Secretary Janet Yellen warned congressional leaders the federal government could hit its debt limit and the Treasury will need to take what's known as extraordinary measures to avoid default. Of course, the debt limit is what rattled negotiations this month to keep the government open. Now, of course, beyond Congress, we have the inauguration of President-elect Donald Trump. That's on January 20th. From there, it's going to be off to the races for Republicans. But I will throw another stat at you, which is that this current 118th Congress passed fewer laws since 1980. So we'll have to see if the 119th Congress can kind of change that. Before they get started, though, here in Washington, next week we will be preparing for the state funeral of former President Jimmy Carter. He's going to lie in state starting next Tuesday with the state funeral at the National Cathedral next Thursday.
Boy, there's a lot there. You're right. So that's going to be something. We come off the 6th, which strangely no one seems to be talking about right now, the first certification of a presidential vote since the January 6th riots. The very next day is when Jimmy Carter's remains arrive. So there'll be 2 days in which he is lying in state. That's the plan now.
Exactly. So lawmakers will be able, as well as the public, to pay their respects to former President Jimmy Carter, who will lie in state at the Capitol Rotunda on Tuesday and Wednesday ahead of the national state funeral that will take place on Thursday. We are expecting President Biden to deliver his eulogy. We are waiting on additional details, but we do know that there will also be public observances in Atlanta, as well as that when we are looking ahead, that the nation's capital will continue to remember former President Jimmy Carter. The flags will remain at half-staff during President-elect Trump's inauguration on January 20th.
With Joe Biden sitting right behind him, that's going to be quite a moment. Tyler Kendall, reporting for Bloomberg. A great year in 24. Tyler, thank you so much as we add the voice of a presidential historian at this important moment in time. Indeed, next month is going to be something. We're going to witness a lot of important moments together. Barbara Perry is no stranger to them, Director of Presidential Studies at the University of Virginia's Miller Center. She's with us now. Barbara, it's great to see you. Before we get into the throes of January here, I would love to get your take on that remarkable moment that we will witness, a presidential funeral, Jimmy Carter's funeral with Joe Biden, his friend, the first man in the Capitol to endorse him for president, delivering the eulogy. How fitting, in your view?
Very fitting, and I guess it does show the cycles of history and how one element so many years ago, so many decades ago, Joe Biden, and as he said in his remarks most recently after the president passed, he said, I told Governor Jimmy Carter that it wasn't going to really matter if I supported him because I was so new to the Senate at that time. But I just think that it ties those two men together in the old school of politics. Although Jimmy Carter was the fresh, new view and voice of politics in 1976, and so was Joe Biden, and so that the two should intersect at this moment and right before another historic moment of only the second president to be inaugurated for a non-consecutive second term. It's, for those of us who study history and presidential history, it's a real moment to reflect.
Well, and from the history repeats itself file, the idea that there would not have been a Ronald Reagan without Jimmy Carter, similar to the idea there would not have been a Donald Trump without Joe Biden, but of course, Barbara, there wouldn't have been a Joe Biden without Donald Trump. Won't that be going through your mind when you watch them both on the west front of the Capitol on January 20th?
It will, Joe, and I love to play out those what ifs. One little movement in history can reshape the world. I think it was Archimedes said, give me a lever and a spot of the globe and I can move the globe. And that's what this little series of steps or missteps, in fact, can cause a change in history. I've also been thinking about the fact that Jimmy Carter was unlucky enough not to have one appointment to the U.S. Supreme Court in his 4 years as president, one of only 4 presidents who followed fall into that unfortunate category as far as they're concerned. But he did name Ruth Bader Ginsburg to the Court of Appeals in Washington, D.C., which, as most people know, is a stepping stone to the Supreme Court. So in some ways, Jimmy Carter is responsible for Ruth Bader Ginsburg. And for those people who support her and what she did, you can say that's a good thing. But you could also say that what if she hadn't been there and therefore stayed on the court and therefore caused Donald Trump in a way to take over the court, all sorts of different decisions would be coming down from the court, perhaps. So great what if games. It's a parlor game for New Year's Eve.
As an historian, Barbara, what do you make of the fact that there is so little talk right now about January 6th? Denver Riggleman, the former congressman who was, of course, an advisor to the January 6th committee, was on the program yesterday. He said that goes for both Republicans and Democrats. Nobody wants to remember it. Nobody wants to relive it. And we're about to have the certification of the vote next week. How should we be looking at this for the first time in, well, since the riot?
First of all, former Congressman Riggleman was my congressman in the 5th District of Virginia, Charlottesville, where I'm based, although I'm in Louisville, Kentucky today. But, I actually don't agree with him on that. I think it would be as if we would say, no one talks about the Civil War anymore. Let's just put that behind us. Those who forget history are doomed to repeat it. Now, I'm not arguing that we will this January 6th, but I don't think we should ever forget what happened that day. But it appears that 70 plus million Americans decided to put that behind them and vote for Donald Trump.
Well, so is that just the process of compartmentalizing, or did half the country think that it was, in fact, a tourist jaunt through the Capitol?
I don't think half the country thought that. A major portion did, perhaps that third or now maybe a slightly larger proportion of people who say Donald Trump can do no wrong and did think it was just a nice tourist trip through the Capitol. But I think the other proportion of people who voted for him decided that that was something they could put behind them and that it didn't bother them enough not to vote for Donald Trump.
Boy. It's really remarkable when you consider the national dialogue from 4 years ago as we now walk into the next January 6th. Barbara, Donald Trump will address the nation on that day, on the 20th, from the west front of the Capitol. What will he say?
Oh, if I were only a soothsayer, I could make a killing in predicting.
Well, we remember a pretty dystopian speech on his first
Yes.
inauguration. Is that the Trump we're going to get?
I've given up predicting Donald Trump. I suspect a lot of that inaugural address will be formed by Elon Musk. And so, elements related to defense, elements related to America First, elements related to the common people. I think he'll be reaching out to them and saying that he's going to lower inflation and make America great again. And that's, I think, the theme that he will propound. But maybe it'll be in a slightly more positive vein than in 2017.
I think he goes into the White House and pardons the January 6th offenders on that same day?
I do. Yeah, he's said that that's what he's going to do. That I certainly believe that that's one of the truths that he has been propounding and that he'll make good on it.
So it's already in the water. I guess people won't be surprised. But how will that play nationally, having seen the reaction that we did, for instance, to Joe Biden pardoning his son Hunter?
It's sort of less personal, I guess you would say, for Donald Trump, and that these people aren't by kin or blood related to him, so it won't have that same impact. But on also the 70 plus million people who voted for Kamala Harris, and I presume many of those were very upset over what happened in the insurrection of January 6th of 2021. It will be shocking to think that those who so not only disrupted a constitutional process, but also attempted to tear down the very sacred precincts of our government and our politics, it'll be a sad day for them.
Well, we're about to see a new construct, if I can use that word, in this administration. And I picture Barbara Perry writing new chapters here on what it is to be the executive in this country. When you've got the Doge on one side, the Elon Musk, Vivek Ramaswamy experiment that is not actually a governmental department, and a series of czars who are going to be setting policy above and aside, I guess, the actual cabinet officials who are confirmed by lawmakers on Capitol Hill. Is Donald Trump about to reinvent the presidency?
I think so. And you spoke of a chapter that I could write. I did write a chapter in 2017 and 18 that's in a book that is called The Presidency and the Constitutional Crossroads that we believed at the Miller Center that we faced when Donald Trump was first elected. And I think he's made, if you think of a crossroads analogy, I think he's made a complete turn in our presidency and as an office, but also in our constitutional construct. That the founding fathers created our system of checks and balances and balance of power, if I may use that term, of three branches of government that were meant to be more or less equal and that would check and balance each other. This concept of a unitary president, which is seemingly all powerful under Donald Trump, will utterly upturn and upset and overturn, I think, the framers and their intentions to prevent what they had fought against in the Revolution against the King of England, and that was concentrated power. So that would be the epilogue to that chapter and the start of a new chapter for me to write.
What does that mean if you're serving in Congress, if you're the Speaker of the House, Mike Johnson, or you're the leader of the Senate, John Thune? That means you don't have the power you thought you had, Barbara.
Well, we saw, for example, just recently, and you mentioned this in the previous segment about the budget negotiations just before Christmas, that there were members of Congress who stood up to the president and to Elon Musk. And they were members of the president's own party, those 38 Republicans who said, no, I ran on budget. It was discipline. So I'm not going to vote to raise the debt limit. So there will still be some people who will try to hold the line in Congress. And I'm not arguing that everything Donald Trump would put before it would get through. But you also have mentioned the pardon power, which is his sole power, executive order power, which is the president's sole power. So it's a bit worrisome for those of us who support the Constitution and those balances of power and checks and balances.
Well, let's get you back in 2025 to talk about it, because it looks like, based on this calendar, the news is going to be fast and furious, Barbara. It's been a wonderful year comparing notes with you, and appreciate all of your insights in 2024. Barbara Perry, Director of Presidential Studies, the University of Virginia's Miller Center. Thank you so much for being with us here on Bloomberg TV and radio. I'm Joe Matthew in Washington. We're not done yet. On our final program of 2024, we spent some time with one of the more prolific commentators we talked to this year, Robert McWhirter, criminal defense attorney, on what is left in Donald Trump's legal saga, next on Bloomberg TV and radio.
I think most investors are intoxicated by the opportunity in artificial intelligence. $160 billion being spent this year. That's just one data point. Another data point is a $3 trillion market cap for NVIDIA against $80 billion of sales on a trailing 12-month basis. Obviously, a lot of growth is expected for NVIDIA and for other businesses in the space, but that is yet to materialize, and it's impossible to know what the scale will be of an NVIDIA or other players in the artificial intelligence ecosystem. I think investors are just so focused on the opportunity set, on what it can be, and it's a self-fulfilling prophecy. If you bought NVIDIA a year ago or 2 years ago, you're pretty excited about where it is today, and you think that it could go to the moon. As a result, you don't really focus on the risks. You're sort of just too excited about the opportunity.
The top names at the Fed are on Bloomberg.
The median projection is 2 rate cuts next year. That makes sense to me. But we have to remain agile. Every meeting is live from the standpoint that you're debating, you're discussing, you're thinking what's the right level of policy. But my projection is that it will take many fewer rate cuts next year than we thought. But I'll watch the economy and see if that works out.
Nobody covers the Fed like Bloomberg.
I'm Professor Hannah Fry, mathematician and writer. In this series, I will meet the companies, people, and pioneers transforming the world.
It's like the Jetsons meets the Flintstones.
Whatever future you dream of, if it affects us, I will explore it. The future is coming.
getting Donald Trump's support is going to really, really help close this deal. It's a deal maker. Without that endorsement, I was a little bit concerned for Mike Johnson. Now I feel very good about January 3rd.
Congressman Chuck Fleischman, Republican from Tennessee, talking with us right around this time yesterday about Donald Trump's endorsement of Mike Johnson to be the Speaker of the House in the new Congress, which is supposed to begin on Friday, assuming all things go as planned. It will. And what is typically a very festive day on Capitol Hill, but there are questions about whether Mike Johnson has the votes, with a couple of holdouts in the Freedom Caucus, Tom Massey specifically, but some others questioning their intentions here, their motivations on Friday, knowing that, well, Mike Johnson only has about 4 votes to play with, and not a single Democrat is going to be voting for Mike Johnson to hold the gavel. But once we get beyond the open of this Congress, it's going to be a very busy process, including not just writing legislation for the border or the Trump tax cuts, but confirming Donald Trump's team, his cabinet. And as we keep our eyes on the transition, we wanted to talk briefly with Bloomberg's Stephanie Lai, covering politics in the White House, having spent a lot of time on the campaign trail with the Trump team over the last year. Stephanie, it's great to see you. We're going to be in the throes of these confirmation hearings pretty quickly here, and I wonder which ones have your attention. We've been talking about Pete Hegseth, of course, to run the Pentagon, Tulsi Gabbard, DNI, and RFK Jr. To run the Health Department. Which one is going to have the most challenge in these hearings?
It's hard to say just yet, but it seems like, for the most part, all of the conflict that was surrounding Pete Hegseth had sort of died down after maybe the last 2 or 3 weeks, right before the holidays really kicked off. The news sort of shifted away from him as he and his team deflected some of the allegations that were posed against his candidacy. When it comes to candidates like RFK Jr. and Tulsi Gabbard, there is a lot of questions about what might come up, what senators might be posing as issues when it comes to some of their controversial views, some of their past alliances with certain foreign actors. It really is kind of a moving ball right now when it comes to what these senators are thinking and saying. But what we have heard time and time again is that it's going to be a thorough process, and they're going to try to make it as fair as possible, where they really do the American people a service by uncovering whatever they can find.
Well, you wonder the odds of all 3 being confirmed. Donald Trump has certainly been engaged with Mike Johnson, with John Thune, maybe to a lesser extent, Stephanie, but you've spent more time at Mar-a-Lago than most Americans. He's been not exactly in the public eye, just sending missives on Truth Social, getting on the phone with legislative leaders. Will that be the case until the inaugural?
It very well seems to be tracking with what he's been doing. You know, we're expecting him to host a nice New Year's Eve shindig at Mar-a-Lago tonight, invite some major and allies and people in Palm Beach. We even saw him put out a Truth Social where it seemed like he was inviting Elon Musk, and that was supposed to be a private message, but it ended up on his Truth Social account to this evening event. But right now, it really does seem like he's been kind of laying low, going golfing, you know, spending time with his members at his club, and that is likely going to continue until inauguration.
Bloomberg's Stephanie Lai with a big year ahead covering this new administration. Stephanie, it's great to see you. Happy New Year. And thanks for spending some time with us today on Balance of Power. I want to bring in the voice of Robert McWhirter in our closing conversation here on the broadcast, because we spent so much time with Robert this year talking about the legal travails of both Donald Trump and Joe Biden by way of Hunter Biden. He's a criminal defense attorney who could be a political analyst, I think, in anyone's book. Robert, it's great to see you. Welcome. There's actually a headline on Donald Trump's legal saga right now. The Federal Appeals Court upholding E. Jean Carroll's $5 million civil judgment against the president-elect. They wanted a new trial. Is he out of the woods?
No, he's still in the woods on that. I'm not sure when he will be sentenced on that, but the federal issues that he tried to raise going to the Second Circuit Court of Appeals were very, very weak. And this is still a state case, and the Federal Court of Appeals just wasn't going to wade in and help him from himself in this situation. So that's pretty much there. And I don't think the Supremes are going to take this one either.
Well, you and I talked about a lot of cases, Robert. There were 4 specifically, I believe. Of course, we had the Bragg case in New York. We went through the Jack Smith cases, if I can call them that at this point. We had Georgia, the documents, January 6th. My God, here we are. A couple of weeks before the inauguration of Donald Trump, doesn't have a mark on him after all of that. Did the media just get over its skis on Donald Trump's legal woes?
Well, I think it gets a little complicated to keep them all straight. Look, the bottom line is him becoming the president-elect, and he's going to take office, of course, on January 18th, really kind of puts a wrench in going forward with the cases, at least for now. It's very hard to maintain a prosecution against a sitting president, although not impossible. Remember, back in the civil case of Paula Jones versus Clinton, the U.S. Supreme Court said that case could go forward, and that's a civil case. Presumably, a criminal case is more important and more public import, so they presumably could go forward. But I think what's going to happen is everyone's just going to put a hold on this. Jack Smith has gone ahead and resigned because he wasn't going to give Donald Trump the satisfaction of firing him. And everything goes on hold until Donald Trump is out of office, either at the end of his term or if Donald Trump is impeached again and then convicted in the Senate. All these cases come back for him to face.
Now, okay, what does that look like, though? So we freeze everything in our game of musical chairs here on January 20th. Which of these cases, how would they be pursued? Would you need a new special counsel, for instance, to go after Donald Trump on the documents case?
Well, you probably would, and also the January 6th case, so the election interference, the federal election interference case. Now, the New York hush money case, what the judge could do is impose a sentence and then suspend imposition or when he starts to serve the sentence for after his presidency or when he's no longer president. So he could impose a sentence of, let's say, 6 months or whatever, or he could impose a fine and just suspend imposition of it. So the sentence just sits there and it waits until Donald Trump is amenable to actually serving the sentence. And that's the New York case. Presumably the same thing could happen in Georgia. See, Donald Trump has no control over those two. Now, with the federal cases, this raises the specter of can Donald Trump pardon himself, which I think is an utterly absurd reading of the pardon power. I mean, I don't know, if you're having an argument with your significant other and decide to pardon yourself, I'm not sure how far that's going to go. I mean, that's just going to be a problem, right? So the pardon is something you do for somebody else. It's not something you give yourself. But if he wants to push that, it's hard to see what mechanism could challenge it. My guess is Jack Smith, being the careful lawyer that he is, has probably wrapped all of this up in a bow and a package for somebody else to pick up at a later date.
Yeah, I don't think my wife would go for that, Robert. Yeah. I might try it to find out. But in our couple of minutes we have left here, let's talk about the pardons, not just the idea of Donald Trump pardoning himself. What January 6th rioters? Who else are we going to hear from when he moves back into the White House?
Well, he could do that. I think you're going to look for possible pardons of Peter Navarro and Stone. I mean, he already commuted the sentence of Stone. Anybody who's connected with him in his ambit, he's going to think that he should pardon. And that would be really absurd. I mean, these are clear cases of criminal contempt of Congress with the action of Peter Navarro. But if you're Trump's friend, that's all that really matters. And if you join in the kind of Trump litany about the 2020 election, you somehow are beyond reproach. So that's what could happen. The January 6th pardons are very interesting. There is a historical precedent for that. The first use of the pardon power was George Washington with Shays' Rebellion. And this was a protest, although they did not directly challenge democracy itself. But it was a protest, and it was put down. And in a way to kind of quell domestic insurrection and the continuing problems, Washington exercised the pardon power, which, by the way, as Alexander Hamilton wrote in Federalist 74, that is the use of the pardon power to get people past things and go on with the republic. Donald Trump could make that argument. The trouble is, unlike with George Washington, these are all Donald Trump's people, and he probably incited this riot and could be criminally prosecuted himself, which you could never say that about George Washington. So there's where the difference
We're going to have
lies.
to wait 4 years to find that out, Robert. It's great to see you. Robert McWhorter, come back and talk to us in the new year. Maybe we'll have to set a meeting for 4 years from now, because it sounds like we're going to have a lot of stuff on hold. Criminal defense attorney Robert McWhorter. Happy New Year, Robert. It's good to see you. Oh, my God.
You too, sir. Take care.
Let's get into the new year before we do the impeachment talk. Thanks for spending 2024 with us on the fastest show in politics. We watched the political world change together this year. Just imagine what we'll experience next. We'll be back Thursday with Kaylee Lyons at my side here on Balance of Power. Happy New Year. This is Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
If you look at Reels, Instagram and Facebook Reels, both immensely popular, both growing a lot. Those are really working not because the short form video format is special and new. It's actually been around for a long time. You remember Vine and the early days of short form video. It's because of GPUs. It's because of large models. It's because of advancements in recommendation systems. ByteDance is one of the really great companies at this. We also have made an immense investment in harnessing the power of modern models, large data sets, and modern hardware, NVIDIA's hardware and our own hardware, to build recommendations that make the products better and more engaging. Our advertising system is built on modern AI recommendation technology. So I always think it's interesting when people remark that like AI just arrived. It's actually powering already today a huge amount of the engagement and quality of our products.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Environment and that care. That is what matters most.
Our investigation found some of the worst cases of harm were surfacing.
मुझे क्या पता कि भाला के चक्कर में मेरा ये बुरा हो जाएगा.
I never thought I would be vulnerable to a scam. This ruined me. And I didn't have any real good explanation for it.
Wildlife trafficking is almost always driven by greed.
Once you start focusing on money, you lose sight of what is best. That's where things go wrong.
In case you missed it, on Bloomberg Open Interest.
11 years ago, I bought a Bitcoin on this set.
It was $800.
Yeah, $800, but I spent the Bitcoin on beer and groceries and gas and video games.
And
I wish I had kept it. I wish I would buy a Harley today if I had.
Yeah, but you probably wouldn't be a TV anchor, and you probably wouldn't still be on this
True.
set. And what a joy that is.
I'd be my feet in the sand and the beer in my hand.
Don't miss the next Open Interest.
And a very good afternoon, everybody, on this last trading day of 2024. We are live on Bloomberg Radio, television, YouTube, Bloomberg Originals, across our platforms. I'm Carol Master, along with Vonnie Quinn. It is December 31st, Vonnie.
I can't believe we made it, Carol, and you're all decked out in gold. I love it, especially.
I'm ready to party. I don't know about you guys.
You better stay till 5 p.m., though, with me.
No champagne until then. Let's get to it, guys, because you know, a stellar year for stocks, no doubt about it. It has been one for the bulls. Modest declines today. In fact, we're kind of hovering hovering near our lows of the session. It feels like maybe people are already done with 2024, thinking about 2025. And I've got to say, what we're going to do over the next 3 hours, that's our focus. Think about some of the major thematics of 2024, Vani, and really look into what maybe is coming in the new year. We've got an incredible amount of journalists around the globe and analysts around the globe. So we're going to talk about their beats and what's top of mind for them.
Yeah, and there were really just a few themes that stood out and just took the tape the whole year through. And every time we thought that they were perhaps, old hat, they resurfaced and they were continually the themes, right, Carol?
Yeah, I mean, speaking of artificial intelligence, right, or those GLP-1 drugs. So we're going to talk about that. We're going to talk AI and investing really with the CEO of Flexivity. He's actually settling into our studio as we speak. And then we're going to hear about the GLP-1 space from Eli Lilly's own CEO and also our own Bloomberg guru on this space. Madison Muller covers all of the twists and turns when it comes to these weight loss drugs over the last couple of years. So I'm curious to see what she says about the new year.
And not just the weight loss drugs, but the wider sector, right? It's going to be a very volatile year potentially for that sector. Healthcare in the news, it's been depressed, but we're going to have a whole new selection of people potentially regulating this space. And, also the insurers, what are they going to do post United Healthcare's death?
Yeah, I think everybody's wondering about what's going to come out of Washington and the new department heads and the new administration heads in terms of their specific sectors. Hey, also, I got to say, on our mind for the new year, folks, bank stocks. They have been on a tear with earnings just around the corner. They have definitely bounced off of the U.S. election, so we're going to talk about that as well. And then we're going to talk a little bit about China, Vani.
Yes. Is China turning a corner? Is there a corner to turn? Will it take another few years? Can Xi Jinping just turn it around in a heartbeat if he feels like it? Does he feel like it? All of these questions. We'll answer them all in the next 3 hours,
Yeah, we're also going to talk a little bit about gold versus Bitcoin. I mean, the comparisons continue. We talked about it, touched upon it yesterday. Should those comparisons continue? I mean, you take a look at a chart specifically of what we've seen in Bitcoin, man, it has been on just such a tear. So we're going to talk risks and rewards and talk about that trade.
And we have to leave a little time for resolutions as well, right, Carol?
Resolutions? Yeah. I don't know. Yeah, I do the same list every year. All right, let's talk a little bit about the market trade, folks. As we said, we're kind of hovering near our lows of the session. Let's get into it with our own Jess Menton, keeping a watch in these final few days of trading. And on this final trading day, it does feel kind of mellow, Jess.
It does, and especially because it's kind of like the last few sessions where if you were looking at the MOV function and looking at the biggest point decliners here, if you're thinking about the weightings, especially the Mag 7 stocks, I mean, NVIDIA is the worst point decliner here, but it still has rebounded a little bit from being in a bit of a correction earlier this month. But still, you have Apple, Tesla, Microsoft, Broadcom, and Amazon and Meta, and then Google. All of the top about 8 to 9 stocks are all housed roughly in the Mag 7, other than Broadcom, which some people refer to as Batman now. If you're trying to use a new acronym to throw that in, we're kind of in that phase yet. I don't know if it's caught on, but some people are trying to use it. But those are the ones really, if you're seeing kind of just going to the final trading day of the year, a lot of people kind of locked in some gains after that Fed decision.
That's what makes me curious, because we are seeing, a little bit of a sell-off today. Is there potential for a little buying right before the close?
And that's a good point, because we've seen some of that action into the close, and that's something that a lot of traders, especially technicians, like to see as far as what that tells if you're buying on strength rather than selling on weakness. So that still shows you that people are stepping in. And of course, if you look at the Mag 7 index just year to date, I mean, it's up 68%. Obviously, a lot of those gains are driven by none other than NVIDIA, the second best performer so far this year, behind Vistra, obviously also tied to the data center businesses. But the big thing going into next year will be the earnings picture as well, because Gina Martin-Adams and her team, they were looking at how it's supposed to, if you're looking at the bottoms-up consensus estimates for basically the S&P 500, right now it's around 13%, but where the S&P 500 is currently trading, it's actually roughly north of 20% for EPS growth. So basically, she's arguing that there's a divergence there, so either the bottoms-up estimates would need to double, or you're going to have those continue to have basically the earnings justify those valuations.
Speaking of earnings, we've got JP Morgan reporting on January 15th. I'm thinking about that. I mean, bank stocks, we're going to talk about that a little bit later with Sri Natarajan, what's top of mind, but they have really been performing since the U.S. election, and I am kind of blown away that this is one of the groups that is actually outperforming the S&P 500 100 and the NASDAQ 100 up 32% as a whole.
And that's a good sign because when we talk about financials in general, it's not just the bank stocks. You also have insurers, and then credit card issuers actually got moved into that particular industry group almost 2 years ago. So a lot of times it was the other segments that were outperforming. And also we've covered so much what was happening with the regional banks and say in March of 2023. But especially when you're seeing like this, that would show you that's continued strength there for the economy. You want to see bank stocks performing well.
And I think they also think the administration is going to be like, well, maybe we ease
regulations,
back a little bit.
Right, exactly.
And of course, they've been whiplashed by the Fed as well, right?
That's right, and especially when you're thinking about some of the stress tests and the different types of capital requirements, and maybe some of those types of potential easing type of policies that could come out of the new administration.
And of course, we had seen that huge sell-off after the Silicon Valley Bank problems, and we were really kind of in a depressed sector anyway, so there was room for them to outperform in terms of earnings and so on. But will there be a lot of consolidation next year, Jess? Is there an expectation for that?
It's almost like you're having a lot of people arguing that. So it's interesting when you go toward an end of the year and the calendar flips to the new year, and then you look back a year later, and especially the last couple of years, there was so much doom and gloom in 2023, 2024, even sell-side analysts notorious for getting those calls wrong, and they've still been playing catch-up. So they're still arguing for the S&P 500 to end next year, averaging around 6,500, but that's only roughly about an 8 or 9% gain from current levels. And to put in context, I mean, 5 of the last 7 years, the S&P 500 has been up double digits.
I don't want to get hate mail, but as you said, they don't really get it right, like when they make these calls at the end of the year for the next year. But we'll put that on the side. Hey, let's just finish with a final thought, because as Vonnie and I kicked it off, I mean, 2 of the big trades again this year that were top of mind for investors were those GLP-1 drugs. We'll talk about that later. But AI, artificial intelligence, that was a big momentum driver.
It is, and that's something that people underestimated the last couple of years. And even if you think about tech during the midst and the height of COVID, that powering us back to a bull market run. And the last couple of years, I mean, that's driven the 2-year bull run in stocks since October 2022. But the thing is this is the first time you've seen a bull market run like this where you haven't seen, say, the small caps and the value sectors of the market taking as much. Even Ned Davis had this. Actually, if you're looking at the performance for healthcare, real estate, materials, it's the worst bull market run for them just yet. But also their earnings projections next year are improving. So does that mean we continue to see it broaden out? We see and hear people talk about that a lot, but that obviously remains to be seen.
Jess, thank you so much. He's going to be back with us in about an hour's time to talk with the broader market. That is Jess Menton, our guru for everything stocks here and deputy team leader on the equities team. Well, of course, as Jess said, with AI being such a dominant market theme this year, let's turn out to someone deeply entrenched in the space who has been for a long time. Joining us in studio is Jan Salaji, co-founder and CEO of Reflexivity, formerly known as Toggle.ai. So, Jan, thank you so much for coming into studio this last day of the year. Curious as to why the market decided that 2024 was the year that AI started to fulfill its promise. It's been around for decades.
First of all, thank you for having me. Yeah, I think, what has happened is that the kind of AI, this large language models seem a lot more accessible, I think, to a lot of people. You're able to try something. When we talked about AI before and people talk about various forecasting methods, that seemed very esoteric, whereas now when you can go online and try ChatGPT, it feels like magic, but magic that you can touch and feel. So I think this is why it's become top of mind.
It is top of mind, right? And here we are in our second year of just kind of all things AI. Jan, I am curious, remind our world what you guys do, because you really work with financial firms, right? In terms of your platform helping to kind of, I don't know whether it's monetize, utilize, in terms of take advantage of AI.
Yeah, so our clients are primarily top hedge funds who are really looking to our platform to help them consolidate these vast sources of data that they have and take an idea.
They've always done, right?
Right. They have always done it. And obviously, as you know, since we're sitting in the Bloomberg building, they've been relying on Bloomberg in order to get access to that data. What they look to us to do is help them connect the dots, because the amount of data that there is to process is just enormous. And to give you a practical example, what you're able to do with a platform like Reflexivity is really dig deeper into an idea. So if you want to be long AI, NVIDIA and Microsoft might come to mind immediately. But then actually when you dig deeper, you think, okay, data center companies, you also want to belong maybe utilities that power those data centers. It is able to map out a much larger universe.
I am curious, and I want to ask you, because we obviously are all about data, and the larger the data set, the smarter the data set, you can really get an idea of trends. What kind of data do you have kind of some insight into as a result of, I mean, you work with Microsoft too, you work with the NASDAQ, you work with Interactive Brokers. What are you seeing? Because you mentioned, we've talked a lot about the AI trade that maybe it is thinking a lot more about the energy usage and what's that? What can you give us in terms of insight that you're seeing in terms of data flows?
That's a great question. In fact, yes, one of the things that you're now able to do is tap into not only into all of the kind of the time series data that has always been the bread and butter of forecasters and analysts, but also into unstructured data, so text documents, right? What are people talking about on earnings calls? What are people filing when they file company reports? You're able to really get a much better finger on the pulse of both the economy as well as interesting trends.
Yeah, and if AI is going to take the job of the junior Wall Street analyst, which you have said, when does that happen fully, and what do they teach at MBA school then?
Yeah, so I mean, the last time when I mentioned this, I think that I got some raised eyebrows, but I do believe firmly that I think in the next 5 to 10 years, we are in the business of building an autonomous investment analyst, and we think that that is...
Which is scary, by the way. That's a scary thought, an autonomous investment analyst.
And the goal is that along the way, you really are building a set of superpowers that you're giving to a portfolio manager, to a CIO, and so on, that helps them tap into that data. And I think what you'll see on that time horizon is just a much bigger presence of that kind of intelligence, because again, there's nothing that says that humans should be the best at trading.
I do wonder if it's the same as like venture capital. Like venture capitalists don't necessarily have the time to look at kind of all of the proposals that come across their desk, especially maybe smaller deals. And I wonder if that's the same for the analyst community. We often, we track analyst coverage, and some of those smaller or mid-cap names where there isn't that much coverage. How does AI maybe give us some insight into some of those firms and maybe investment opportunities?
Yeah, so again, exactly spot on, which is that with the large language models as kind of the interface with which you're able to communicate, it also makes it much easier for you to tap into the whole power of cloud compute, meaning that you can say, this is what I'm interested in, and then rely on the engine to be monitoring a much vaster universe of market data, right? What's happening here? Something where a tree falls in the forest and you wouldn't have known, but now you do because the forest watches itself.
But how do you account for the better information versus the worse information? I mean, there is so much rubbish, frankly, online.
Yes.
Can you take that out of the language models?
So the first thing that we did at Reflexivity is that we constrained the data that it has access to, right? So it can't just go out there and basically find some crazy blog somewhere that you cannot verify. It has access to data that we have checked for integrity. It has access to data that investors are familiar with. It's just able to go through it much faster and highlight things that you wouldn't have the time to do because you only have so much.
Does that mean, essentially, just got about 20 seconds left here, that there's so much information out there, certainly in the social media world, that there is a way of AI not only kind of complicating the space with even more information, but identifying bad information, good information. Do we get to that space?
I think we will definitely get to that space. I think, again, if you compare to what happened pre and post Bloomberg basically took a lot of information, made it more accessible. I think AI is going to take a lot of information and be able to do that kind of parsing, good versus bad.
All right, it's going to be another interesting year, no doubt about it. Jan, thank you so much. Happy New Year.
Thank you. Happy New Year.
Really appreciate it. Jan Szilagyi, co-founder and CEO of Reflexivity, joining us right here in our studio. All right, everybody, we're going to continue thinking about the year that was and the year ahead. Coming up, the S&P financial sector, man, it saw gains outperforming the broader market, up 28% in 2024. So what lies ahead for Wall Street in 2025? That's coming up next. Carol Master, Vonnie Quinn, and this is Bloomberg.
Top names in business are on Bloomberg.
The question is, if you lower taxes and use it to reduce the debt, the question is how stimulative those activities are, and that's where the Treasury Secretary appointee has got to figure it all out, because he's got to call the balls and strikes about how it all fits together. We got to realize that the impact we have if we don't get this debt back in line.
Nobody covers business like Bloomberg. Context changes everything.
In case you missed it on Bloomberg, the China show.
What's been the sentiment? What's been the reaction to this U.S. election outcome on the ground?
They were pretty much ready for Donald Trump. There was a high expectation that he could return to the White House.
We have dealt with him before, and after quite a few years, China simply is better prepared, and China, psychologically speaking, is much more prepared in dealing with him again.
Probably are fully
fully prepared for Trump to impose higher tariffs on China.
What's the tone as they were talking to really a global investment?
Right. The openness of China, including the capital markets, Hong Kong being an international financial center will be extremely important in channeling global investors.
Don't miss the China Show live every weekday.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
We're scaling up at incredible pace.
This region is growing so rapidly.
The opportunity is really huge. Only on Bloomberg. Context changes everything.
Welcome back to Bloomberg Markets, the special 31st of December edition with me and Carol Masser. Well, we are trying to eke out some gains, but for the moment, the S&P is still down about 1/3%, the Dow down about 0.1%, and the Nasdaq 100 down 0.7% to continue the drop into year-end. Bank stocks, though, have been outperforming both the S&P 500 and the Nasdaq 100 this year. The share is taking off big time since the election on expectations of maybe fewer regulations for the banking sector. Can that momentum continue, though? For more on the outlook for the financials, we're joined by Bloomberg News senior finance reporter Sri Natarajan. So, Sri, since the election, also a little bit more relaxation post the Silicon Valley Bank collapse and so on. Everything looks to be going right for the banks. Does that continue past January 20th?
I mean, certainly, if you looked at the first week right after the election results, you saw the impact on bank stocks. They all soared. It is important to point out that in the 6 weeks or so since that point, they have given up half their gains. It's still up, but not as high as they were right, say, around November 10th. Having said all of that, just look at the results this year. Look at the stock performance for some of the biggest banks. Goldman Sachs up almost 50%, JP Morgan more than 40%, Wells Fargo 43%, Citigroup, which is a turnaround story, also up 35%, Jefferies, pure play investment bank, up 95%. So clearly, if you had to look at stock price movement as an indicator for what the future holds, what it's telling you is that 2025 is going to be a really good year for the big banks. And the reasons are sort of clear. Even without the election result, we were entering the election result going the way it did. We were entering a phase where, after a very difficult and challenging deal-making environment, capital markets were opening up again. Deals were starting to resume, and yet they're below their long-term averages. So the expectation certainly was that is going to rise up. Now, with the new Republican administration in place, and the belief that there will not be that many blockades from regulators for the kinds of deals being proposed, that activity should certainly rev up. Pair that with all the talk we've heard around lowering taxes and deregulation, or at least not more regulation, and regulation is certainly a big part of the puzzle, piece of the puzzle when we think about what will affect banks next year. It all points to a very rosy environment for banks. Yes, there are crosswinds out there, and an unpredictability of a Trump 2.0 cannot be discounted, even if on the surface all the noise we're hearing is something that sounds that it'll be really favorable for banks. Net, I think all the CEOs would ring in the end of this year, would walk into 2025 with a lot of confidence and optimism on their side.
Is it a case of, rather than a perfect storm, like a perfect sunrise, if you will, for banks in terms of M&A activity, markets may be expected to do well overall? I mean, just kind of pick your business, and it's expected to be pretty upbeat. So fundamentally, it's a lot of different things that should support them next year.
Certainly, if they were to wake up tomorrow morning and open the blinds, you would hope, and they would hope, that they are expecting to see a perfect sunrise. Having said that, how often does expectation truly mirror reality?
Yeah.
And yes, they were all sort of pinned up and juiced up and boosted up on the optimism. You still have to be mindful of the fact that, yes, you can have a greater deal-making environment, but what company executive would want to be gung-ho on all sorts of deals when they don't know whether tariffs in one sector, what they would look like today versus 6 months down the line versus 9 months down the line.
Right.
So some of that cannot be discounted. But again, going through having gone through the last 2 years and seen how it was and how difficult it was in some ways, especially since the craziness and the frothiness of 2021, it's not really been a great environment. And the fact that the consumer health is stable. Look, we've talked a lot about capital markets and investment banking, but the other big part of the equation is the health of the economy, the broader consumer economy. And really, we haven't seen signs of that falling off a cliff. That has been pretty stable and steady. If that changes, that could be a big spanner in the works. But again, we're not really seeing any reason for bank executives to be staying up all night worried about that just yet.
Sri, the earnings season starts with JP Morgan in 2 weeks. What will investors want to hear on those conference calls? What will be the magic words?
Well, the first magic words will be a recap of 2024, which has looked exceptional for all the banks. So that will be an easy one to tick off. But what investors will be really curious about, and one piece that I'm very interested in, is the kind of commentary we hear around net interest income, largely because we thought the boon that the banks got with their NII and the NIMs going up when rates went up, and there's been some catching up in terms of what you have to pay depositors, but generally higher rate environment has been good for NII. Now the expectation has been you're going through a period of rapid rate cuts, and that will go down, and the boost and the benefit from that will go down. However, if you listen to the most recent commentary from the Fed, they are keeping a watchful eye on what the Trump administration policies will do to, say, inflation, the effect of tariffs on inflation. Will there be a real effect? And you're already hearing or getting a sense that rate cuts will not be as rapid and precipitous as we once thought, which again, I would have to think is a beneficial piece of the equation for the banks.
All right, going to leave it there. It sounds like some optimism, but certainly we'll be keeping a close watch to see if anything changed that. There's a lot of things that can come at the big banks. Sri, thank you so much. I always appreciate your reporting. Bloomberg News senior finance reporter Sri Natarajan joining us in studio. Quick headline, Nippon Steel offering President Biden a new U.S. steel proposal. We know we've talked about that a lot in 2024, about them getting together. This is coming from the Washington Post. All right, back to bank stocks, just talking about it. Outperforming, as we said, this year, the broader market. A big question mark, though, on the minds of some of those major big banks and financials right now is what's going on in China. The Golden Dragon China Index, you might know, just up about 5% so far this year, but up about 26% since late summer. This is after several stimulus efforts were implemented in the back half of 2024, and they continue to be announced. Earlier today, the country saying it was raising salaries for its government workers to try to increase spending. And Chinese President Xi coming out saying support for the economy will continue in the new year. Some signs of green shots, perhaps, or green shoots, I should say, perhaps. China's factory data out today also showing expansion. But one area that is important to watch, and that is Chinese luxury spending. Bloomberg's China correspondent Min-Nin Lo breaking it all down for us.
This 5-story Louis Vuitton flagship store in Beijing was supposed to open its doors to shoppers in early 2024. LVMH CEO Bernard Arnault told Bloomberg he was optimistic about the group's growth in its largest market.
I am always optimistic, and the people have often concerns which are not materialized.
But now, sources say the store may not open until as late as next year. The slow progress is symbolic of the challenges European luxury brands face in China. LVMH shares have plummeted since the start of 2024, revealing the scale of the slump in demand from Chinese consumers. Another luxury group, Kering, warned that its annual profit will fall to the lowest level since 2016 due to weak Chinese demand for designer bags and clothes. Prestigious watch brands like Richemont, the group behind Vacheron Constantin and IWC, and Swatch Group, owner of Omega, are also affected. Swatch shares tumbled this year after sales in China, which account for about a third of its revenue, fell sharply.
Many watch manufacturers
are dependent, really dependent on China, generating 40-50% of their sales.
This pullback in lavish spending is hitting some of the world's richest. LVMH CEO Bernard Arnault's fortune tumbled from the top spot in the Bloomberg Billionaires Index. Founder of Kering, François Pinault, fell out of the global 100 richest. Shoppers in the world's second-largest economy are shying away from excess buying as Beijing grapples with low domestic consumption and a shaky property market. President Xi Jinping's government has rolled out a series of stimulus measures to boost sentiment. Bloomberg Intelligence says China's luxury goods sales and the downturn in the industry may reverse in the second half of 2025 if Beijing continues to roll out economic support. Min Min Lo, Bloomberg News, Hong Kong.
And that was Min Min Lo there of Bloomberg News. These U.S. steel headlines, extraordinarily interesting, right, Carol? We see the shares extending their gain now. The Washington Post reporting that a new idea has been put forward that Nippon Steel will be offering President Biden a veto over U.S. steel output cuts.
Yeah, exactly. Giving the U.S. government a veto over any reduction in U.S. Steel's production capacity. This is, again, a last-ditch effort for President Biden's approval to acquire U.S. Steel by Nippon Steel, according to a document that was sent to the White House on Monday. So continuing to watch U.S. Steel shares, as you said, jumped as much as 7%, now still up about 3.5%, Vanya.
Yep, another effort to appease CFIUS on that one. All right, coming up, we're going to talk about safe havens. There might even be the case for a new type of one. This is Bloomberg.
I think most investors are intoxicated by the opportunity in artificial intelligence. $160 billion being spent this year. That's just one data point. Another data point is a $3 trillion market cap for NVIDIA against $80 billion of sales on a trailing 12-month basis. Obviously, a lot of growth is expected for NVIDIA and for other businesses in the space, but that is yet to materialize, and it's impossible to know what the scale will be of an NVIDIA or other players in the artificial intelligence ecosystem. I think investors are just so focused on the opportunity set, on what it can be, and it's a self-fulfilling prophecy. If you bought NVIDIA a year ago or 2 years ago, you're pretty excited about where it is today, and you think that it could go to the moon. As a result, you don't really focus on the risks. You're sort of just too excited about the opportunity.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
If you look at Reels, Instagram and Facebook Reels, both immensely popular, both growing a lot, those are really working not because the short form video format is special and new. It's actually been around for a long time. You remember Vine and the early days of short form video. It's because of GPUs, it's because of large models, it's because of advancements in recommendation systems. ByteDance is one of the really great companies at this. We also have made an immense investment in harnessing the power of modern models, large data sets, and modern hardware, NVIDIA's hardware and our own hardware, to build recommendations that make the products better and more engaging. Our advertising system is built on modern AI recommendation technology. So I always think it's interesting when people remark that like AI just arrived. It's actually powering already today a huge amount of the engagement and quality of our products.
Morning from our world headquarters in New York, I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday, only on Bloomberg. Context changes everything. The top names at the Fed are on Bloomberg.
The median projection is 2 rate cuts next year. That makes sense to me. But we have to remain agile. Every meeting is live from the standpoint that you're debating, you're discussing, you're thinking what's the right level of policy. But my projection is that it will take many fewer rate cuts next year than we thought. But I'll watch the economy and see if that works out.
Nobody covers the Fed like Bloomberg.
TradeMasters top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
All right, everybody, welcome back to Bloomberg Markets, a special edition, cross-platform on radio, TV, YouTube, and Bloomberg Originals. Carol Master along with Vonnie Quinn. It has definitely been a mixed year for metals, but gold, man, it's not been a mixed case for that. It definitely gets the gold star. Commodity is headed for its biggest gain in 14 years, fueled by U.S. monetary easing, geopolitical risks, and also central bank purchases. There's been a lot of factors at play. Bloomberg's intelligence senior commodity strategist, Mike McGlone, joining us now to break down what has happened in 2024 and really look ahead to the new year, as well as maybe kind of measure it against another asset that's soared in a much bigger way, Bitcoin. It's kind of the battle between gold versus Bitcoin. Mike McGlone, good to have you back with Vonnie and me again on this Tuesday, our last trading day of 2024. Talk about the run-up in gold and how you continue to think about it against Bitcoin.
Well, gold has taken the gold versus the S&P 500 this year. As of now, it's up about 26% on the year. S&P 500's total returns around 25%. That's not a good sign for liquid assets, but the Bitcoin obviously is outperformed. The thing I worry about with Bitcoin is I love to watch that Bitcoin to gold ratio. Right now, it takes about 36 ounces of gold per one Bitcoin. That's about the same as the peak in 2021. That's a problem. It's not inching higher, and typically this ratio would lead the market. So I'm worried that next year, I'll make one prediction right away, that we will get a 10% correction in S&P 500, not very profound, we used to get that all the time. And when that happens, then we'll really see the beef of whether Bitcoin is a risk-on or risk-off asset. I suspect it's more likely to go down about its normal correlation versus the S&P 500, which is about 30% more, or 3 times more, so go down 30% if the S&P goes down 10%. And I'm just worried that next year, gold is not only probably beat the S&P 500, beat most commodities, but I'm really worried that it might even beat Bitcoin.
So, Mike, what is it correlated to? I know it's difficult to tell whether it's risk on or risk off, but can we say anything about it? Can we say anything, relative to where interest rates go, for example?
Well, the significance right now, as far as correlations, is the 100-day correlation between Bitcoin and the S&P 500 at 0.5 is the highest ever on the way up. So it's part of a risk asset. The thing I like to point out about interest rates is interest rates in this country are still, yields are high. Yields are going high. Interest rates are dropping. But I like to say is when you add $13 trillion to total market cap of the stock market, S&P 500, which is almost half of GDP, you can't expect yields and interest rates to go down much. That's what I'm worried about, is just a little reversion. Now we walk into this new administration with a very uncertain presidency and volatility on the stock market and broad commodities at really almost decade lows. So there's a lot of room for volatility to go higher, which usually means stocks going lower. The key thing, I think, now is Bitcoin is the #1 leading indicator on the planet, traded 24/7, and our new administration's put a lot behind it continuing to go higher, which means the risks are maybe it reached a pretty good resistance threshold around $100,000.
Mike, you're someone who's been in the markets for a long time, seen a lot of different cycles. You are our senior commodity strategist. Commodities that are actually tangible. And I still feel like when it comes to cryptocurrencies and Bitcoin, we're still trying to figure out exactly what it is. Do you think it's even silly that we continue to have these conversations about comparing something like Bitcoin to gold?
No, I don't. I think Bitcoin is digital gold. And the way I like to describe gold is very somewhat irresponsible to hold gold anymore without some Bitcoin in space. The problem is gold only has 3 other competitors in terms of precious metals: silver, platinum, and palladium. Bitcoin, as far as cryptocurrencies listed on CoinMarketCap.com, there's 2.5 million, which is I'm really worried about. Things like Dogecoin. Dogecoin recently got up to about $60 billion market cap. Now it's around $50 billion. And what is it? I think the future is going to look back at some of these valuations of some of these silly speculative digital assets as just silly.
Mike, if there were to be a Bitcoin strategic reserve for whatever reason it might fulfill, would that do something to the price of Bitcoin? Would it at least put a floor under it, or would there be any reason for being for Bitcoin more than there is now?
All right, for everybody who's listening on radio, Mike is kind of smiling, so I can't tell whether you think this whole idea of a digital reserve is a little crazy.
I'll giggle a little bit for the audio, but because we know the answer to that. Sure, if the U.S. government starts allocating, hoarding, and making a strategic Bitcoin reserve, it's just kind of a silly concept. First of all, the U.S. government does not need the prop of the dollar. The history of the dollar is it usually has problems of being too expensive, i.e. plasma accords. We have to usually have issues to push it down lower because it's the only reserve currency on the planet. We do have, many reasons to back it up. So I think it's just a silly concept that has kicked into the forefront a bit of this Faustian bargain with the new president and the cryptocurrency people where, yeah, we needed to go higher. Here's a way to do it. And we've heard this before. So I'm really concerned about that being a reason for people to buy more of it, yet it's quite expensive. Here I'd like to phrase it. Is it going to get better than 2024 for Bitcoin? People are looking forward to things like that. But the thing is, we've had the ETS, we've had the halving, we've had the record-setting stock market, and the most significant thing of all was our former antagonist switching over to a zealot for cryptos and now president. These are good reasons for it to go up, but now I think it's pretty much peaked.
Right, there's fundamentals and then there's momentum or euphoria. Hey, listen, we've got coming up right after you one last question, Mike. Alan Hibbard, precious metals and alternative money specialist at goldsilver.com. You can buy different bullion products on his platform. What's your number one question for him?
Where he thinks gold's going to go in 2025, and what might be the key risks? Because I think gold might be getting above 3,000, and I'm worried about what he thinks might be the key risks to pressure it lower.
Yeah, I think he's got some interesting, thinking that gold doesn't go below, doesn't go under 3,000. So that certainly is a great question. Really appreciate it, Mike. Thanks so much.
Well, we will go directly there right now. That is Mike McGlone. Thank you so much from Bloomberg Intelligence for giving us that introduction. And as Carol and me we've been saying, the banner year has some investors making the case that crypto could be an alternate safe haven to gold. So let's get to Alan Hibbard now, precious metals and alternative money specialist at goldsilver.com. Alan, I may as well start there with the questions that Mike has for you. Where does gold go and what are its key risks in 2025?
Yeah, thanks for having me. So I'm definitely expecting gold to have a great year in 2025, just like it did in 2024. I would not be surprised at all if it clears that $3,000 an ounce threshold, and it could be the last year to buy gold under $3,000 an ounce. So in terms of the risk, what would prevent it from doing that? There's really two things that I see. One is actually Bitcoin. If capital is attracted to Bitcoin instead of gold, gold might not creep that high. And the other risk factor, which really isn't a risk factor, it's actually peace. It's world peace. If all the wars and conflicts in the world settle down and our leaders are actually able to negotiate peace, capital might not flow into gold like it has been throughout the last couple of years. So those are the two risks that I see. It's really gold, is Bitcoin and peace.
All right, so then for the run-up that we've seen in 2024, Alan, is it because of the geopolitical concerns mostly, which we know gold has historically been a safe haven, but is that the reason why we've seen such the run-up in your view?
I think that's sort of the main underlying factor because it's that geopolitical uncertainty that causes so many other things. So we saw China buying a ton of gold. Not only is China the #1 producer of gold in the world, it's also the #1 importer of gold in the world, and that's very unusual. And investors around the world are also buying gold because of inflation, and the inflation is caused by all these countries who are fighting wars running their printing presses. So if it weren't for the wars, they wouldn't be running the printing presses so heavily. Investors wouldn't be worried about inflation, and they wouldn't be running to gold. So I think it really starts with all the geopolitical uncertainty. If we could all get along, we wouldn't have to buy gold. We could just live our lives.
Well, Alan, you heard Mike McGlone there. We were speaking a little bit about crypto, and he maintains that this idea of a strategic reserve is a Faustian bargain with the crypto people and the incoming president and the administration. Is that true in your view?
Well, I think Bitcoin is best thought of as superior money. And any time that two different monies come up against each other, the same thing happens every single time throughout history. Capital flows from the weak money into the strong money, and it's only a matter of time. So if you look at the United States and you want to discuss the strategic national Bitcoin reserve, is it a good idea? Is it a bad idea? Is it going to happen within the first 100 days, or is it not even going to happen in the next 4 years? All of that doesn't really matter. Capital is definitely going to flow from weak money, like the US dollar, into strong money, like Bitcoin. Well, it's just a matter of time.
I think you need to back that up a little bit. Why do you say Bitcoin is superior money? It's not even money.
No offense. I have yet to transact in Bitcoin. Yeah. And I think if you ask most people, unless you go to an emerging area, have yet to transact in Bitcoin.
Yeah, it's a great question. I'm glad you asked, and I could talk about it for hours, but I'll try to keep my answer short. There's really two ways to think about money. First is as a medium of exchange, which I would actually call a currency. So if you're going to buy a cup of coffee or groceries, you're going to use currency, and you want something that moves quickly, it has low transaction fees, and doesn't take a lot of energy to make that transaction. And the US dollar is great for that. The other reason you'd have money is as a store of value. And that basically means you acquire it, and then you hold it for 10 years or 20 years, and it just sits there, and you might even forget that you have it. But the whole point is for it to stay in one place and secure your value over time. That's gold, and it's Bitcoin. So that when I say money, I'm referring to gold or Bitcoin, that store of value functionality, whereas a currency like the US dollar, that's more of a medium of exchange. So by the way, don't hold your breath on being able to use Bitcoin to buy a cup of coffee. It's not going to happen. It shouldn't happen.
Sure.
Doesn't matter.
Why are you so convinced it's a store of value? Because the supply is finite? Does that make it a store of value necessarily?
It's partly because the supply is finite, but more importantly, it gets increasingly more difficult to make another Bitcoin. That's so critical. That happens naturally with gold. No one has to design it that way. But if there's 2 different ounces of gold sitting in the ground, and one's really easy to get to and one's really hard to get to, you're going to mine up the easy one. So later in the future, you're going to have to go after that hard one and spend more energy to get a unit of gold in the future. Bitcoin mimics that same property artificially using code so that it takes more and more and more energy to mine each subsequent Bitcoin. That's good news for anyone holding Bitcoin, because if you acquired it earlier, it didn't take you that much energy to get it. However, anyone who wants to acquire a Bitcoin in the future has to give up a lot of energy to get one.
I guess, Alan, I would ask that if there's a limited supply, I understand the dynamics of supply and demand, but if there's a limited supply, how can it be something that is used much more broadly? I understand the value of maybe blockchain in terms of transacting, but the individual Bitcoin as a way of transacting, if it's going to be limited in supply forever, how can it be something that's much more broadly in use in terms of how we look at the US dollar or other currencies?
Yeah, well, it sort of relates to my previous answer, which is that I wouldn't expect Bitcoin to be used in day-to-day transactions. Even if you develop something like the Lightning Network or other layer 2 solutions, they're called, I don't think it'll be that common to actually transact Bitcoin. It will be more common to transact US dollars, euros, yen, and so forth, whatever jurisdiction you're in.
Alan, didn't people say that about NFTs too? And they're not worth very much these days, are they?
I would not go anywhere near NFTs. No,
Yeah.
I only go near Bitcoin. I made a mistake going after a dozen other cryptos when I thought they had attractive use cases, but they're very hard to value and they have real idiosyncratic risks. So I even went so far as to go visit one of these cryptocurrencies in person. I looked at their code, I met the team, I did my due diligence, and I lost 99.9% of my value on that coin. And I have multiple stories like that. Most of these cryptocurrencies, they're not, well, some are designed to be scams. They're not all designed to be scams, but some of them turn out to be scams because they have so many idiosyncratic risks. You have to have execution on the part of the software team. You have to have marketing. You have to have adoption. You have to have functionality. You can't have problems. And you can't really have competitors that accomplish the same thing better than the way you accomplished it, or you're not going to attract capital. So,
but Alan, if you say Bitcoin is still in the process of price discovery, how do you discover a price when it's very unclear what the fundamentals are?
Yeah, I mean, right, its value is in that it's outside the establishment, and yet that lack of transparency raises so many questions.
Well, Bitcoin is transparent. I mean, it's a public blockchain, right? So you can go and look online and see where all the blockchains are sitting, what the history of them has been, in what block they were mined. You can see all of that. So transparency is actually pretty fantastic on Bitcoin. However, if I want to see how many dollars exist, I have to trust the Federal Reserve's data, and I don't. And it could be, outdated, and I don't know who's holding those dollars or where they are.
But I have the faith of the U.S. government, and I know some could debate that right now, but nonetheless, you have the faith of the U.S. government. Listen, this excitement, we know we could go on for probably another hour, means this is going to be a hot topic in 2025. Alan, thank you so much. Have a great new year. Alan Hibbard, precious metals and alternative money specialist over at goldsilver.com. Hey, folks, we're headed to a break. Coming up, another big year for Eli Lilly as it rides on the tailcoats of its GLP-1 success, how the CEO has potential plans to use the drug for something other than weight loss. That story when we come back on Bloomberg Markets.
investigation found some of the worst cases of harm were surfacing.
मुझे क्या पता कि भाला के चक्कर में मेरा ये बुरा हो जाएगा।
I never thought I would be vulnerable to a scam. This ruined me, and I didn't have any real good explanation for it.
Wildlife trafficking is almost always driven by greed.
Once you start focusing on money, you lose sight of what is best. That's where things go wrong.
I'm Professor Hannah Fry, mathematician and writer. In this series, I will meet the companies, people, and pioneers transforming the world.
It's like the Jetsons meets the Flintstones.
Whatever future you dream of, if it affects us, I will explore it. The future is coming.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Eli Lilly will begin studies to see if its blockbuster weight loss medicines are also effective at controlling addictive behaviors like alcohol abuse, smoking, and drug addiction, according to Chief Executive Officer Dave Ricks. Ricks spoke to David Rubenstein earlier this month. Here's a part of that conversation.
We've talked a lot about like cardiovascular health, diabetes, these conditions that ones think about with being overweight. But these medicines, we think, and we aim to prove, can be useful for other things we don't think about connected to weight. These are often called anti-hedonics, so they are reducing that desire cycle. So next year you'll see Lilly start large studies in alcohol abuse and nicotine use, even in drug abuse. We'll also begin studies in anti-inflammatory conditions, because you don't think of that with weight, but actually there is quite a strong signal in anti-inflammatory. And then beyond that, David, we need to make important medicines for the long haul. We're an old company. We plan to be here another 150 years plus. And I mentioned my excitement about brain health. I think that's really the next frontier to make a big difference.
So have you ever thought about eating a lot, gaining weight, and then going to one of your drugs so you can actually experience it, because you don't use it because you're so thin?
I'd like to avoid that, but it might happen, and I wouldn't hesitate to use them. Yeah.
Yesterday you announced a $15 billion stock buyback.
Yeah.
Many people criticize stock buybacks. They say you should use your money to invest in your products and so forth. How do you respond to that?
Yeah, I don't understand that argument, really. A stock buyback is a way to, essentially, by buying your own shares, you give the people who already own your shares the opportunity to sell at a higher price and get a return on their investment. I don't know why that's bad, but I would also point out in our current situation, we're spending almost more than anyone in the world on R&D already. We'll spend $11.5 billion this year on research and development. By the way, the country of Germany spends about $8.5 billion on all of its medical R&D. That's their NIH equivalent. So we're at the nation-state scale on R&D. We have announced investments of $23 billion in new capital in the United States for factories. We can't go faster. There's no more vendors to build plants faster than we're building right now. So returning some of the rewards that investors deserve for taking risk on the company seems like a reasonable thing to do.
All right, that's the CEO of Eli Lilly, Dave Ricks, talking with David Rubenstein, of course, host of our program here on Bloomberg. Be sure to check out the Bloomberg and also head to Bloomberg.com for more of that conversation. We want to stay with this space because it was no doubt one of the big themes of 2024, and actually a second year, because 2023 was also about these GLP-1 drugs. So let's get into it. And for more on this group of pharmaceuticals, what to watch out for in 2025, we are joined by Bloomberg News healthcare reporter Madison Muller, who is a must-read on all companies and developments in this space. Madison, good to have you here with us. I'm thinking about 2024, an explosive year. Bloomberg News wrote last week, 2024 was the year weight loss drugs took over. What was significant about 2024 after what was a kind of a busy year for this space also in 2023?
Yeah, 2024 was really the year that we saw the real world impacts of these drugs start to take shape. So it's not just talking about the clinical studies and how much percent weight loss and how great these drugs are, but we were actually seeing what happens when you put these out into the general population and the challenges with insurance coverage, the challenges with just affordability and access in general, supply shortages. We also saw, as I know we've talked about on the show, the rise of telehealth companies that are making selling cheaper copycat versions of the drugs and advertising them really widely on social media, and the sort of battle that's ensued between the drug companies and the compounding pharmacies that make these copycat drugs. So there was a lot that was almost surprising or unexpected that happened when these drugs really got out into the world. And I think 2024 was the year that started taking shape.
So where are we on supply demand, Madison? Can people access them now who need them or want them?
Yeah, so for most of 2024, both Novo Nordisk and Eli Lilly really struggled to get a handle on the supply of their drugs. We saw Wegovy and Zepbound and Mounjaro and Ozempic in and out of shortage throughout the year. So toward the end of the year, Eli Lilly actually did get a handle on their supply. And, according to the U.S. Food and Drug Administration, Zepbound and Mounjaro are not in shortage anymore. But there is some ongoing litigation there because a group of compounding pharmacies are suing the FDA over this, saying that the drugs still are in shortage. So the drama on the saga is kind of continuing there. Novo Nordisk's drugs are still in short supply as of yesterday and today when we last checked the U.S. FDA website. But that being said, all of the doses are listed as available, and so they've gotten a better handle on their supply as well. From talking to patients, some of the drugs are still hard to find just with different supply chain dynamics, so people are still seeking out these cheaper versions that are maybe more readily accessible through telehealth companies.
Madison, how are you thinking about 2025? The companies to watch, the executives to watch, maybe the upstarts to watch?
Yeah, 2025 is going to continue to be an exciting year. We have data from Eli Lilly's oral drug orforglipron that's coming in 2025. It's in late stage studies, and that's going to be a pretty big deal because we've talked about how people want an oral version of these drugs. The current medications are a weekly injection. For a lot of people, that's not super appealing, although for a lot of people it is because clearly there's no issue with demand for these products. But some people and in some, other markets, pills are preferred. And so we have a lot of companies that are trying to make oral versions of the drugs, including Lilly and Novo. We have Structure, Viking, some smaller companies, but Pfizer as well. And so Lilly has phase 3 data from their drug orforglipron that's coming out in 2025. And so we're going to see that. We're going to see some other companies, coming out with data from other trials. The competition's going to continue heating up. And so, insurance coverage is also a place to watch. We had the Biden administration propose a new rule that would allow Medicare, which is the government health insurance program for people over 65, to cover weight loss drugs. And so it will be up to the Trump administration in a few months whether to pass that or to block it. And so we could see Medicare begin to cover these drugs soon. And so that's an important development to watch as well, but sort of remains to be seen what will happen there.
That would be a big relief to a lot of people, but more broadly, how are hospitals, doctors, health insurers preparing for a potential raft of changes in regulation? When we see the incoming administration with incoming Trump nominating people like Marty Makary for FDA and Dave Weldon for CDC, these are people who've raised doubts about vaccines and other treatments, and of course RFK Jr., potentially the new HHS secretary.
Yeah, I think that there's still a lot of uncertainty with RFK Jr. in particular. He is someone, staying on the topic of weight loss drugs, has sort of come out against the pharmaceutical industry at large, but has also commented on Ozempic and other GLP-1 drugs, saying, his view is that America's food system should be fixed before we turn to pharmaceutical interventions. And so that's, I know, been an area of uncertainty. But again, until he's actually confirmed, then we don't know what will happen. We don't know exactly what the policies will be, but there definitely has been a bit of uncertainty with some of the picks, more so in particular than others. I know Dave Weldon is someone that has, said a lot about vaccines in the past. Marty Macri actually is viewed as more industry friendly. So it's a bit of a spectrum with the various picks and how much uncertainty and how friendly they are going to be to the sector. And so I think that that's something, again, that we're going to have to watch early in 2025 and sort of see what policies they begin talking about, whether these people are actually confirmed or not, and go from there.
Madison, man, we've had so many conversations with you, and it almost feels like, I joke with you that this is like the perfect drug that's going to kind of fix everything that ails all of us. Having said that, what's the thing, you're someone who critically looks at this space, what is the thing that could go wrong? I mean, have they been tested long enough? Do we have to worry about safety concerns longer term? Like, what is it?
I think one of the things that we're actually already seeing go wrong, and it might not be the fault of the drug makers or the actual drugs themselves, but the widespread availability of these drugs, especially through telehealth companies and these cheaper copycats that are being marketed and made by compounding pharmacies, they're getting into the hands of some people who shouldn't be using them, which generally is maybe not a safety issue for someone who just wants to take one to lose a couple of pounds, even though they aren't the population that these drugs are meant for. But I did a story a couple of weeks ago about people with eating disorders that are actually getting access to these drugs through telehealth companies that don't really have checks in place to make sure that the right people are getting them. And that's something that's a little concerning.
Came across that in prepping for this chat. Good stuff, as always. Madison, Happy New Year. Hey, by the way, David Rubenstein's interview with Eli Lilly CEO Dave Ricks, you can catch it on the David Rubenstein Show. Peer-to-peer conversations, January 8th, and that, Fonnie, is at 9 p.m. New York Eastern.
Well, I'll tell you, Carol, we're about to enter the final hour of trade of 2024. Stay with us. We're going to break it all down with Matt Stocky of Northwestern Mutual Wealth Management. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
In case you missed it, on Bloomberg The China Show.
What's been the sentiment? What's been the reaction to this U.S. election outcome on the ground?
They were pretty much ready for Donald Trump. There was a high expectation that he could return to the White House.
We have dealt with him before, and after quite a few years, China simply is better prepared, and China, psychologically speaking, is much more prepared in dealing with him again.
Probably are fully prepared for Trump to impose higher tariffs on China.
What's the tone as they were talking to really a global investment?
Right.
The openness of China, including the capital markets, Hong Kong being an international financial center, will be extremely important in channeling global investors.
Don't miss The China Show live every weekday.
You missed it on Bloomberg Open Interest.
11 years ago, I bought a Bitcoin on this set.
It was $800.
Yeah, $800, but I spent the Bitcoin on beer and groceries and gas and video games.
And
I wish I had kept it. I wish I would buy a Harley today if I had.
Yeah, but you probably wouldn't be a TV anchor, and you probably wouldn't still be on this
True.
set. And what a joy that is.
I'd be my feet in the sand and the beer in my hand.
Don't miss the next Open Interest.
To the minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
I think most investors are intoxicated by the opportunity in artificial intelligence. $160 billion being spent this year. That's just one data point. Another data point is a $3 trillion market cap for NVIDIA against $80 billion of sales on a trailing 12-month basis. Obviously, a lot of growth is expected for NVIDIA and for other businesses in the space, but That is yet to materialize, and it's impossible to know what the scale will be of an NVIDIA or other players in the artificial intelligence ecosystem. I think investors are just so focused on the opportunity set, on what it can be, and it's a self-fulfilling prophecy. If you bought NVIDIA a year ago or 2 years ago, you're pretty excited about where it is today, and you think that it could go to the moon. As a result, you don't really focus on the risks. You're sort of just too excited about the opportunity.
Top names in business are on Bloomberg.
The question is, if you lower taxes and use it to reduce the debt, the question is how stimulative those activities are, and that's where the Treasury Secretary appointee has got to figure it all out, because he's got to call the balls and strikes about how it all fits together. We got to realize that the impact we have if we don't get this debt back in line.
Nobody covers business like Bloomberg. Context changes everything.
Everybody, we are 1 hour away from the closing bell, getting ready to wrap up the trading year of 2024. It is Tuesday, December 31st. I'm Carol Massar, along with Vonnie Quinn. We are live on radio, TV, YouTube, and Bloomberg Originals. And I gotta say, S&P 500 down 4 days in a row. A bit of a whimper here.
Can you really call yourself a trader if you're not here for the final hour of trading in the year? I mean, come on, seriously. It's not just the amateurs out there, right?
I guess so. It's like, where are you? Where are you? But it does feel pretty anemic. We're going to get into the trade in just a moment. We're going to also, speaking of the trade, talk about the Treasury trade and the U.S. Treasury's $50 trillion deluge that will test strained dealer pipes. What pipes are we talking about? Stick around and you'll find out. And this is all happening just one day after the U.S. Treasury was tested by what's being called a major incident caused by Chinese hacking. So, yeah, all eyes, ears, nose, and toes on the U.S. Treasury right now.
Yeah, a little bit terrifying, actually. I mean, we're all, vulnerable to cyber attacks, but do you really want the Treasury Department to be that vulnerable?
No.
Yeah, it's an easy answer.
All right. Also, speaking of bumps in the road, how about electrification, the road to electrification, EV specifically? We're going to get into what 2024, we saw a lot of people moving more into hybrids, still growth in the EV market, but the rate of growth slowing down. So we've got a big question about what the road looks like in 2025.
Yeah, especially with Elon Musk right beside the incoming president. Does that make a difference? Does that make a difference to EV policy? I mean, so far, but look at Tesla. It's not exactly at its highs. Speaking of which, maybe we should speak to somebody about that.
Yeah, we're going to do that. We're going to check in with our own team here on the ground. And the winners and losers of 2024, just a hint, I was kind of surprised when the list was shared with us. Not many Max 7s in there.
No, and also, chunks of the year were dominated by, one particular stock, and then that stock would go away and have its moment in a corner with its honeypot, and then another stock would come out and dominate the year. It was a really fascinating year that way.
Absolutely. So we're going to talk about that and then look ahead to 2025. First up, though, let's get into this last trading day of 2024. For that, we bring back Bloomberg News Deputy Team Leader for U.S. Equities, Jess Benton, back in our studio. I don't know. Here we are, 58 minutes to go, and we wrap up the trade. It does feel like, I know the S&P 500, I said down 4 days in a row. It does feel like things have been mellowing out. Is it just a case of investors saying, good year, bullish year? If you were a bull in this market, you're pretty happy, and just taking a breather.
Right. So we've seen that in other really good years, like in 2021 was a stellar year too, and you saw that toward the end of the year as well. But of course, with the caveat, that year was in the December when Powell was signaling they were going to start hiking rates a couple months after that. But to your point, with the S&P 500 down 4 consecutive sessions, Ryan Dietrich over at Carson Research was kind of crunching some numbers.
Been so great on his calls the last couple of years.
He's very on point when it comes to the technical seasonality. So he was actually looking for the longest streaks here when you do see something like this happen. So 4 consecutive sessions, if the S&P does indeed close lower today, that would be the longest losing streak to end a year since 1966. And in that year, the longest streak was actually 5 sessions. But sort of the silver lining, because he always tries to find kind of the positives in that. If you look out kind of a 1 week, 1 month basis, usually you see the S&P 500 rebound after something like that happens.
The other thing that I found fascinating today was the data track note from Nick Colas.
Right.
Pointed out that it was really only 16 days that made the year, the 16 days that explained the index's entire 23.8% price return gain. It's been a sort of a phenomenally volatile year, Jess. Can we assume that next year will be as volatile?
Well, something I like to look at is the cost of hedging against the SPY. So obviously that's the ETF that tracks the S&P 500, and we saw it spike and get a little bit more expensive, especially after this last Federal Reserve meeting, but it's actually come down significantly since then. So that really just tells you that people aren't really jumping in to hedge more as far as a decline, specifically if you're looking over the next 30 days. Obviously, that's not going to encompass the next Federal Reserve meeting just yet. I think it's towards the end of January, so you'll start to get that in the volatility in the VIX data for the next 30 days. But of course, obviously, we'll have the jobs report on January 10th, and then Carol was mentioning earlier, obviously, we'll have JP Morgan earnings on January 15th. So if you're looking at over the next 30 days, what we would have seen maybe a couple of months, or a couple of weeks ago, rather, post-Fed, you're not seeing the volatility spike up or even the cost of hedging pick up as it would have had just in the preceding and the subsequent days after that Fed decision.
I'm so curious if that happens, though, in the first few days of January. If you think about January, you've got a Fed meeting, you've got an inauguration, you've got earnings getting underway. I mean, there's a lot of things to come at investors, and you do wonder whether or not what the VIX is right now, about 17 and change here. But you do wonder if there's an uptick and we just start to see some more swings.
Some of the swings, too, because this wouldn't be the only factor for today, because obviously we have the rebalancing annually. We just had a triple witching a couple of weeks ago as well. But Scott Gamma was talking about how if you're looking at the JP Morgan collar trade, I had mentioned this the other day, but that's JP Morgan's hedged equity funds, where basically they have short positions in the S&P 500. And so the call options to remove about 45,000 of the contracts stuck just above 6,000. You're seeing when you're thinking about Gamma, whether it's short or long, how people have to position on that. So this also expires today at the closing bell. So you might see a little bit of exacerbated swings. That wouldn't be the only reason for today's decline, but that's something else that option traders are watching.
Have we any idea of figuring out how the retail trade this year did?
So not good. So this was actually the second worst in about the last decade. And usually you can use those as contrarian indicators if you're thinking about how are hedge funds performing, institutions are performing, if you're thinking more of the smart money versus retail traders. So usually when you see retail traders trying to chase a particular trade, that's when you get concerned about kind of frothiness in the market. But I actually was looking at Goldman Sachs' most shorted basket today, as well as Goldman Sachs' non-profitable tech, because those are more of the frothier corners of the market. They're both well underperforming the market. They're both down more than 1% today, relative to the S&P 500 being down about 0.5%, 0.6%. So that shows you that people aren't jumping in to really short cover at the moment.
People are kind of done. I feel like 30 seconds left here, Jess. So as we get ready to wrap up this final trading day of 2024, what are you going to be watching at the close?
So actually, the SOX just had a death cross. It's when the 50-day crosses below its 200-day moving average. It's the first time that's happened.
Not good, right?
Not good. You will typically, people would like to say that, but it's a lagging indicator. So that actually could show you that even the underperformance, like with, say, chip stocks, like NVIDIA picking up, that might mean that we're going to see better performance for chip stocks, even though people like to use it as a doom and gloom signal.
There you go. NVIDIA, the worst performer in the stocks right now, down 1.7%. I wonder if there'll be any little bit of buying at all at the close. Right, never mind. Just putting it out there. Jess, thank you so much. That is Jess Menton joining us, and we'll be speaking to her again a little bit later on. With more context on the markets now, we have Matt Stuckey joining us. He's Chief Portfolio Manager of Equities with Northwestern Mutual Wealth Management. So, Matt, you heard Jess there and her explanation of everything that's going on. Was there anything that you particularly agreed with or disagreed with?
You know, I think just to add a little bit to Jess's comments, I think what we're seeing here into year end is a little bit of the froth coming out of the market. If you kind of looked into the sentiment in the near term across institutions as well as consumers, there has been a buildup in enthusiasm for equities. And that is a shorter term contrarian indicator. And just as an example, if you look at the Conference Board's question to consumers, where do you expect stock prices to be a year from now? You know, over 50% of them said that they would be higher than where they are today. That's a 40-year high. And if you look at the Bank of America institutional survey for how they're positioning, over 40% of fund managers were overweight equities versus cash, near the high point that we've seen over the last 5 years. And so that's contributed to a very strong flow environment for U.S. equities. That can continue in the shorter term, but typically that's a contrarian indicator. And I think some of this weakness into year end is just some of the froth coming out of the market.
All right. So what's the focal point for you, Matt, when you look at the markets? I'm just thinking about that Fed meeting on January 31st. You've got economic news. You've got JP Morgan kicking off earnings on January 15th. You've got the inauguration. What's key for you, especially when I think about, you know, what ultimately supports equities and continued gains?
Yeah, I think the path of inflation in 2025 is what we're going to watch the closest. And the reason I bring that up is, the path of interest rates and the level of interest rates has really dictated winners and losers in the economy as well as in the markets. And what I mean by that is you look at kind of higher for longer, who that helps and who that hurts. It's really how they're affected by interest rates. And so larger companies that have termed out debt haven't really seen interest costs increase at all since the Fed started to hike rates. And that's not the case for smaller companies that are more tied to floating rate debt. And you can also use the same analogy to consumers. Wealthier consumers that own their own homes or have locked-in mortgages around 3% in excess savings are earning higher interest rates on those savings. That's not the case for lower-income Americans that are more affected by inflation and are feeling the pinch of higher credit card rates as well as higher automobile rates. And so if inflationary trends were to kind of resume their downward trend that we saw in the front half and the middle parts of 2024 and into 2025, we think that gives the Fed more room to start cutting rates, which hopefully allows the economy to broaden back out and broader market participation to take place into next year. We can see that happen. We also can see a higher for longer kind of sticky inflation dynamic also happen. And so if you're an investor, the question is, how do you position for kind of some of this uncertainty at kind of both ends of the spectrum? And I think the good news is that if you look at the fixed income markets today, we're seeing near 20-year highs in real interest rates. And so that is something that we think investors can do a lot of good by positioning themselves towards that asset class a little bit more than maybe their benchmark levels would dictate. And then furthermore, if there is this broadening out that takes place, if disinflationary trends resume as we kind of look forward to the next calendar year, we think some of the smaller cap, mid-cap areas of U.S. equities are pretty attractive here for a couple of reasons. First and foremost, they're priced more attractively than U.S. large caps. And secondly, if you look at kind of where earnings sit for these asset classes relative to kind of the high bar that were put in place a couple of years ago, we think the path forward towards a rebound in earnings is a little bit easier than kind of the continued march forward that we've seen for earnings estimates in large caps, which are really reluctant on higher profit margins.
Does any of this depend on the Fed cutting rates more than at least once next year?
I think it does require the Fed to continue on their easing path, more than just one or two cuts. And that's why the inflationary dynamics are so critical as we think about the path forward in 2025. The back and forth in inflation dynamics have kind of caught on investors offsides all year. We started 2024 with 6 to 7 cuts priced into the forward curve, and we're ending this year with just 1 or 2 cuts priced into the forward curve. And so the path forward for inflation, I think, is the critical place to watch in terms of where market leadership is headed.
I just want to go back to small caps. I mean, man, I feel like people have been calling for that small cap outperformance or mid cap outperformance. And I'm just looking on my Bloomberg, just comparing, the past few years of the S&P 500 versus the Russell 2000. It's been really hard. And I understand the S&P 500 influenced by some of those big mega cap tech names, but nonetheless hard to kind of beat that outperformance.
I think that's right. And I think there's a couple of things going on there. One is kind of how interest rates impact the earnings and fundamentals of smaller companies relative to larger companies. But the other is what you touch on there, just the phenomenal growth levels we see in the Mag 7. If you look at just the top 10 of the S&P 500 today, it's roughly 40% of the index. And just 5 years ago, it was roughly 23% of the index. And so these higher cap-weighted names are having even greater impact in terms of the performance of the S&P 500. And fundamentally, that's where the growth has been as well. And so if you look at the last couple of years, it certainly makes fundamental sense and monetary sense why U.S. large caps have led. The question is if you look forward to next calendar year, does that narrow? I think for the first time, as you're sitting kind of looking at kind of what's priced in and what's expected, the gap between the Mag 7 earnings growth and the rest of the market is starting to look kind of more and more compressed versus where we were as we started 2024 and where we were when we started 2023. And so, whether that comes to fruition or not, I think will dictate whether or not this U.S. large cap outperformance can continue into next year.
We shall see. And whether or not, once again, we have another year where fundamentally those big tech names or big mega caps really kind of lead the way. Good to get your thoughts. Matt Stuckey, thank you so much. Happy New Year. He is Chief Portfolio Manager of Equities over at Northwestern Mutual Wealth Management, joining Vonnie and me on this Tuesday, December 31st. Coming up, everybody, we're going to get into what is one of the most read stories on the Bloomberg Bloomberg happened yesterday. We're talking about what's going on at the U.S. Treasury Department, saying hackers backed by China gained access to their systems earlier this month. It begs so many questions, Vani, in terms of security that's going on. You think the government's secure, but it's just a reminder that this is one of the big stresses of really our economy.
Well, and it's the manpower too, right? Because who goes to work for these hackers? It's people who used to work in cybersecurity or vice versa. And so it's a difficult problem to solve.
Yeah, we're going to get into that. That story is coming your way. As we said, it's among the most read stories on the Bloomberg on this Tuesday. You are listening and watching a special edition of Bloomberg Markets, and this is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
We're scaling up at incredible pace.
This region is growing so rapidly. The opportunity is really huge.
Only on Bloomberg. Context changes everything.
If you look at Reels, Instagram and Facebook Reels, both immensely popular, both growing a lot. Those are really working not because the short form video format is special and new. It's actually been around for a long time. You remember Vine and the early days of short form video. It's because of GPUs. It's because of large models. It's because of advancements in recommendation systems. ByteDance is one of the really great companies at this. We also have made an immense investment in harnessing the power of modern models, large data sets, and modern hardware, NVIDIA's hardware and our own hardware, to build recommendations that make the products better and more engaging. Our advertising system is built on modern AI recommendation technology. So I always think it's interesting when people remark that like AI just arrived. It's actually powering already today a huge amount of the engagement and quality of our products.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Welcome back to Bloomberg Markets, a special edition this December 31st. I'm Vani Quinn along with Carol Masser, and we want to talk next about the Treasury and some security breaches that have happened that are a little concerning. America's debt levels poised to balloon beyond already record levels, as we know, in the year ahead, leading to a decreasing number of primary dealers in the U.S. Treasury market. The decline of primary dealers and the rise of electronic trading have then led to concerns about the potential for just such breakdowns in the Treasury market. Joining us now to discuss is Bloomberg's Michael McKenzie. Michael, several concerning headlines over the last few days. How can we be sure that the Treasury, if it's not now, becomes impenetrable? It needs to be, right?
Absolutely. And I think the U.S., whether it's exchanges, any kind of marketplace, they spend a lot of time and a lot of effort making sure they can be protected from hacking. I know covering equities more than 10, 15 years ago, all the major exchanges were well on top of this. It was the only area the exchanges actually talked to each other, actually agreed to work together. Normally they're in a cutthroat business of trying to grab IPOs. So I'm sure the Treasury's on it. And, again, it's just something that, I think every company has to do this.
All right. Are they also on it, Michael? I want to get to the story that you did with Liz Kaplan-McCormick and Alex Harris about the pipeline, the primary dealers. And I feel like this gets into the wonkiness of following the markets, right? Explain, first of all, the role of primary dealers.
Primary dealer system was created in 1960 by the New York Fed. The New York Fed selects the primary dealers, and their job is to interact with the New York Fed markets desk. So when the New York Fed does repo and all kinds of money market type operations on a daily basis, they're interacting with the primary dealers. Primary dealers then turn around and say, okay, if you want to buy and sell treasuries, we're the registered market maker who does that for you. So you have a lot of big asset managers, hedge funds, all types of people who want to come in here and buy and sell treasuries. They normally go through the primary dealer market for the bulk of what they do.
And what your story gets into that there's not as many as there used to. So what are the concerns here? We've only got about a couple of minutes or so, but I want to get to the point because it's an important story. It's the kind of story that Bloomberg does so well, that you do so well in explaining why we should care.
Yeah, no, we should care because the real problem here is, yes, the number of primary dealers has shrunk, but a lot of that's due to consolidation, or we've had so many mergers since the heyday of the 1980s. What's really the problem here is that the amount of U.S. Treasury debt outstanding has just rocketed. It's gone up something like, I think, 15 billion in the last 10 years. And so at the moment, the Treasury market is about 29 trillion. They think it could get to 50 trillion within the next 10 years if the president's pace of spending continues. So this really is a wake-up call to people in Washington. You've got to get serious about spending. You've got to find new sources of revenues, i.e. taxes, to kind of settle the system down because the system is showing signs of stress. Dealers can't really be as active as they used to be. That's partly because of the post-financial crisis regulation. So in the story, we sort of quote Jamie Dimon saying, look, we have $1 trillion of cash we could put to use, but we can't because the regulators say we can't do that. So there's a real kind of tension here. And the genesis for this story was that, myself and Liz and Alex, we've been to a couple of conferences this year. And this is the number one issue, is that the debt keeps going up. The primary dealer system is instructed to work on behalf of the Treasury to sell debt smoothly, make sure there are no sort of blow-ups in auctions, but they're coming under a lot more pressure. And if the debt continues to rise, this is a problem. And finally, if we look at the 10-year Treasury yield, when the Fed began cutting rates in mid-September, that was yielding around 360. Today, it's closing out this year around 460. So it's risen a percentage point pretty much. Now, if you go into the wonkiness of the bond market, about 3/4 of that rise in the 10-year yield is due to a higher term premium. And that term premium is what investors are demanding in terms of extra yield to take down U.S. debt. And that's really a worrying sign.
All right. So just another thing to think about for 2025, where I feel like a lot of things are going to come at us. Michael, it's an incredible deep dive by you guys, and I highly recommend everybody check it out on Bloomberg.com and on the Bloomberg. Happy New Year to our Michael.
Happy New Year. Cheers.
Yeah, be well. Bloomberg's Michael McKenzie, who keeps a watch on the rates market and certainly the Treasury trade. Hey, we're going to stay with the Treasury. Vonnie, you kicked it off. The story that really caught our attention yesterday, the U.S. Treasury Department hacked by a Chinese state-sponsored actor through a third-party software service provider. It's how the world works, and yet you expect it to be safe and secure. Treasury describing the situation as a major cybersecurity incident. For more on this and some thoughts, we are joined by Wendy Thomas, the CEO of SecureWorks, a cybersecurity firm. Wendy, your thoughts when you saw and heard this story?
Well, there's a few recurring themes that we've certainly talked about before. A vulnerability in a third-party technology that enabled these hackers to steal an authentication key, bypass security measures, and access Treasury workstations and documents. And the theme of, while no one's claimed credit for this attack, a high-profile Chinese state-sponsored cyber activity. So I think these are recurring themes, but certainly this is a major incident as we cap off this year.
How do we know it's a Chinese state-sponsored actor? And if we do know that, if we have the tools to tell what kind of a hack it is, why can't we protect against that kind of hack?
It is a good question. So the Treasury has confirmed that they have identified a number of indicators that do point to a China state-sponsored APT, or Advanced Persistent Threat Actor. The ways that you protect against this, whether you're a government or a business, remain the same, right? You have to be able to prevent everything that you can, but because we are so incredibly interconnected via software, via supply chain vendors that are a key part of doing business each day, we have to prevent as much as we can, but frankly be ready to detect and respond quickly. If you look at the date at which Beyond Trust first detected some anomalous activity, it was December 2nd. And we're sitting here on December 31st. The patches were issued sort of mid-month in December, added to CISA's known exploited vulnerabilities catalog mid-December. It does take speed in order to, one, identify that something is hitting, and two, be able to protect. And that's a holistic approach of prevent, detect, and respond.
Is there an argument that the public should have known sooner? I mean, when does the public get to know about such things?
Well, there's been increasing work, especially by the U.S. government over the last